Hello, I'm Olivia Harris and this is Kalkine's Daily Trending News. Eagers Automotive has lost its exclusive rights to sell BYD vehicles in Australia under a new 5-year agreement. While Eagers retains its existing retail and service network across key regions, BYD can now appoint additional dealers outside the Eagers network. The shift follows BYD's decision to take control of its vehicle importation and distribution in Australia. BYD, now outselling Tesla locally, has seen sales more than double year-on-year, reaching 11,974 units in the first 4 months of 2025. Despite the change, Eagers is set to gain a $38 million benefit from the BYD joint venture, even as its annual profit fell 25% to $222.9 million. Eagers, which controls 12% of Australia's new car market and sells multiple major brands, currently sells BYD at around 50 locations. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris.
Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Citi has upgraded Macquarie Group to a neutral rating, citing its balanced strategy amid economic uncertainty. Analyst Thomas Strong said Macquarie's cautious portfolio positioning, highlighted by the sale of its North American and European public markets business, should protect it from significant earnings downgrades. While deal and advisory revenue may face short-term risks, Citi believes the bank's balance sheet strength and conservative guidance offer a buffer. Strong also sees potential in Macquarie's ability to boost returns through reinvestment and strategic exits. The bank recently reported a $3.7 billion half-year profit, in line with expectations. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Genesis Minerals, led by Raleigh Finlayson, has acquired Focus Minerals' Laverton gold project for $250 million in cash, expanding its dominance in Western Australia's gold-rich Leonora region. The Laverton site, containing 3.9 million ounces of gold, will feed ore into Genesis' nearby 3 million tonne per year processing mill. This deal follows Finlayson's 2023 $628 million acquisition of the Gwalia mine and comes as record gold prices, nearing $5,000 an ounce, fuel M&A across the sector. Focus Minerals, backed by Chinese investors, will retain its Coolgardie project and use sale proceeds to develop other assets. Gold's surge, driven by global trade tensions and central banks diversifying from the US dollar, has triggered major takeovers, including Northern Star's $6 billion De Grey deal. Analysts called the Laverton acquisition strategically timed and attractively priced at $63 per ounce. Genesis shares rose 1% on the news, valuing the company at $5 billion. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Gold rose to $3,382.82 an ounce on Thursday after sliding 2% the previous day, as Federal Reserve Chair Jerome Powell signaled a cautious stance on interest rate cuts. While the Fed held rates steady, Powell said it's too early to adjust policy amid uncertainty caused by US President Donald Trump's trade agenda, which he warned could fuel inflation and slow growth. The comments lifted the US dollar, making gold more expensive globally. Despite this, traders still expect up to 3 rate cuts in 2025, with a move likely by July. Gold, which doesn't yield interest, tends to benefit from lower rates and market volatility. That's the latest from Kalkine's Daily Trending News.
Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
Hello, I'm Rachel Jones for Kalkine Media. Welcome to another edition of Executive Corner Expert Talks. Today I'm speaking with QX Resources Managing Director Steve Promnitz. Welcome to the show, Steve.
Thank you very much. Great to be here.
Great to have you with us today. So firstly, Steve, can you tell our viewers about QX Resources and your recent developments?
So QX Resources is focused on the battery mineral space, primarily lithium, both hard rock and brines. We have an important investment in an unlisted nickel company and gold and copper assets in Queensland. But our key focus is on the whole battery mineral space.
Now, recently you had an exciting update on the Liberty Lithium Brine project. What can you tell us about that and what does that mean for the company?
So the Liberty Lithium project we moved into in 2023 in the United States. We're focusing on the US because regardless of what happens in the industry, they're very keen to get domestic supply. It's a large project. We've now drilled 2 holes. We're waiting for those results. But in the second hole that we released, we've encountered numerous aquifers through a large basin, and the sediments or the geology looks very similar to the nearby project across the border of Albemarle at Silver Peak. So it's the right sort of setting if you're looking for things, and when we have results, we'll be able to back that up.
Definitely seems like an exciting project. And Steve, what future projects and expansions are on the horizon for QX this year?
So if the results go the way we expect, then we'll drill further holes to establish a result indicatively by mid-year. So we want to have a resource there, and with that, we would then attract more US investors and probably participants in the supply chain. We also, as mentioned, have hard rock assets in Western Australia, in the Pilbara. There's one called Turner River that we're aiming to do further work on. And we also need to advance our significant investment, 40% in an unlisted nickel company. So there's a few things on, but certainly manageable.
And how are you placed for the broader energy transition with the global focus on cleaner energy sources?
I've been in this space now around 9 years, and the whole focus has been on this energy transition back when it really wasn't a thing. With QX Resources, we've been very much focused on getting an asset in the US because the US is putting money towards the whole sector, particularly electric vehicles and making batteries. And so they're very keen to get product from that sector. There's always lumps and bumps in pricing, and sometimes people say, oh, maybe it's over. But the key driver globally is still towards electric vehicles and also towards energy storage for renewables. And the key component of things is lithium. So that's why we've been focused on it. It's still an exciting space. I still think it's got another 2 or 3 decades to run. So while things are a little soft, this is actually a good time to be looking at your own portfolios so that we can benefit from that whole energy transition as it plays out globally.
Absolutely. And finally, how are you placed financially for your future goals and your exploration goals?
So at the end of December, we announced we've got $2 million at bank, and that will certainly fund this this current round of exploration projects. And then if the results play out the way we expect, then I would bring in further US investors, and as mentioned, probably participants in the supply chain to ensure that we can keep moving the projects forward.
Fantastic. It's definitely an exciting space to be in. Thank you so much for your time today, Steve.
No, thank you. I would just reiterate there's been some negativity around the whole space, but this energy transition is a global phenomenon and we need that. And so have a look at this, watch this space. Thank you so much for the opportunity, QX Resources.
Absolutely. I think people can read into what is happening and find that it is absolutely a fantastic future going to be there for sure. Thank you so much, Steve. That was QX Resources Managing Director Steve Promnitz. And if you missed any part of that chat, you can catch the full interview on our YouTube channel at Kalkine Media. So make sure to subscribe. I'm Rachel Jones, reminding you to stay apprised and invest wise.
Hello, I'm Olivia Harris and this is Kalkine's Daily Trending News. Harris Farm Market's annual losses surged from $6.2 million to $22 million in FY24, triggered by disruptions from a new software system that impacted stock and payments operations. Despite the financial blow, the company paid a $10 million dividend to the Harris family. Sales grew 5.6% to $788 million, but the group breached banking covenants, prompting lenders to grant a waiver. It has since refinanced, boosting debt facilities from $230 million to $290 million, with an extra $100 million earmarked for expansion. Co-CEO Angus Harris said operations have since stabilized and the business remains focused on growth. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris.
Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Commonwealth Bank has provided a $100 million funding lifeline to Healthscope as the private hospital operator collapses into receivership. Westpac will also supply working capital to maintain operations across its 38 hospitals while receivers, likely McGrath Nicol, manage the company's sale. The collapse follows Brookfield's decision to hand over control to lenders, with $1.6 billion in debt now overseen by a syndicate including hedge funds Polis Capital and Canyon Partners, who favor a rapid asset sale. Local banks, controlling about 15% of the debt, prefer a solution that avoids disruption to hospitals and their 19,000 staff. Governments are under pressure to ensure continuity of care amid strained public health systems. The Australian Nursing and Midwifery Federation, with 9,000 members at Healthscope, seeks a voice in the ownership transition. Several private health operators, including Ramsay and Bupa, have shown interest in acquiring assets from the collapsed group. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Olivia Harris and this is Kalkine's Daily Trending News. HMC Capital is in advanced discussions with hospital operators to take control of the 11 Healthscope hospitals it owns through its Healthco Healthcare and Wellness REIT and unlisted Healthcare and Life Sciences Fund. The move comes amid concerns that Healthscope, Australia's second largest private hospital operator, could soon enter receivership or administration. HMC revealed at the Macquarie Australia conference that Healthscope had only partly paid rent for March and April, activating potential termination and cross-default rights under lease agreements. While HMC has formed a consortium to explore broader acquisition opportunities, it has not confirmed whether it intends to take over all 38 Healthscope hospitals or simply re-tenant the 11 it controls. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris. Hello, I'm Olivia Harris and this is Kalkine's Daily Trending News. Trump's threat to impose a 25% tariff on Apple and Samsung could push iPhone prices above $5,000, with experts warning the cost will fall on consumers. Apple, which manufactures most iPhones in China, would face major challenges relocating production to the US due to labor and supply chain constraints. Analysts argue the move is symbolic, driven by protectionist goals, but lacks feasibility. Apple shares fell 3% on the news. While Apple may absorb the impact through pricing power, Samsung could be more affected. Ultimately, the proposed tariffs are seen as a tax on Americans rather than a meaningful boost to US manufacturing. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. JB Hi-Fi reported a slowdown in sales growth for the March quarter, with Australian same-store sales rising 6%, down from 7.1% growth in January. Year-to-date sales are up 6.9%. CEO Terry Smart described the environment as challenging and competitive, warning of tougher comparisons following strong previous periods. JB Hi-Fi New Zealand outperformed with 7.5% same-store growth, while the Good Guys rose 4.1% and E&S just 0.9%. Analysts said results met expectations overall, though concerns remain over sustaining share price momentum. JB Hi-Fi shares dropped 4.5%. Temple and Webster posted 18% sales growth in the second half, below analyst expectations, though it remains on track to meet full-year margin guidance. That's the latest from Kalkine's Daily Trending News. I'm Melissa Malley.
Hello, I'm Rachel, and today I'm speaking with Tom Piggott, Executive Chairman of ASX-listed Kalkine Resources. We'll hear about the company's notable achievements and plans for the flagship asset, Mount Kalkine project, where exploration work is currently progressing at the high-quality gold and copper project. Welcome, Tom. Great to have you with us today.
Thank you for having me.
Now, Tom, would you like to go ahead and start your presentation?
Yeah, sure. If you want to bring up the first slide. This is a snapshot, if you like. We've currently got 50 million market cap or thereabouts. We've got some significant support from our major shareholders who hold a significant amount of the shares on issue, and we have enjoyed that support for some time now. If you want to move to the next slide. The location of the project is extremely good in the sense that it's 100 k's to the south of the port of Gladstone, 100 k's to the west of the port of Bundaberg. We have 9 mining leases surrounded by 2 EPMs. The mining leases were recently renewed, as was one of the EPMs. The more major EPM was renewed recently for another 5 years. We've got good access to infrastructure and also to close or nearby towns. The town of Monto is about 35 minutes away, and the town of Kalpower is within our EPM area. We're able to house our exploration crew and our drilling crew within the town of Kalpower, so it's extremely close for them to finish work and go back and forth if they need to, which is very, very handy. If you go to the next slide. It's probably no secret that we've been focused on copper predominantly, but the interesting part about the project is that it does have a significant amount of gold and silver that attaches to it as well. We've got a 12-month exploration plan that's coming up as a result of some recent work by some consultants, which I'll go into shortly. But suffice to say that we've got a lot of work to do to bring out the opportunity that is Mount Kalkine. It's certainly much larger than the 5.5 million tonnes that we inherited some time ago. And the drilling that we've done to date certainly has improved that position, and our geologists are working on including the updated drilling data to complete a resource estimate in the coming weeks. If you go to the next slide. This is really about where the drilling, both historically and throughout our program, has been concentrated. And it's a little bit of an outline as to the future targeting as well. So the best way to describe this is that the red outline is quite a large porphyry copper system, and the green outline to the top left that has a lot of those yellow and green and blue dots in it is where the most amount of the drilling on the project has occurred. The drilling traditionally, or historically I should say, had been going from the west to the east. So from, if you like, the left side of that page to the right. We went the opposite way and went in from the east to the west and managed to open up the knowledge of that Mount Kalkine breccia zone, both at depth but along strike. So we've lengthened the known mineralisation within that area to the north and also to the southwest. we had a view that there was some more going on to the southwest, which is that other green outline that you can see, and I'll go into that a little bit more shortly. Down to the sort of southern area, there's that yellow outline. We refer to that as the lithocap area, which is a new and exciting exploration ground that we're going to be getting into over the course of the next 12 months. If you go to the next slide, this is a bit of an outline of what how the resource area, if you like, sits within that Mount Coninda breccia zone. So it's plunging, if you like, from the east to the west, and that hole that you can see on that left diagram coming all the way out the bottom there was one of our longest holes. And that was, I think, hole 11. Was hole 9. It was about 877 metres long. For the first sort of 400, it got just over 1% copper equivalent. But if you aggregated that entire hole, you'd still get 0.5% copper equivalent. So there's mineralisation going down a fair way. And traditionally, these breccia pipes sit above a porphyry copper system. So that's sort of where we're aiming to extend the known mineralisation within that breccia zone and find other breccia zones that are likely to be, or hopefully are, larger. And I'll get into that when I talk to the induced polarisation geophysical survey that we've completed. So if you go to the next slide, this is the start, if you like, of how that induced polarisation survey occurred. That square area is the mining lease zone. So there's 9 mining leases within the Mount Coninda project. The red stars or dots, if you like, are where we've concentrated most of our drilling. The dotted area that's got the dark blue line around it is what we refer to as the larger breccia zone at Mount Coninda. The lines going across the page are 5 kilometres long and spaced 400 metres apart. And they've identified in sort of thicker pink areas there, which will make more sense in the next slide. They've identified anomalies that coincide with soil geochemistry. So what you want to see is an IP survey lighting up a nice chargeability target, which coincides with some soils that have gold or copper or silver in them, and then you can further evidence that by comparing that signature to where you've been drilling to date. And if you're getting good results like we have, hundreds of metres of copper in most of our holes, then you can correlate that with other targets, if you like, across the project area. So if you move to the next slide, that's a depth slice. Along the top is basically the surface, and it's seeing down to about 1,500 metres below surface. You can see to the right there a big sort of red blob, and above that a few black lines. Those black lines are drill holes that are historical, and unfortunately, although they tried, they didn't get deep enough to hit that chargeability anomaly in the past. So we've reprocessed and completed more recently an updated IP survey that can see a little bit further down into the ground, and we intend to chase those larger IP targets. Move to the next one. That's an example of one of those circular features. So that's about 800 metres to the southwest. That dotted white line above that pink sort of circular feature is what we'll refer to as a blind untested breccia pipe. Now, these things traditionally sit above the porphyry system, and if you have that coinciding with the geochemical information, which then looks the same as where you've been looking and been drilling and getting all of these significant results, then there's a better chance of us finding more copper, gold and silver within that breccia pipe that is very, very similar to the Mount Coninda breccia zone that we've been looking at today. And the beauty about this one is that it's looking significantly larger than the one that we had been targeting about 800 metres away. So very positive stuff for Coninda to move forward for the next 12 months in relation to that, but also many other target areas that are looking to show a significant amount of promise and increase potentially the resource size quite considerably. So if we move to the next one. That is a sort of a slide which that breccia pipe that I referred to. But that question mark below it was that lithocap area, which was the yellow outline that I referred to earlier in the presentation. This lithocap needs a bit more work, ground-based work, for us to start working out how we can best vector a drill into it. But again, if this is occurring in a nice cluster, then we will get some very interesting results. And as I said, the goal is to significantly increase the tonnage, which we believe we already have with our drilling today. So move to the next one. That's just simply a different view of those lines that were going across the page, 400 metres spaced that I referred to earlier. This is just looking at them from, if you like, a plan view, an elevator view looking down. That's looking deep into the earth, and you can see that there's many red blobs within that haven't been drill tested historically, and we certainly are looking to improve that position from our surface exploration, which will assist us in vectoring our holes directly into those anomalies and trying to prove up those targets. Moving to the next slide. As I said, what you want to see is a good correlation between where you're looking and where you want to drill and the surface geochemistry and the IP. So this is the surface geochemistry that outlines the copper in the soils. So pink is good, and that's certainly sitting above a nice area of good copper mineralisation that, as I said, coincides well with the material that we've already drilled in the other zones. So when we can mimic that image to an area that we already know what's in the ground because we've drilled it, then it certainly gives us an elevated level of confidence that we're going to hit some good stuff into the new target. If you move to the next one, it's the same sort of thing but showing the relationship to gold. So you want gold, copper, and we have silver all coinciding quite well with the induced polarisation survey, which then, as I said, we compare to the area that we've already drilled to date. Moving to the next one. So these are our targets that we've sort of outlined, not necessarily in order, but they're certainly separate in nature. So 1 and 2 is where we're going to be concentrating most of our effort in the short term. 3 will get some work on that, which is that yellow one. So that's 5 there, sorry, but it's the yellow one which will get more attention in the next 12 months. 3 we do understand quite well, and 4 will need a little bit more work to understand the relationship with what's called that's a skarn area and how that copper mineralisation might be best liberated from there with future work. That 6 on the right-hand side, the sort of elongated one, is what we're calling the barramoon structure. That was a gold target. It does have a gold occurrence on the far right-hand side of it, and it hasn't been drill tested at all, and certainly hasn't been explored effectively. But what we can say is there's gold in rock chips from there, some significant evidence that could be an interesting gold target, and it's something that we will work on from a ground-based perspective concurrently with the drill program going forward. Moving to the next one. That's an idea of that hole that I was referring to earlier, hole 9. We got a significant amount of copper mineralisation within that, but the important part is we wanted to see the width, so we went across it with hole 14. And as you can see there, 182 metres at just under 1% copper equivalent. So it certainly had some width, and we then pressed it further to the north and further to the south, and we understand a lot more about what's going on at depth and have encountered some interesting gold zones as we've been going too. So very positive stuff for a copper, gold and silver play in a lovely jurisdiction of Queensland. If you go to the next one. Copper as a story fundamentally has been sort of spoken about for some time. There's been many experienced copper explorers. Robert Friedland came out recently indicating that there's a perfect storm brewing for the copper pricing, given the demand for the metal and the unfortunate reality of the lack of supply. That unfortunate reality of the lack of supply sort of works into our favour, or does work into our favour, because difficult jurisdictions are finding it hard to continue their operations without government intervention, and therefore a lot of major mines are finding it difficult to stay on stream, and not a lot of new mines are coming up to meet that demand. Therefore, this supply gap is going to continue to widen as we try and get the the net zero target of 2050. So the fundamentals on copper certainly look good, and in the more recent times, the price has started to creep up in the right direction. If you go to the next one. So this is just an indication of the fact that there's significant gold at Mount Kaninda. In various holes, we've had some very good hits. Hole 7 in this example is 3 metres at nearly 28.9 grams per tonne gold. That's an impressive gold hit by any standard, but there are also sort of longer versions of that, 41 metres at over 3 grams. So there's certainly some good gold sections within Mount Kaninda, and Kaninda East is a prospect that's about 500 metres to the east of where we have been drilling, and that certainly has some very good gold hits within it as well. So it's a good copper and gold play, and if you're looking to get exposure to those two things in your investment portfolio, you should certainly look at us, because we're currently, in my opinion, very undervalued. But I would say that as the chairman of the company. But go and satisfy yourself. Have a look at some of these releases that we've put to the market, because they are quite detailed in their reporting, and satisfy yourself. If you go to the next one. As I said, the future looks bright. We had a recent report completed by Dr. Alan Wilson. Dr. Wilson's been a consultant to a lot of major companies, Newmont, Newcrest, Rio Tinto, Anglo American. He's a very experienced porphyry expert. He's attended our site. He's attended our geological firm in Townsville, reviewed our core, provided some very, very good input to how we should chase these things going forward, and we've implemented a lot of his findings into the exploration program for the next 12 months. As I said, we're close to the port of Gladstone. We've got significant gold, significant copper. We're improving upon, or have improved upon, with the drilling that we've done to date, the previous resource. In our view, we've significantly improved upon that, and that will be coming out in due course. There's huge demand for copper as a critical metal with the electrification that's going on around the world. We have experienced geological team, experienced management, and we intend to get stuck into this thing a lot more over the next 12 to 18 months. So thanks for your time.
Thank you so much, Tom. I totally agree there that the future absolutely does look bright for Kaninda. Thank you so much for your very insightful presentation today.
Thanks very much for having me.
Thank you. And that was Tom Pickett, Executive Chairman of ASX-listed Kaninda Resources. I'm Rachel, signing off for now.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Gina Rinehart has acquired a 19.9% stake in lithium miner Liontown Resources, effectively blocking a $6.6 billion takeover bid by US giant Albemarle. Her move, through Hancock Prospecting, positions her to influence Liontown's direction and capitalize on the long-term value of its Kathleen Valley lithium project. While Rinehart hasn't outlined her plans, analysts suggest the investment reflects strategic intent to shape Australia's lithium sector amid volatile market conditions. Liontown's CEO Tony Ottaviano dismissed speculation that the company is nearing financial distress, calling recent skid maths assumptions misleading. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. National Australia Bank, NAB, posted a $3.58 billion half-year profit, a 1% increase on the prior year, slightly beating market expectations. It declared an interim dividend of 85 cents per share. Despite stable overall net interest margins at 1.7%, core margins excluding Treasury contributions narrowed by 3 basis points, reflecting heightened competition for deposits and mortgages as well as rising funding costs. NAB's personal banking arm saw a 6.8% fall in earnings to $576 million, while business banking grew 1.4% to $1.6 billion. CEO Andrew Irvine cited global trade tensions as a source of economic uncertainty and reaffirmed the bank's cautious stance on balance sheet management. That's the latest from Kalkine's Daily Trending News.
Hello, I'm Olivia Harris and this is Kalkine's Daily Trending News. Netflix generated $1.3 billion in Australian revenue in 2024 but shifted 93% offshore via $1.2 billion in distribution fees to reduce its local tax bill, posting a modest $23.3 million profit. The platform, which dominates Australia's streaming market with 6.2 million subscribers, paid just $10.1 million in income tax. While the Albanese government is pushing for local content quotas, those plans are stalled amid trade concerns and rising global protectionism, including a proposed 100% tariff on foreign films by Donald Trump. Netflix says it has spent $1 billion on local content since 2019, though scrutiny over its tax practices continues. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris.
Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Oil prices climbed following reports of substantial progress in trade negotiations between the US and China, raising hopes of a resolution to the trade conflict that has threatened global economic growth and crude demand. Brent crude rose above $64 a barrel, while West Texas Intermediate traded near $61. The gains came after 2 days of talks in Geneva, where U.S. Treasury Secretary Scott Bessent and Trade Representative Jameson Greer expressed optimism about the outcome. Their positive remarks were echoed by Chinese officials, suggesting a possible de-escalation of tensions between the world's two largest oil consumers. While oil has recovered some ground after last month's steep sell-off triggered by trade war concerns, futures remain more than 20% below their mid-January peak, despite increasing output from OPEC+. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Oil prices held steady as traders assessed the implications of US President Donald Trump's decision to delay imposing steep tariffs on the European Union. Brent crude hovered near $65 a barrel, while West Texas Intermediate traded below $62. Trump recently threatened a 50% tariff on EU exports but granted the bloc until July 9 to reach a deal following talks with European Commission President Ursula von der Leyen. The extension has offered short-term market support, but broader concerns persist. Oil has been trending lower since mid-January, weighed down by global trade tensions and anticipated increases in OPEC+ production. The oil cartel is set to meet Sunday to determine supply policy for July, with any output hike likely to pressure prices further. Meanwhile, Trump signaled progress in discussions with Iran over its nuclear program, another key factor influencing oil market sentiment. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Lauren Hayes for Kalkine Media and welcome to another edition of Executive Corner Expert Talks. Today, I'm speaking with Executive Chairperson of Vertex Minerals, Mr. Roger Jackson. Vertex Minerals is an ASX-listed gold explorer committed to developing the next generation of multi-million-ounce gold deposits in the New South Wales and Western Australian goldfields. Welcome back, Roger. Firstly, could you give us a quick overview of Vertex Minerals' Hill End gold projects?
Well, thanks, Lauren, for that introduction. And yes, our Hill End project is our flagship project for Vertex. Hill End is located not far out of Sydney. It's a 3-hour drive, and it's about only 40 kilometres from Cadia. Cadia Ridgeway gold mine is the largest gold mine in Australia, owned by Newmont, and we're in the famous Lachlan Fold Belt, which runs from down low in Victoria through mines like Fosterville and, as I said, Cadia and all those big gold plays through New South Wales, and we form part of that. Our deposit is an anticline that runs some 24 kilometres, and it's a significant gold precinct, given we've just worked on a LiDAR project to find that there's over 3,650 old workings. Further, it's probably been one of the highest grade gold fields in Australia, given that the Hawkins Hill mine, which is just above our Reward, where we're going to be mining at Reward, is a 435,000 ounce mined deposit at an amazing 309 grams per tonne. That's 10 ounces a tonne. So this is an amazing gold precinct. And by the way, the largest piece of gold or reef gold ever pulled out of the ground has come from Hill End. This is globally, and it's 286 kilograms, the Halterman nugget. So this is gold country, and we're really excited about the Reward gold mine.
It is a big nugget indeed. Well, what makes Hill End a prime location for mine development, and how does it align with Vertex Minerals' overarching goals?
Okay, look, we've got a number of factors why this is steps ahead of many other gold or aspiring gold producers. One is that we're already on mining leases. Some of these mining leases go back hundreds of years, but they're there in fully permitted, and so therefore we can have an immediate start. When we already have a number of pieces of infrastructure in place, including tailings dam. Not that we're using a tailings dam, we dry stack. We have a gold plant which we're refurbishing to a bigger plant. There's already water, power, and there's already an adit to the Reward mine. So there's underground infrastructure, and we have a number of other pieces of infrastructures there. So we're already prepped up. And also the Hill End community is a mining community. It's been mining, a mining town for 150 odd years, and we are sort of in a very simple mining. We're going to be doing a very simple mining process using gravity only. So we're well ahead of everyone else. This is a very simple and very environmentally friendly project.
Right. And your company has recently acquired a Gecko Gold gravity processing plant. Would you like to elaborate on this development?
Yeah, sure. We purchased this plant because it was an opportune buy. Given it's a gravity gold plant that was in a company that is closed up, and it's a Gecko plant. It was in very, very good order. We've gone down and done a number of audits on it, and it pretty well matches exactly what we want to do. We want to recover gravity gold, and we want to do it as cheap as possible with the lowest capex. We're going to have a bit of a few additions to it, so it really perfects it, and we're bringing it up to almost 120,000 tonnes per annum throughput on an annualised basis. So it's a bit bigger than the one that we have now, but 3 times bigger, and it will be very efficient. It'll only be two people running it. There's a lot of technology around how it's run. It's fully automated, and it will be a very, very good fit for what we're planning to do, given we're planning to start mining the Reward gold mine later this year.
And what are the next steps at the Reward gold mine after a successful pre-feasibility study?
Okay, so we have put out a pre-feasibility study, but since we purchased this plant, clearly there's a few things that will change. One is that there will be a lower capex involved with the buying this plant from what our previous plans were, and that also affects our IRR, it affects the NPV, and it affects the cash flow. So we'll be re-releasing a pre-feasibility study very shortly, actually, and that will have the new financial model in there. And so that's the first step. The next step is that Gecko will be undertaking a refurbishment of this plant, and ultimately we will be moving the plant from down in Victoria up to Hill End. That will be put into place on site where we already have a lot of infrastructure, including our crib rooms and change rooms and workshops, and even our gold room will be still utilised, and that will be probably a process that'll take 3 to 4 months. Following or during that period of time, we plan to start developing the underground, and that does take some time. That takes 10 months. We're opening the adit out. We're going to be utilising larger equipment, jumbos, and loaders, not handheld gear. So it's a bigger mining operation than was previously trialled. And we're going to also, once the plant is being commissioned, we do have some stockpiles of some material that we trialled processing in November, December, and we'll start processing that material up until we start bringing out the high-grade gold out of the Reward mine, which has a resource of some 420,000 ounces, 420,000 tonnes at 16.7 grams. So this is a high-grade gold mine, and that's what's happening over the next few months.
And how does the company balance exploration efforts with careful environmental management? Okay,
so look, one of the things that we're blessed with, and look, we will be one of the lowest environmental impact gold mines in Australia, I believe. One thing that we're blessed with is that the gold at Hill End is coarse grain gold. We don't have it mixed with any other sulfide, so there's no chalcopyrite, there's no pyrite, there's no arsenopyrite. This is just either gold or quartz. So that means we don't need to use cyanide. We don't need to use any chemicals whatsoever. We only use water. We refine we reuse that water. Because there is no metals in it, means that the water's nice and clean. We just decant it and it comes back again. We also, as I mentioned before, our tails are not really tails. We call it sand stack pile, because all we have is just pure sand. In fact, it's probably a saleable product if we're sort of somewhat a bit closer to Sydney, but it is just a pure sand tails material. And further to that, we have a very nice gold quality. That's 23 fine, where 24 is pure gold. So it's very easy to produce into a gold bar, and we do that on site. Further, we aim also to be looking at doing some, and this will be in the future, but because it's a very, very low power consumption to extract this gold, we only need to crush down to sort of 600 micron, which, technically that's amazing. I mean, normally it's sort of around about 100 micron. So we don't use a lot of power. So ultimately we can probably run this plant on renewable energy, solar and the like. So this is an amazing story. When we're doing exploration, same story. We're really got a very low impact, and it's probably one of Australia's lowest impact gold mines.
And lastly, Roger, where will the company's strategic focus lie in 2024?
Look, clearly that is just taking this mine through to production. One of the things that we've always understood is that our easiest way to explore is from underground, given the topography of where we're at, and given this is high grade and nuggety, but somewhat homogeneously nuggety. I explain that probably to someone over a beer because it's quite complex, in my view. But it's much better to drill from underground. So we'll be getting in mining. We'll also be drilling from underground. Given we've got an exploration target there at Foster's, which is just below where we're going to be mining at 524,000 kilotons. And we're talking grades from 12.5 to 19 grams per tonne. This is very high grade. And, we've got potential plunging from this all the way south, and we're quite excited by getting into mine and exploring at the same time. So that's 2024 for Vertex this year.
Well, thank you for your time today, Roger. It was great to have you back on the show.
Thank you very much for having me.
That was Executive Chairperson of Vertex Minerals, Mr. Roger Jackson. And if you missed any part of that chat, you can catch the full interview on our YouTube channel at Kalkine Media, so make sure to subscribe. I'm Lauren Hayes. See you next time.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. Ramsay Health Care is in early-stage talks to acquire a minority stake in Perth Radiological Clinic, Western Australia's largest radiology group backed by private equity firm Allegro Funds. The $7.9 billion private hospital operator is reportedly seeking a strategic position but has not yet received due diligence access. Perth Radiological Clinic, founded in 1948, operates across hospitals and clinics with a network of over 80 radiologists. The business, majority owned by doctor shareholders, has grown to nearly $50 million in annual earnings since Allegro's 2019 investment via its $400 million Fund 3. Other parties are also believed to be interested, and Ramsay is said to be working with investment bank Jarden. That's the latest from Kalkine's Daily Trending News.
Hello, I'm Olivia Harris and this is Kalkine's Daily Trending News. Sigma Healthcare reported a 36% rise in pre-tax earnings for the 9 months to March, reflecting growth aligned with Chemist Warehouse's first-half performance prior to their February merger. The company did not disclose full merged group figures but confirmed EBIT growth was consistent with Chemist Warehouse's $446.1 million first-half result. Sigma also revealed $42.4 million in merger-related transaction costs during the period. The reverse takeover, finalized in February after shareholder approval in January, formed a $36 billion pharmacy group with nearly 1,000 stores and $1 billion in annual earnings. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris.
Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Super fund Hester has sold its remaining stake in Mineral Resources, citing serious governance concerns. CEO Debbie Blakey said the board failed to act promptly on issues including managing director succession and systemic governance failures. The departures of key directors from the Ethics and Governance Committee last month marked a significant step backwards, according to Hester, which represents healthcare workers. Despite engaging with the company since last year, the fund said its concerns went unaddressed. Mineral Resources was placed on HESTA's watchlist in October, joining other troubled companies like WiseTech. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Rachel Jones from Kalkine Media. Welcome to another edition of Executive Corner Expert Talks. Today I'm speaking with Mr. Ian Warland, Managing Director of Cooper Metals. Cooper Metals is focused on advancing its project portfolio in Western Australia and Queensland with the flagship Mount Isa East Copper Gold Project and the Guru Copper and Gold Project. Thanks for joining us today, Ian.
My pleasure.
Now, firstly, could you start by providing an overview of Cooper Metals and its exploration projects?
Sure. Cooper Metals is a copper gold explorer. We're only just 2 years old, and our flagship project, as you mentioned, was in Mount Isa, where we've got an extensive tenement portfolio of around 1,600 square kilometres there. And we've also got our Guru Copper Gold Project in WA, not far from Silver Lakes Deflector Mine. So they're both in very good mining jurisdictions with infrastructure nearby and very prospective.
Absolutely fantastic spots there. Now, following the identification of new targets at the Guru project, what are the next steps that your company is planning for this project?
Yeah, okay, well, Guru project itself is Quite a new greenfields project. There hasn't been much drilling done there in the past. Look, it's in a very prospective area. So we've really been focusing in 2023 getting those real base data sets. So we've done some geophysics, some detailed magnetics, and a lot of geochemistry in the area. So soil geochemistry and rock geochemistry. Now, we've come up with at least 5 gold anomalies at Guru, and recently we announced a rock chip of 2.5 grams per tonne gold. So the next steps there are to do some air core drilling. So we're just going through the approval process for that, and we'll be air core drilling a number of these gold targets and new areas undercover to test for gold in the basement rock. So it's early days, but I think the project has a lot of potential.
Absolutely. And also with recent promising drill results at the Mount Isa East project, what potential opportunities do you see unfolding there?
Yeah, Mount Isa East copper gold project is a large project, as I said in the intro, but we're really excited about the follow-up that we're just about to commence at Brumby Ridge copper gold prospect. And yes, you alluded to the fact that we announced some great results there late last year, up to 71 metres at 2.8% copper, and we didn't get right through the mineralisation in that drill hole. So the follow-up planning is well advanced there. We've got all our approvals in place. The RC sort of pre-collars are just about to start, and then we'll be doing around 5 diamond holes for about 1,200 metres there to test a long strike and down dip of the initial hits that we got at Brumby Ridge. And of course, in 2024, there's a lot more work to be done in that area. We'll be doing some RC drilling on some up to several other targets that we've got in the area, because we have identified 50 targets in our tenure. So we're working our way through those targets.
Fantastic. And onto the financials now. How has the recent placement strengthened the company's financial standing for the execution of these exploration plans?
Yeah, I think we feel very lucky and privileged. The capital markets are a little bit tight at the moment, but we were able to easily get $3.5 million in the door just last week, oversubscribed placement. So that takes us to almost $5 million in the bank. And for a junior, that means we're very well funded to do this campaign and many other campaigns through the year. So we're very well funded going forward.
It sounds fantastic. Some very exciting times ahead there for Cooper Metals. Thank you so much for your time today, Ian.
Thank you, Mark. Thank you very much. It's always a pleasure.
Great. And that was Mr. Ian Morland, Managing Director of Cooper Metals. And if you missed any part of that chat, you can catch the full interview on our YouTube channel at Kalkine Media. So make sure to subscribe. I'm Rachel Jones, reminding you to stay apprised and invest wise.
Hello, I'm Olivia Harris, and this is Kalkine's Daily Trending News. Tabcorp will strip 1,300 pubs of wagering commissions under a major shake-up of its retail betting agreements, aiming to shift focus to in-venue promotions like Saturday, Tab Time, and bonus bets. CEO Gillan McLaughlin told publicans the changes were essential to counter losses at low-turnover venues and compete with online rivals. While most venues will still earn commissions based on turnover, those below a new threshold will lose them entirely. Pubs will continue to pay terminal fees, prompting industry concerns over financial losses. A $20 million promotions budget has been set aside, but the AHA warns many pubs may be left worse off. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris. Hello, I'm Olivia Harris, and this is Kalkine's Daily Trending News. Telstra CEO Vicki Brady has unveiled a new 5-year strategy to transform the company into a digital infrastructure powerhouse, capitalizing on the AI and data center boom. Reversing her predecessor's asset separation strategy, Brady's Connected Future 30 Inches plan aims to lift returns from 8% to 10% by 2030. Telstra plans to offer tailored network solutions, such as dedicated bandwidth for large clients, and invest in software-defined, virtualized networks. The move aligns with the soaring demand for secure, high-performance infrastructure, seen in the successor data center firms like AirTrunk, which serves tech giants, including Microsoft. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris. Hello, I'm Olivia Harris and this is Kalkine's Daily Trending News. Tesla's Australian vehicle sales plummeted 76% in April to just 500 units, while Chinese rival BYD surged ahead, selling 3,207 vehicles, over 6 times more. BYD's Shark Ute, a major driver in March due to fringe benefits tax exemptions, dropped to the 16th top-selling vehicle in April as the exemption ended. Tesla sales have also been hurt by a global backlash against Elon Musk's ties to Donald Trump and a local delay in Model Y updates. Overall, EV sales declined significantly after government support was removed, highlighting the policy's impact on Australia's price-sensitive market. Traditional petrol and diesel utes like the Toyota Hilux and Ford Ranger dominated April's sales rankings. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris.
Talk to you today about Empire Resources and our projects in Western Australia. So Empire Resources, exploration company based out of Perth in Western Australia, has a pretty sizable exploration package and ground holding in WA. We have a consistent exploration focus on all our projects. In last year, calendar year, we drilled a bit over 3,800 metres of RC and diamond at our Urameri copper gold project, alongside plus multiple geophysical downhole surveys. In the last 6 months, we've drilled just shy of 9,000 metres of air core at our Penny's gold project east of Kalgoorlie. We've completed some pretty extensive exploration fieldwork at our Nanny copper gold project up near Meekatharra in Murchison. Plus, we've commenced our field mapping and field work at our Barlawiri project west of Kew, also in the Murchison. The project portfolio is 451 kilometres of granted tenure, plus another 451 kilometres of tenements and applications. Empire is constantly cycling through projects that don't fit the core, and recently divested 2 projects for royalties that go to bolster our royalty portfolio. We have an ongoing review of all investment and acquisition opportunities and complete business development activities on anything that we'd like the look of. The company has a strong balance sheet and is in a good financial position. At the end of Friday, 19th of May last week, we had $1.1 million in cash, 0 creditors apart from the usual trade creditors, and we have strong shareholder support. Capital structure, I'll let you go through that at your pleasure. So first of all, I want to just highlight our investments and our royalty over the Penny's Fine gold mine. It's a 5% net smelter royalty on the first 50,000 ounces and 2.5% thereafter. We still have $400,000 of remaining milestone payments, $200,000 on project execution and another $200,000 on first gold pour. The mine is a high-grade gold mine located 45 kilometres northeast of Kalgoorlie in Western Australia. Open pit production produced 18,346,000 ounces at 4.47 grams. So it's a high-grade open cut mine. The underground resource has a remaining 43,000 ounces at 4.99. It's currently owned by a company called Horizon Minerals, and they've stated that they intend to take Penny's through to production. They have a ongoing or currently a drilling infill and extensional drilling at Penny's. and we wait for information on that. Drilling with great enthusiasm. Their studies are underway. We look forward to seeing that project move to production and the royalty portfolio, the royalties that will bring to the business. Empire's projects, as I said, it's 451 square kilometres in West Australia. 4 projects. Penny's Gold, 45 kilometres northeast of Kalgoorlie. Moving to the north, we've got Uameri, which is 370 kilometres northeast of Perth. That's a copper gold predominantly, but has gold, copper, nickel, cobalt, and PGMs. Nanity is a copper gold package about 70 kilometres east of Meekatharra, and then Barlaweri is a zinc, lead, silver, gold multi-element project, 150 k's west of Kew. So let's have a quick look at the Penny's Gold project. 28 kilometres of granted tenure, 45 kilometres from Kalgoorlie. Is proximal to the Penny's Fine Gold Mine, as you see on the slide in front of you. It has, that's the little area down the south there. We've undertaken a fair bit of drilling, certainly up to the north around PFO9, PFO7. Recently completed a bit over 8,600 metres of air core drilling in and around PFO9, PFO7 and PFO6 that you see on your screen there. Some really good results coming back from that. 8 metres at 2.89, 12 metres at 0.76 of a gram. PFO9, really it's interesting asset right up in the north there. 7 metres at 1.6, including 2 at 2.4, and another 20 metres at 0.62 grams per tonne. So the mineralisation that we're seeing is all at the contact of the regolith to the fresh rock. It's very encouraging. We're seeing some shearing and some localised structures. At PFO9, we've seen black shale and other shearing and structures. Again, there's some really strong mineralisation at the contact of the regolith, and we'll be looking to identify some targets there for RC drilling, some deeper fresh rock targets. The Uameri project is a polymetallic base metals project. It has a large synclinal fold structure to it. It runs from the screen you see there, A zone to the top left of that image, down through Just Desserts, down through YTO1, back up Claudius and what we call Constantine or that. So you'll see that on the mag on the image to the right. There is 2 deposits, 26 projects and 18 identified targets. So there's a lot of smoke here. There's a lot of areas that haven't been adequately tested. Only 10% of the drilling is below 75 metres vertical. One asset that we do like the look of is the YTO1 prospect that we identified in 2019. It's a geochemical signature over 3.5 kilometres in strike. It's coincident with geophysical anomalism. We identified that in 2019, as I said, with some air core drilling. We followed that up subsequently with RC drilling and more recently diamond drilling. It's a large system, bulk system of copper and gold, and we've identified the strike over 400 metres in drilling, and we intend to deploy some geophysical IP and geophysical techniques to determine identify the depth and strike of this system. Another deposit we like the look of is the A zone deposit. It's 1.3 kilometres long strike of Just Desserts with previous intersections 12 metres at 2% copper, 19 metres at 1.9 and 7 at 3.2. Has had limited exploration, although we recommenced drilling in 2021, and our recent drilling this year, we've identified 10 metres at 0.93 near the surface, and a separate gold anomalism there of 3 metres at 1.93, which includes a metre at 3.41. So again, very encouraging numbers, worthy of further work and follow up, and we'll continue to assess this deposit as we go forward. Another little prospect, Uameri, is Smith's Well. It's a massive disseminated sulphides, purite chalcopyrite to pyrite. It's highly conductive it's a channel-like plunging structure. We've put some holes into that, and we need to do more technical work on that to determine what the tenor is and what that might turn into. So our third project to talk about is the Barlawiri project. As I said, it's about 150 kilometres west of Kew. We've also got a 406 kilometre application in the area. It's a base metals with walk-up targets, has had no exploration since the 80s, very limited drilling. But in the 80s, there was a modest amount of drilling that returned some really good numbers, such as 5 metres at 4.79 zinc, you have a metre at 3.9 lead, there's 5 metres 100 grams silver, 2 metres at 0.58 copper. And all very close to the surface. So there's some clear walk-up targets there. The B1 target is probably the one that sticks out for us. It has had some pretty significant, it has had a little bit of drilling, and it's got some significant outcropping, subcropping outcrops. We've finished mapping the area recently, and we'll be looking to get into that project and undertake some more definitive field work. And the fourth project in the portfolio is the Nanity project, copper gold mineralisation in greenstones. It's north and south of the Nanity well deposit, which is a 36 million tonne at 0.42 copper deposit. And we're only probably 1.5–2 kilometres north of that along strike, and our recent mapping and soils programs have identified multiple targets that require further work. Priority areas, NAM1, which has got a magnetic high with peak soils that are anomalous. Chromium greater than 600 ppm is considered highly anomalous. NAM16, similar. Greenstones adjacent to a major shear with ultramorphic rocks outcropping. So plenty of field work to be done at Nanity. So in summary, Empire Resources has an excellent package of highly prospective exploration projects all located in Western Australia. It's multi-commodity, focusing on gold and copper gold, but we certainly do have nickel, copper, cobalt, some PGMs. And the projects are greenfields projects such as Nanity and Barlawiri, through to advance exploration with existing JORC copper gold resource at Uameri. Exploration is active with continuous news flow. We have a strong financial position, we have a strong cash position, zero debt. We've demonstrated efficient, effective exploration with a systematic approach to our exploration. We are prudent on our costs and manage our exploration activities accordingly. We are continually developing an understanding of our geological conditions. And finally, the experienced team that has a history of corporate success, and we have a demonstrated commercial skill set, strong commercial and strong technical skill sets. Thank you very much.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. The Transport Workers Union, TWU, is seeking a record $121 million in fines from Qantas over the illegal dismissal of 1,800 ground staff, a move that could reshape union litigation in Australia. In federal court, the union argued for the maximum penalty, claiming it should receive the entire amount to support future union-led actions. Qantas, meanwhile, proposed a lower penalty between $40 million and $80 million. The TWU funded the lengthy case itself, asserting that unions need resources to act where regulators do not. Traditionally, fines are paid to the Commonwealth, but unions or employees can receive them in specific cases. However, the unprecedented scale of this claim has sparked concern among employers and legal experts, who fear a potential surge in speculative, drawn-out court actions by unions. The court's ruling could set a powerful precedent for future workplace litigation and significantly alter the financial dynamics between unions and large corporations. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Transurban will cut 300 jobs, about 7% of its workforce, to save over $50 million annually, aiming to become more agile amid public backlash over toll road privatisation in NSW, its largest market. Most job losses are in Melbourne and Sydney, affecting corporate roles but not operations. The restructure follows earlier job cuts in Queensland and mirrors broader industry moves, with Aurizon also announcing layoffs. Investors have questioned Transurban's growth outlook, especially with limited new projects and political scrutiny in Australia. The company is eyeing North American expansion but has yet to secure new deals. Despite weaker interim earnings, Transurban maintained its 65 cents per share dividend guidance. Shares rose 1% to $14.48, continuing a recent rebound. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Uranium stocks jumped Friday after reports that US President Donald Trump plans to sign an executive order to boost the country's nuclear capacity and reduce reliance on China and Russia for enriched uranium. Reuters said the order could be signed as early as today, declaring a national emergency and directing the Departments of Energy and Defence to fast-track nuclear facility development. Australian uranium miners rallied on the news. Paladin Energy rose 8.5%. Boss Energy gained 11.3%, and Deep Yellow advanced 8.3%. The move reflects growing US concerns about energy security and the push for greater domestic production. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Rachel Jones from Kalkine Media. Welcome to another edition of Executive Corner Expert Talks. Today I'm speaking with Don Smith, Managing Director of Tempest Minerals. Now, Tempest Minerals has been advancing its highly prospective Western Australian project portfolio, focusing on precious, base and energy metals. Thanks for joining us today, Don.
Thanks a lot for having me, Rachel.
Now, firstly, Don, could you give us an update on the portfolio so far?
Sure thing. So in the last few months, particularly towards the end of last year, we picked up a couple new projects. I think we've spoken about that a few times at Kalkine. So now we have the Yalgoo project, the Mount Magnet project, the Elephant project, and now and also the Five Wheels project.
And can you elaborate on how the newly acquired Elephant project enhances Tempest portfolio and overall value proposition through its gold and base metals potential?
Absolutely. So the Elephant project is located in the Albany-Fraser area of Western Australia, which is famous for a couple major deposits, including the large Tropicana gold mine and the IGO Nova Bollinger nickel deposit. So we're jammed about halfway between those two, and the Elephant project has a 8-kilometre gold anomaly in the soil within the project area, and that matches a very large magnetic anomaly as well, and we think that has direct comparative qualities to the Tropicana mine.
And what's the latest update on the progress of exploration activities at the newly acquired Five Wheels project?
Okay, so we went up there towards the end of last year and started and set everything up, and now we're reviewing all the early data and preparing a works program for that project.
And let's go back to the Yalgoo site. Could you outline the development plan for that and highlight key milestones and timelines after the recent discovery of high priority drill targets?
Sure. So As you just indicated, we've done a lot of work preparing targets in the tail end of last year, and this year we're planning at least 2 drill programs early, as soon as we can, really. We're basically attempting to mobilise and get everything done now while we're waiting for 1 or 2 approvals to come through. Number 1 on the list will be the Remorse target, which is a greater than 4 kilometre long geochemical anomaly. It has a very coherent copper and zinc signature there in the soils, as well as a whopping electromagnetic signature as well. So we're really excited to drill that one. And once we do that, we'll be moving on to the Sanity target, which is a few kilometres to the south of that, and is a gold target, and is nearby a known resource by which one of our neighbours is currently drilling.
And for the Range project, what will the priority work areas be for this year?
Number 1 will be the Wrangler target, which is very nearby an existing open pit, which was mined, let's say, 20 years ago. And we have found comparable grades in rock chip samples to what was mined in the pit only a few hundred metres away. So we think there's a good opportunity to extend that mining zone there into our ground.
Now, Tempest certainly has a lot going on for this year. What are the company's main goals for the next 12 to 18 months?
Oh, look, obviously we'd like to make a discovery, but we're always looking for other ways to grow the company as well. Our main goal is to just keep on exploring and as you say, developing our projects.
Fabulous, and all the best for that for you and for Tempest. Thanks, Don. Thanks so much for your time today. And that was Don Smith, Managing Director of Tempest Minerals. If you missed any part of that chat, you can catch the full interview on our YouTube channel, Kalkine Media. So make sure to subscribe. I'm Rachel Jones, reminding you to stay apprised and invest wise.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. WiseTech Global is set to acquire US-based software firm E2open for $2.6 billion, marking its largest ever acquisition. The ASX-listed logistics software company has assembled a syndicate of 9 lenders to fund the deal, securing $3 billion in debt financing to provide a funding buffer. The lender group includes Bank of America, Barclays, Deutsche Bank, HSBC, ING, JP Morgan, NAB, SMBC, and Westpac. Bank of America is advising WiseTech, while Rothschild represents E2open. The acquisition comes amid ongoing investor concern following the controversial return of WiseTech co-founder Richard White as executive chairman after misleading the board about personal matters. Despite the unrest, the company is pushing forward with expansion, and this deal reinforces WiseTech's strategic push into the US market. Final terms were agreed over the weekend, with a formal announcement expected this week. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Woodside Energy faces renewed investor backlash at its AGM, with major super funds planning to vote against directors over weak climate policies. After last year's 58% shareholder rebuke of its climate plan, Woodside opted not to offer a climate vote this year. Critics, including Aware Super and proxy firm Glass Lewis, are targeting directors like Sustainability Chair and Picard. Investors argue Woodside's lack of meaningful emissions cuts and continued reliance on offsets fall short of expectations. The company is also awaiting approval for a $30 billion gas project extension. Shares have dropped over 25% in the past year. Woodside says it held over 250 climate-related meetings in 2023 but continues to face pressure on ESG performance. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Woolworths will lower shelf prices by an average of 10% across nearly 400 popular items starting Wednesday, aiming to win back customers from Coles and Aldi. The cuts include both own brand and major branded products like chicken schnitzel, yogurt, frozen berries, and Coca-Cola. Part of a $400 million cost-cutting strategy, the price drops will remain in place until at least 2026. CEO Amanda Bardwell said families spending $150 weekly could save around $15, highlighting the move as a long-term effort to provide better value. More product price reductions are planned in the coming weeks. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Rachel Jones for Kalkine Media. Welcome to another edition of Executive Corner Expert Talks. Today I'm speaking with Managing Director of Radom Resources, Dusko Lobojevic. Now, Radom Resources is focused on progressing the Andover South Lithium Project and the Mount Shoal Nickel Copper Cobalt Palladium deposit in the Pilbara, with a large footprint in Western Tathian Copper Gold Belt in Serbia and Bulgaria. Now, welcome back to the show, Dusko.
Thank you for having me.
Great to speak with you today. Now, firstly, we'd love to hear an update on the company's flagship Andover South project. What are your primary focus areas here?
Certainly. So, I mean, our primary focus is on the pretty significant pegmatites, which we've already defined over the last several months. We keep extending the strike of the anomalies defined so far. It's represented by about a 1.5 kilometer striking pegmatite field running at some exciting grades up to 3.8% Li2O, while at the same time we are evaluating the Andover North project, which also borders Azure Minerals Andover discovery.
Excellent. Now, the samples collected from projects have been sent for X-ray diffraction analysis and mineralogical evaluations. Now, what can you tell me about these types of evaluations?
It's to determine the mineralogy of the samples and the pegmatites, and ultimately where the Li2O grades are being derived from which minerals. And in our case, it seems to be spodumene is the dominant mineral within the pegmatites, and it's carrying the lithium grades, which is ideal. I mean, spodumene is what we're after.
And your company has acquired lithium, tantalum, cesium rights for your Arrow project. What can you tell me about this?
Correct. So we had 100% of that project initially, except the LCT rights, which we recently acquired. The decision to acquire these rights was made off the back of a discovery of a spodumene-bearing pegmatite on the Arrow project. It's got a fantastic geological setting, structural setting. So while it's still early stage exploration, we have defined both pegmatites and spodumene on this project, and we look forward to developing further prospects over the following year.
Excellent. And the company has significant success on the Mount Shoal Nickel Copper Palladium deposit with the last drill campaign on this project. What are the next steps for that area?
Yeah, we did some really good work throughout 22, which culminated in that resource in April, I believe, earlier this year. Ultimately, right now, the next step is to develop, to complete the metallurgical studies, which are underway. We hope this will be done in the following couple of weeks. And that will inform us of the next steps forward on the project. It's an exciting nickel, copper, palladium discovery, which provides our shareholders with a exposure to multiple commodities beyond the lithium upside within the portfolio.
Fabulous. And what can you tell me about the agreement signed with Velocity Minerals for a joint venture in Europe?
Yes, so Velocity is a junior explorer, Canadian-based junior explorer. Obviously, with us pivoting to Australia and focusing on the lithium, we wanted to generate as much value as we could for the company, and obviously provide our shareholders with upside value through the non-core portfolio. So they are exploring some pretty significant Cretaceous age projects in the Western Tethyan. These rocks are known to host very large porphyry deposits. They've spent the last several months doing targeting work, and we hope this leads to a drill campaign in the early part of next year. So once again, just further upside for our shareholders.
It sounds like that. Now, just finally, let's talk about financials. What can you tell us about the capital position of Radian and the future business goals that you hope to achieve?
So we raised $6 million recently. So in terms of what we're looking to achieve in the near term, which is a drill campaign at Andover South and target definition across the further two projects, Mount Shoal and Arrow project, where we are hopefully developing further prospects. We're well financed, so no need for further recapitalization at this point, and we'll look to execute the program in the near term.
Well, thank you so much for your time today, Dusko. It sounds like the company has a lot going on over the next year.
Absolutely. It's been an exciting year, and we hope next year will be even better.
Absolutely. And that was Managing Director of Radian Resources, Dusko Lobojevic. And if you missed any part of that chat, you can catch the full interview on our YouTube channel at Kalkine Media, so make sure to subscribe. I'm Rachel, reminding you to stay apprised and invest wise.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. The ACCC has raised concerns that Elders' proposed $475 million acquisition of Delta Agribusiness could reduce competition in rural supply markets. The watchdog's preliminary findings suggest the buyout may lead to higher prices or reduced service quality for farmers, particularly in Victoria, South Australia, and Western Australia, where both companies operate. Elders is Australia's second-largest rural supplier with 245 outlets, while Delta ranks third with 64. The ACCC warned the deal could limit competition nationally, impacting costs for vital farm products. Investigations are ongoing, with ACCC Deputy Chairman Mick Keogh highlighting potential risks if Delta no longer competes independently. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Gold prices fell for a fourth consecutive day after a U.S. trade court blocked President Donald Trump's global tariffs, strengthening the U.S. dollar and reducing demand for the safe haven asset. Bullion dropped as much as 1.1% on Thursday, extending a 2% decline over the prior three sessions. A stronger greenback makes gold more expensive for international buyers. Analysts said the court's decision, which undermines a key element of Trump's economic policy, may further weaken gold's appeal. The Trump administration is appealing the ruling, potentially setting the stage for a Supreme Court battle that could reshape global trade policy. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Melissa Malley, and this is Kalkine's Daily Trending News. Australia's inflation rate held steady at 2.4% in April, remaining within the Reserve Bank's 2 to 3% target band and reinforcing expectations of another interest rate cut in July. Trimmed mean inflation rose slightly to 2.8%, but the RBA sees inflation as under control. Governor Michelle Bullock indicated a willingness to cut rates further if inflation continues to ease. Markets now predict an 80% chance of a July cut, potentially lowering the cash rate to 3.6%. Housing inflation also cooled, with rent growth slowing to 5% and new home construction costs rising just 1.2% annually, easing pressure on household budgets. That's the latest from Kalkine's Daily Trending News. I'm Melissa Malley.
Hello, I'm Rachel Jones for Kalkine Media. Welcome back to another edition of Executive Corner Expert Talks. Now, in this edition, I'll be speaking with Indy Singh, Executive Chairman and Founder of the Fiducian Group. Diversified financial group, the Fiducian Group is engaged in providing funds management, financial planning, platform administration, financial planning software and administration systems development. Welcome to the show, Mr. Indy Singh.
Well, thank you, Rachel, and good morning.
Good morning. Great to have you with us today. Now, it's a phenomenal company you've produced there, Indy. We'd love to hear more about it. Could you please share your presentation deck?
Yes, I certainly can. And you might have noticed that Forbes has listed us as one of the top companies in Australia under $1 billion of capitalization, which came as a surprise to us.
That's absolutely fantastic news. Congratulations on that. We're very pleased for you here at Kalkine.
Thank you. So I'll just try and get into my presentation now, a bit on the financials and the context and others. As you rightly said, Rachel, we have a platform administration business, a funds management business, financial planning, and we do our own IT development. So we have a team that develops all our software. Last year, financial year, we had net inflows of about $364 million, which includes about $100 million from the Auxilium product that we've recently launched, and I'll talk a bit about it, and the badged platforms. See, it was a bit of a misnomer because funds under administration at the end of June were about 3.273 million, which is about 3.3 billion. But the average over that period on which we charge our fees was only about 3 billion, because the market actually declined and then came back and steadied up. So at the end of the year, the market had jumped, and so our assets under management also reflected that. But over the year, the average was a lot lower. So by July already, with that increase, we already were up to 3.3 billion, which is an increase of 10% over the 2023 average. And we charge our fees on an average every week. So when the average actually fell over the year, even though the end result was higher, the revenue was a little lower than the previous year. However, we've started at a high point now, and this high point could contribute roughly another 1.2 million of revenue over the coming year if the markets even stayed static, which they don't, as we know. But if they were static, we'd still generate another additional 1.2 million. The platform products we have our own technology and really an advanced platform administration systems, and that links to financial planning software. So I would hazard a guess that we're probably the only company in Australia that has financial planning software that links directly to the administration system and to the reporting system, because all three are done on .NET 4, and others have to borrow and add and come to other companies to try and get a result that we can produce from our own systems. We have about 60 external products, managed shares, and the Fiducian funds, which are offered through the Fiducian platform. We don't offer Fiducian funds through the badged or Auxilium product. It's like if you want to buy Apple, you go to an Apple store. So if you want Fiducian funds, you come to the Fiducian platform. Just quickly on the next slide, our net inflows, you can see there, have been about 360 million. And the average, as you can see from the green line, actually fell over the year and it's now come back to a high point. So the next year should be really good. The profit before tax margins on gross revenue here is about 66%. That includes margins from cash. Now we look at the platform administration, as I said, for the IFA market. As you know, we have our own captive financial planners and our own audience, but we've now decided that we would like to compete in the open market as well. And therefore, we've launched a new low-cost product called Auxilium. We were told that the others who are valued very highly are disruptors. And in spite of my pleading that we do the same thing as them, people said, "Lo, you're actually an EBITDA company. You produce a profit and you continue to grow that way." And they don't, so they're disruptors. And I said, okay, well, maybe I'll disrupt the disruptors. And so we launched out Auxilium. And over a very short period, I think we've got something like 210 million in. And the IFA market seems quite enamored by what we've got. And sounds a very interesting avenue for us, that we've got a platform administration system, but we can apply it to the open market as well. The next point is the funds management. As you can see, we had about an average of 4.1 billion under management, whereas actually the average in the previous year to June 22 was 4.13 billion, even though the end point, closing point, was 4.59 billion, the average was only 4.1. And therefore, the revenue, even from funds management, over 22-23 was a little lower than 21-22. However, this too has now risen at the end of June. And in fact, at July, it was about 4.6 billion, an increase of about 12% over 2023. So potentially, this could contribute another $2 million of annualized revenue, even if the market stayed static from here. We've also started a new investment bond, which is we've joined up with Generation Life. As you would have heard, the Treasurer Chalmers has said that people can't invest more than $3 million in super from 2025. But if you want to save money for posterity and leave it for someone, you can join an investment bond, and it taxes at about 30%. But if you leave your money there for 10 years, you can get it out tax-free and do whatever you like with it. So we've got one with the Fiducian Growth Fund, which is one of our better performing funds. And that will help people who have large volumes of money in superannuation and want to save it, and they could put it in the investment bond. We do use the manage the manager process, where we have 26 different fund managers to 27 managers managing our diversified funds. And for example, our share fund has 6 different managers. And that's very defensible for financial planners, because using a single manager can be quite dangerous in terms of the fund manager may leave, the company may not succeed, maybe lose money, might get their strategy wrong. Whereas here, just having, say, 6 share fund managers, if one doesn't do well, hopefully 3 more may do well, or 4 more may do well. And if 3 don't do well, then hopefully the other 3 will do well. And we balance and get above average returns for our clients, which have proven themselves to be better over the long term against single manager returns. You can see from our returns from, this was on Morningstar, you can look at, say, the Capital Stable Fund, Balanced Growth, and Ultra Growth. They're diversified funds. And generally, the term expected for them is about 8 to 10 years. And when you look at the 10-year position, you can see Capital Stable was 8th out of 84, Balanced was 6th out of 142, and Growth was 22 out of 142. So they're right at the top of the tree. Ultra Growth, about 8th out of 94. The last year has been difficult for the technology sector, as we all know, and Ultra Growth has a fair bit of technology, because I believe That's the third constant after death and taxes. No matter what you do, technology will not stop and will continue 24/7. And even though the return over 3 years ranks us at 109 out of 120, the return is still 7.7%. And it's ranked 120 because of the peer group it's in. Our competitors generally on that group have hedge funds and futures, copper futures, and commodities and stuff like that, which we don't have. And we're pure, transparent, liquid, listed product, listed shares, listed emerging markets, listed smaller companies, and technology and property. So it's very transparent, fully liquid, no direct property, none of that stuff. So the comparison is not exactly in the right place, but the returns are still pretty good. The other specialist ones you can see, as you can see, technology didn't do too well over 3 years when all the large technology stocks started to fall when interest rates rose. But now you can see they've recovered. And you can see that people who invested 10 years ago in our technology fund would have received a return of 15.2% per year over that period. And the same with the India fund, which we started, had a great year last 3 years, 23%. But that too also, surprisingly, would have given people 15.2% over the year, over each year, over 10 years, which means you could have probably almost got 3 times your money by now. So we have some good products. We just go back a bit. Yes. So you can see in the funds management, our product, as I said, has got a number of underlying fund managers. So it's very defensible for financial planners. No one can question the product they've chosen, especially when you have a growth fund with 27 different fund managers. How many more would a client want? In fact, you get these 27 managers through one transaction. And we alter the products, we tilt them, we blend them, we get rid of managers that don't perform, we bring in new ones that we think are likely to perform. So clients have no reinvestment risk and don't have to get out after a particular fund has actually fallen in value. And here we do the alteration ourselves because we own the securities. We've got some distribution in New Zealand. It's a small market, but it's starting to pick up a little. Our profit before tax margins are about 50% of gross revenue, and this includes the cash held in the various funds. The next point, as I said, which is important for us, whether we are in a financial services business with fintech capabilities or are we a fintech business with financial services capabilities is a question mark. But we develop our own software for platform administration. We develop our own software for financial planning. And we have our own software developed for reporting online. And that connects to people's mobiles or laptops or whatever. And it's fully integrated. It's probably one of the only ones, I think. We are now providing the force as to external dealer groups who might want to use our financial planning software, which is called Force, as a service. We've recently done a lot of work on cybersecurity and strengthened multi-factor authentication so people can't just access our system. You have to go through and get confirmed on your phone or somewhere else that it's actually you, in spite of you having a password. So that's important given the kind of hacking that's going on. Financial planning is the next item. Now, financial planning, basically we use as an enabler of steady funds flows to our platforms. So the planners are there, they believe in the platform, they believe in the funds, and when new clients come in, they place the business in our platform, and then from our platform into the fiducian funds. I think pretty much 100% of all new money is going into the platform and fiducian funds. We have about 80 financial planners now through 45 offices. We made an acquisition last year of the financial banking business of People's Choice Credit Union in South Australia. And that had a bit of a hiccup, but it's come out very strongly and done very well now. Funds under advice in 2022 were 4.4 billion. They're now about 4.6 billion in June. We still have about 1.9 billion in external platforms, and we believe that a lot of that money can be transitioned if it's in the client's best interest, and we're confident that a lot of it would be in the client's best interest in the Fiducian platform and in the Fiducian funds. There are about 700 million of non-fee paying clients that came across when grandfathering of commissions came through. But many of them have not been engaged. They create no revenue for us. So work is underway now that either they engage with our planners or they leave. And that's fair enough, but it won't affect our revenue at all. Moving on, when we bought the PCCU business, People's Choice Credit Union in South Australia and Darwin, we added another 40 staff. And yet we managed to retain our staff numbers at just about 178 compared to 2022. We've added a group HR manager, additional practice development managers, additional IT support. Our systems are quite efficient. And actually, as the volumes grow, we haven't needed to increase more staff for administration purposes. In fact, they've actually reduced. So we can manage to keep our staff limits within limits. To us, staff retention is a key. We have what's called the Fiducian family, and all staff and executives are part of that Fiducian family. So we look after them, and hopefully, as they've been doing so far, they all look after Fiducian. Staff costs have increased by about $4.6 million, mainly because of the additional 40 staff in South Australia. But we expect very high levels of service and therefore client retention and business growth. Just quickly on the financials, you can see that given the way the markets went, they actually fell first, came back, and then rose right at the end. You can see total funds under management, advice, and administration at the end of the year actually was up 13%. And operating revenue was up 6%. So the factors that really impacted us last year were, first, that we had increased salaries. We had the market declining over the average. And our, when we bought PCCU, some of the clients didn't join us. Some of the advisors didn't join us. We lost some clients there. And there have been other costs, but we also reduced our fees on our platform. And all these went against us, but they're all baked into the numbers now, and we've absorbed all that. And so hopefully going forward, if there's no recession and the markets don't start tanking again, it should be very positive for us. As a result of the financial markets actually declining and coming back with the average lower, our underlying NPAT actually was 4% lower than the previous year. But our starting point this year, 23, is going to be much, much higher. And therefore, that's a good sign for shareholders and the company. Earnings per share, as you can see, based on the underlying NPAT, was also down 4%. And that should change over the next year positively. Segment-wise, I don't think there's much more I can add, but the total consolidated profit from ordinary activities was about 22.4 million. Total segment revenues about $73 million. And we looked at profit from ordinary activities was about $17.7 million. We've declared a dividend of about 30 cents for the year on underlying NPAT, which is a high dividend. You can see here that The share price against the All Ordinaries was up about 192% from 2012. Fiducian is up 27%. We've issued a good dividend, so that 30.3 cents fully franked. That means a person who invested $1,000 in Fiducian shares around 2013 would be getting $313 of a fully franked dividend each year, which means 31%. And therefore, in 2 or 3 years, they can recover all their money and keep getting a dividend, which is good for people who are pensioners and who are investors for the long term and want a good income and good dividend. You can see that dividends we just spoke about, reinvested would be giving reinvested, just $1,000 invested would give people a dividend of $312 fully franked. And we've grown our double-digit earnings per share in 17 out of 23 years since we listed. Funds under management, administration and advice, FUMAA, you can see has also kept growing. It's now June 23 was 12.34. It's already, I think, higher. And it's a good sign for the future. So we've consistent FUMAA growth. It reflects the initial acquisitions we've had also, and includes certain assets held on other platforms, which we think will be better off in Fiducian platform. Now, this is an interesting slide, which is a conceptual representation. This is not a projection, but it shows you what could happen to our business as funds under management, advice, and administration grow. And you can see the green line is generally a projection of underlying EBITDA. The dark bars on the bar chart are actually what has transpired in real life. The shaded gray ones are what could happen in the future. And you can see that the red line shows the costs, which increase, but not as fast as the green line, which is the way I believe a company should run is, yes, your costs can grow, but your profit should grow faster. And that's what the green and the red line are sort of not projecting, but is a conceptual representation called the jaws of growth are widening as the company gets FUMAA to increase. And that's about it from me. If anyone wants to contact us, you can contact Rahul and Julie, and their phone numbers and email addresses are given. I'm happy to answer any questions if you might have them, Rachel.
Thank you very much for your time there and a very insightful presentation. It's fantastic learning more about Fiducian. Now, as you mentioned in the presentation, we are currently seeing some market volatility here in Australia. What do you believe has helped Fiducian operate a sustainable and profitable business despite this?
A good question, I think, Rachel. What I did at the start was to build a sustainable business by not relying on any one sector. Like if we were just funds management, you would find a big decline in your assets. But we continue to get inflows from people who are wanting to invest their money and approach retirement or are in retirement, because they have to invest their money somewhere. And what we've got in our funds management is a multi-managers process, which actually diversifies their risk, has far better features than a single manager, and reduces the volatility and gives them a steady return. And they can structure their income payments through our platform so that they continue to have their assets for a long term. So that's one part. The second part is that we always have money on our platform, and we're administering it and charging for it. And the third thing is where the planners are looking after clients' assets, they're also charging a fee. And so we've got this triple area where different assets in different segments are actually getting a fee. So we can average or balance out our regular revenue coming through. Now, We also tactically asset allocate in our funds management business, so we can get defensive or we can get growth oriented for our clients. We can protect their money, and the business will continue to grow if you continue to get above average returns, which we do. And we found that generally above average returns outperform single manager returns over a period of time. So yeah, we fought it off. We fought off the GFC. We fought off the COVID scare, and the other thing is I've got to thank my staff and my executives, because we've developed this culture called the Fiducian family, and everyone has a feeling of belonging. So we're really into our staff. We help them. We understand inflation, and where we can help them, we help them. And they're very cooperative, and I think there are very few, except for the new ones, who are not on long service leave, but all the others are all well past 20 years. In fact, we've been going 27th year now, and my first employee retired 2 years ago. He said, I'd just like to retire. The rest are all, the senior managers are generally all around 20, 25 years.
That's absolutely fabulous. And that shows the quality of the company that you have created with Fiducian. That's definitely worth congratulations there on retaining such amazing staff. And what are Fiducian's growth plans over the next 12 months?
Well, first of all, as I said, we've already got a high starting point. We've got high funds under management, advice, and administration. That should augur well for the future. Plus, if ever there's a recession and the markets come off, this high starting point is already a cushion where we can show that our revenue is going to be higher. The next thing we're really going to focus on is expanding our financial planning network. And we're already working with a number of financial planners. What we do is we can pick people up who may not be large, but who need help. And we give them training, practice management, legal help. And we also acquire small businesses or client parcels and give it to them as a loan. And so these people now suddenly get a bigger client base. They get more income. They get more stability. So we're going to focus on building the franchise network. We're also going to try and expand our funds in New Zealand as best we can. As I said, it's a small market, but let's see what we can do there. And importantly, we're going to try and grow Auxilium, which is the new platform, which I think today is probably the cheapest, if not at the almost the cheapest product in the marketplace for independent financial advisors. And it's got a huge range of investment options, funds, 600-700 funds, shares, international shares, fixed interest, whatever the planners want, we can give it, and we can administer it, and we also can report online on those. So people can know their asset valuations at the close of business every day. So that's another one we're going to try and expand and grow. And I think it's got a great future, because Fiducian just has about 80 planners now, and we hope we can get to 90 or 100 in a short period of time. But the outside market, which can use Auxilium, there's about 12,000 financial planners. So it can grow quite fast and be a solid competitor to the ones that are supposedly disruptors or the popular ones in the marketplace now.
Well, it certainly sounds like you have a very busy 12 months ahead. Good luck from everyone here at Kalkine with that. Thank you so much for your time today.
Thank you so much, Rachel, and thank you for talking to me as well. Appreciate it.
And I was Executive Chairman of Fiducian, Mr. Indy Singh. If you missed any part of that chat, you can catch the full interview and presentation on our YouTube channel at Kalkine Media. So make sure to subscribe.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. Australian lithium miners may be forced into deeper supply cuts as Chinese producers slash output amid a sustained price collapse. Lithium carbonate prices have hit a 4-year low, dragging down ASX-listed miners like Pilbara Minerals, Liontown, Mineral Resources, and IGO. Analysts warn demand remains weak, and supply curbs, such as Wesfarmers' output cut at Mount Holland, may signal a broader industry response. Despite a brief price rebound earlier in 2024, oversupply and renewed production in China have reignited market concerns. Citi notes that most Australian projects are now unprofitable at current spot prices, with only the Greenbushes mine remaining cash positive. That's the latest from Kalkine's daily trending news. Hello, I'm Melissa Malley and this is Kalkine's daily trending news. McKinsey & Company has reduced its workforce by more than 10% over the past 18 months, shedding over 5,000 roles in a major shift from pandemic-era expansion. The firm, now at around 40,000 staff, aims to restore profitability amid slowing consulting demand and a $2.5 billion legal burden from opioid-related settlements. Cuts include 1,400 back-office roles and 400 tech specialists, with added pressure on underperforming consultants to leave. The slowdown follows rapid post-COVID growth and declining attrition rates across the industry. While McKinsey contracts, rival BCG expanded headcount and revenue in 2024, highlighting diverging paths among top consultancies. That's the latest from Kalkine's daily trending news. I'm Melissa Malley.
Hello, I'm Madeleine Wright and this is Kalkine's daily trending news. The Victorian government plans to increase mining fees by up to 234%, drawing strong opposition from the industry, which warns it will deter investment. The fee hike, aimed at covering regulatory costs, would make Victoria's exploration licence fees the highest in Australia. Critics, including the Minerals Council and opposition MPs, argue it will harm critical mineral development and inflate construction costs amid a housing crisis. The government says the increase is needed to recover a $13.7 million shortfall and improve approval timelines. Industry leaders likened the move to anti-business governance, accusing the state of pushing out mining investment. That's the latest from Kalkine's daily trending news. I'm Madeleine Wright.
Hello, I'm Rachel Jones for Kalkine Media. Welcome to another edition of Executive Corner Expert Talks. In this edition, I'll be speaking with Alex Hanley, CEO of Lithium Universe. Now, Lithium Universe holds hard rock lithium assets in both Australia and Canada. The current focus is on the Apollo Lithium project, located in the James Bay region of Canada. Welcome to the show, Alex.
G'day, Rachel. Thanks for having me.
Now, firstly, we'd love to congratulate you on the ASX listing of Lithium Universe. So far, it's been a fantastic success. What can you tell me about that?
Yeah, the company itself has come out of the flames of a company called Mogul Games Group. So there was an acquisition of assets across Canada and Australia, both lithium and rare earth. In tangent or in parallel with that, we completed a $4.5 million offer and came back onto the boards about 5 or 6 weeks ago.
And if we look towards Canada, how significant is the Apollo Lithium project for Lithium Universe?
Yeah, the Apollo Lithium project is our flagship. It's situated in the James Bay region of Quebec. It itself commands a 240 square kilometre land position within 30 kilometres of both Patriot Battery Metals Corvette project with 109 million tonne resource, and Winsome Resources Adena, which has seen intercepts of 107 metres at 1.3%. So we're in a great jurisdiction. We've got the same sort of greenstone We've got the same sort of late stage Pluton as well as the same sort of structural conditioning. So from our LCT pegmatite expert, Dr. Julie Selway, she's pegged this ground on the premise of a highly prospective licence.
And I understand you've already started exploration there. Can you walk us through that?
Yeah, so the licence from the government data set had 17 known pegmatite occurrences. Now, we completed a core AI study using machine learning from nearby deposits, including Patriot battery metals, to really understand what these pegmatites look like from a spatial length, width, sort of conditioning sort of approach. What we did was then approach that with LiDAR, spectral ID and satellite imagery and use that to identify 28 additional targets for immediate follow-up. And we've got boots on ground at the moment. We've got a prospection campaign as well as a field sampling campaign. And we've already completed an airborne survey as well. So the airborne survey, the interpretation from that survey came up with the fact that it's interpreted that we're on the same sort of structural conditioning as what we're seeing over in Adina. So it's all looking great, Rachel.
Now, Mr. Iggy Tan, who chairs Lithium Universe, refers to the company's management and executive group as the Lithium Dream Team. Now, that sounds very inspirational. What can you tell me about the Dream Team?
Yeah, the Dream Team is obviously led by Iggy Tan. So Iggy by himself, he's got a name for himself. Iggy started his time at Greenbushes, which is the highest grade and biggest deposit in the world. So he commissioned the lithium carbonate plant there back in 1992. So from that, he then went on to Galaxy Resources, where he spearheaded the company from a $10 million market cap to about $2.5 billion at merger with Orocobre. Also, during that time at Galaxy, he was accountable and responsible for the delivery of the first large-scale, fully vertically integrated mine to refinery project, including the construction of the Mount Cattlin project in WA, which led on to the Jiangsu lithium carbonate plant in China. So he's been there, done that, and he's obviously, during his time with Galaxy, also picked up the Allkem James Bay deposit as well, which is about 110 million tonne at the moment. So Iggy Tan leads the team. We've got Pat Scallon, who ran Greenbushes for 25 years, so brings a very focused lithium skill set from exploration all the way through to market. And also Dr. Jingwan Liu, who we've just appointed to the board. Jingwan is the lithium downstream expert. He's the go-to man, and he brings a lot of technical experience to the board. We've got Terry Stark, who is the former GM of operations for Galaxy. Roger Pova, who's run both Greenbushes and Mount Cattlin. Huyen Yen, who actually designed and built Mount Cattlin. So we've got all the right people in the room to make the key decisions and get things happening.
Well, that absolutely is a fantastic team. Now, with this Dream Team heavily focused on project development, what is the vision for the company?
The vision, as we sort of set up over the last few weeks, is really talking about the more global and broader vision for Quebec. Quebec, in general, has not produced a significant amount of lithium, spodumene at all, with Sayona Mining only coming on recently. So there's a hole currently in the Canadian market for lithium expertise, and what we're seeing is that the US battery makers are really sort of desperate for that lithium carbonate concentrate and lithium hydroxide. So we're just evaluating all options at the moment, and the current sort of strategy that we're looking at is what we're calling the Quebec Lithium Processing Hub strategy, which encompasses a fully vertically integrated processing hub from concentrator to refinery. So we're just working with this at the moment, understanding the location, the economics of it, and hoping we can update the market soon.
Well, Alex, Lithium Universe has certainly gotten off to a great start. We're very excited here to see how the year unravels and what the future holds for the company. Thank you so much for your time today, Alex.
Thanks, Rachel.
And that was Alex Hanley, CEO of Lithium Universe. And if you missed any part of that chat, you can catch the full interview on our YouTube channel at Kalkine Media. So make sure to subscribe. I'm Rachel, reminding you to stay apprised and invest wise.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Oil prices climbed after a U.S. trade court ruled President Donald Trump's global tariffs illegal, easing market fears of a broader economic slowdown. West Texas Intermediate rose above $62 per barrel, while Brent neared $65, extending earlier gains. The court decision, which may still be appealed, lifted investor sentiment that had been dampened by months of trade tensions. Since January, oil has faced pressure from revived OPEC Plus output and tariff-driven uncertainty. Meanwhile, U.S. crude inventories fell by 4.2 million barrels last week, according to the American Petroleum Institute. OPEC Plus is set to meet Saturday to decide on July production levels. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. REA Group, owner of realestate.com.au, faces an ACCC investigation after hiking agent subscription fees by up to 78% and raising listing prices across Australia. Agents accuse REA of misusing market power, driving up vendor costs while tightening agent margins. The probe follows growing industry complaints about REA's dominance and opaque pricing structures. Critics claim REA stifles competition by controlling advertising, finance, and sales platforms. REA has acknowledged the ACCC's request for information and says it is cooperating. Analysts have long warned that REA's steep annual price hikes could trigger regulatory scrutiny, with some questioning the sustainability of its high valuation. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. The U.S. Supreme Court has rejected an appeal by Apache Stronghold, allowing Rio Tinto and BHP to proceed with the Resolution Copper project in Arizona. The decision removes a key legal obstacle to a federal land transfer involving Oak Flat, a sacred site for the Western Apache tribe. The mine, projected to supply up to 25% of U.S. copper demand, holds the third largest known deposit globally. While the companies still need permits, the land transfer may proceed by June 16. The ruling marks a win for domestic critical mineral supply, despite sharp criticism from two justices over religious freedom concerns. That's the latest from Kalkine's Daily Trending News. I'm Melissa Malley.
Hello, I'm Rachel Jones for Kalkine Media. Welcome to another edition of Executive Corner Expert Talks. Today I'm speaking with the Managing Director of Australasian Metals, Dr. Ching Chao Cheng. Australasian Metals is a diversified mineral explorer with highly prospective projects with significant exposure to gold, lithium and other battery metals. Its project portfolio is spread across Queensland and the Northern Territory. Welcome to the show, Dr. Zhang.
Thank you very much for having me. Thank you.
Now, firstly, could you remind our viewers with a brief overview of Australasian Metals, please?
Yes. Australasian Metals Limited was listed 2.5 years ago in ASX, and we have raised $5.5 million on the IPO and another $2.5 million at 45 cents. So since then, we have been really busy actively exploring lithium in Mountain Peak and Barra Creek in Northern Territory and gold prospects in Queensland. And lately, we acquired some bauxite project with a lot of potential in the titanium space. So that's where we are today. We still have close to $4 million cash in the bank, and with only 10 million market cap around that benchmark.
Dr. Zhang, last month your company began a maiden drilling program at the Mount Peak project. With such a large space, how do you identify those targets?
That's a very good question. We have over 1,500 square kilometers to explore. It's very hard to pin down the right point to drill. But since we packed the project, we have done a lot of rock chip sampling in the surface while we are doing the mapping. And we use soil geochemistry to identify the potential bigger footprint of this mineral system of lithium. And also we engaged a specialist to conduct a geophysics program to give us some idea or some interpretation of what the pegmatite look like, the body look like in the shallow depths. So after we done all those works, finally we go through all the permitting exercises. We got the certificate from the Aboriginal Area Protection Authority. We are drilling right now with well-defined target. So let's say we need luck and finger crossed.
Dr. Zhang, with Mount Peak, what is the potential outcome of the drilling program?
There's a lot of, you may be aware that there's a lot of M&A activities in the lithium space in West Australia, but the Northern Territory haven't, besides the first lithium mine operating by Core Lithium in the Darwin Northern Territory, there's no economic deposit has been defined, or let's say no decent discovery has been made in the North Arunta pegmatite province. So the drilling program we are doing, I would think the best thing could happen is we drill something fantastic mineralization of significant thickness. Then we'll be, well, I cannot tell you how happy my shareholder will be and how the market will react to this positive news. But we understand we are in the early stage of our journey. For me, it's more about a learning processes, how much we can learn from this first diamond drilling program. It's also give us feedbacks of whether our exploration strategy works in that region. If we find what we are looking for, or with that drilling information, which can greatly improve our understanding in terms of the geology condition, I think that's a win for the company as well.
Dr. Zhang, can you tell us more about Australasian Metals' May Queen South bauxite project and its titanium potential?
This project we acquired from Atlantic Lithium. They are also our major shareholder. They are like 300 or 400 million market cap company. We got great support from them. And the bauxite itself, there's already defined JORC standard resource, over 54 million tons at 37.5% aluminum. Most importantly, it has 5.2% average titanium oxides in it. So for us, we understand in terms of quality of bauxite is not top end products, but the potential of titanium that attract us or attract our attention. I think in this current market, there's a lot of demand for premium titanium products like concentrate. We have great foundation to look into that and get something out of this project.
Dr. Zhang, which strategies have contributed to the company's success in recent exploration programs?
For us as a junior, we have limited resource and funding, so our strategy is quite clear. We only engage the cause to increase the value of the shareholder, increase the value of the asset, and to benefit our shareholder. The program we are doing, let's say the program we are doing in Mount Peak Lithium project, that project is a high risk, high reward action, but given the targeting exercises was assisted by CSIRO and Center for Exploration Targeting from University of West Australia, and also we have a government grant which may cover 1/3 of the cost of this program, I think that's the strategy we use. We're trying to use the minimum limited resource to ask the right question through our drilling program to maximize our shareholders' value. So that's what we're trying to do.
Dr. Zhang, how do you see Australasian metals evolving over the next few years?
I think right now the current market is really tough for a lot of juniors, and we are very fortunate to still have a good cash position, and we have exciting projects and have this healthy partnership or relationship with the government and also research and academic institutions that give us a lot of power, give a lot of weapons. For us, I would think in the next 1 or 2 years, we'll still apply this strategy of this principle, trying to advance all our current existing projects. But of course, I think in the junior space, it's very hard to make a discovery. But with our current company, I think we are in the good position to use this platform to try to find the elephant. If we do works, find the limited upside limited value we can add, we'll switch to the next project. We'll make sure we have a clear focus to wisely use our limited funding.
Thank you so much for your time today, Dr. Zhang. And that was Dr. Chengjiao Zhang, the Managing Director of Australasian Metals. And if you missed any part of that chat, you can catch the full interview on our YouTube channel at Kalkine Media, so make sure to subscribe. I'm Rachel Jones, reminding you to stay apprised and invest wise.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. As the financial year nears its end, investors are offloading underperforming ASX stocks to realise losses and offset gains elsewhere, a common tax strategy known as tax loss selling. With the ASX 200 up around 8% this fiscal year, the incentive is strong. Stocks like Domino's Pizza, IDP Education, Treasury Wine Estates, Sky City Entertainment, and lithium players Mineral Resources and Pilbara Minerals are among the most affected. Domino's, down over 33% this financial year, is a key target. Analysts suggest the sell-off could present a buying opportunity once institutional selling subsides, particularly in deeply discounted stocks. That's the latest from Kalkine's Daily Trending News.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. BlueScope shares have jumped 6.5% in early trading despite a broader market decline, following former US President Donald Trump's announcement to double steel import tariffs from 25% to 50% starting June 4. The Australian steelmaker, which employs over 4,000 workers in the US, is expected to benefit from the hike as a domestic producer. While BlueScope had previously voiced frustration over Australia's exclusion from a tariff exemption, the market appears to view the latest move as advantageous for its American operations. The stock is now trading at approximately $24.22, its highest in recent months. That's the latest from Kalkine's Daily Trending News. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Washington H. Soul Pattinson and Brickworks have agreed to merge, forming a $14 billion diversified company. The two firms have long maintained a complex cross-shareholding, Soul Patts owning 43% of Brickworks and Brickworks holding 26% of Soul Patts, which has historically deterred takeover attempts. Under the merger terms, Soul Patts shareholders will control 72% of the new entity, Brickworks shareholders will hold 19%, and the remaining shares will go to new investors. Soul Patts is offering an implied $30.28 per Brickworks share, representing a 10.1% premium on the stock's last trading price. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Rachel Jones for Kalkine Media. Welcome to another edition of Executive Corner Expert Talks. Today I'm speaking with Chief Executive Officer and Managing Director of Chimeric Therapeutics, Jennifer Chow. Chimeric Therapeutics develop, discover and commercialize novel cell therapies for patients. They believe they hold the key to curing cancer. Here to tell us more is Jennifer Chow. Welcome back to the show, Jennifer.
Thank you so much, Rachel. It's great to be here.
Now, firstly, could you remind our viewers with a quick overview of what Chimeric does and the different disease areas you work in within oncology?
Yeah, I would love to. So Chimeric Therapeutics is a clinical stage cell therapy company. So we focus on cell therapies and developing them for cancer indication. And cell therapies are really all about taking a patient's own cells or healthy donor cells and being able to turn them into some type of drug that can benefit a patient. With our cell therapies, we actually engineer a patient's own cells and then return them to them so that they can help benefit their types of cancer. And right now, our company across our multiple assets is actually exploring 6 or 7 different types of cancer, from acute myeloid leukemia to colorectal cancer to glioblastoma, which is the data we announced today.
Thanks, Jennifer. Now, you recently released positive interim data from a phase 1A trial of lead candidate in patients with heavily pre-treated late-stage brain cancer. For those not familiar, can you start by giving us a little background on this asset?
Yeah, CHM1101, which is otherwise known as chlortoxin CAR-T, is actually the asset on which the company was founded. So we licensed this asset when it was in preclinical, early clinical stages from City of Hope Hospital in California. And it is what we refer to as a first-in-class therapy. And so what really that means is that we're the very first in the world to be developing a chlortoxin CAR-T cell therapy. That particular therapy was studied in preclinical models and showed what we believed was very strong potential from an efficacy and safety perspective, and it moved into clinical trials in 2021. And so it's been working through a phase 1A clinical trial in recurrent glioblastoma patients. And glioblastoma is a type of brain cancer, and sadly, probably the most deadly and most fatal type of brain cancer that there is.
Now, with the data release, could you tell us what the most important things are to know?
Yeah, the data release today was incredibly exciting for Chimeric. So we really were looking to establish 3 different things. First and foremost is the safety, as this was a phase 1A clinical trial. And so the primary objective of those is always safety, to be able to say that we can actually give this to a patient safe. And then the second is to look at response rates. So how many patients are actually able to respond to the therapy? Is it benefiting people? And then the third, probably most important marker that we were looking for was survival. And so that really is all about extending survival for patients with this very deadly disease.
And Jennifer, in the data, you mentioned that the patients were heavily pre-treated or late stage. Now, what does that mean and why is that important?
Yeah, it's something that becomes really important when you think about how you actually can compare the data that we announced today against other analogs or other types of therapies. And so with glioblastoma patients, really what happens is they become diagnosed and they have a first set of therapies, what we refer to as frontline or first-line therapy. Glioblastoma, unfortunately, almost always recurs, and generally that happens around a 8-month mark. And when it recurs, patients move on to what they call second-line therapy. So now this is the second therapy that the patient has had. As they progress from there, they move to third-line therapy and fourth-line therapy. The historical clinical trials really have looked at patients that were in second-line therapy. And so patients really that had just had their disease recur once and then they had the new therapy. Our patients, as you mentioned, Rachel, actually were fourth and fifth line patients. And really what that tells us is these patients were heavily pre-treated, and so they'd been through multiple lines of therapy, and it actually makes them much more difficult patients to treat. So in looking at our data, what really helped us was to be able to understand that these patients were fourth and fifth line patients, because it really helps us be able to assess the expectations of the data that we have.
And can you explain the efficacy results in a little more detail? What do the endpoints of disease control rate and survival reflect?
Yeah, the two different endpoints. So disease control rate reflects how many patients are actually able to achieve disease stability. In this particular trial with CHM 1101, what we saw was that 55% of our patients achieved disease stability, and those were those fourth and fifth line patients. When we compare that to the analogs, what we see is that about 20 to 35% of patients would usually achieve disease stability in second line. So for us, that rate of 55% in fourth and fifth line was extremely positive. The other efficacy marker that we were looking at was survival. And so what we saw with these patients is the median survival for patients that had achieved disease control was 9.9 months, so almost 10 months. And really that's for us, it's very profound. We would expect patients on second recurrence to have about a 7-month survival. So these patients, again, being later line patients, we would expect their survival to be even less than 7 months. So seeing 10 months overall was very, very encouraging for us. We really got excited though when we saw the survival of two particular patients. One patient who we know had survival of 19 months and a second patient who was at about 14.4 months and is actually alive, and we're continuing to follow that patient.
Thanks, Jennifer. And there's such amazing work being conducted by Chimeric Therapeutics. What do you believe is the potential impact on the future of cancer treatment and patient care because of the work that you are doing?
That is the aspiration, right? Our mission really is all about being able to bring cell therapies to more patients to cure cancer. We know that the CAR T-cell therapies that exist right now, a number of which I was very honored to be able to work on, have actually been curative for patients with cancer. So 5, 7, 10 years later, these patients remain disease-free and cancer-free. So that's really been the mission for us. And so we really continue to aspire to be able to bring cell therapies to patients to extend their survival or ultimately to cure cancer.
And Jennifer, what can we expect for CHM 1101 and from Chimeric Therapeutics in the near future?
Well, for CHM 1101, we really are now looking at how do we advance clinical development to the next stage. So a phase 1A clinical trial is really what we refer to as a first-in-human trial. We're looking to make sure it's safe and then looking for an efficacy signal. From there, we move on to a phase 1B clinical trial, and that's what we're going to do now, Rachel. We're really going to look at a phase 1B clinical trial, a dose expansion cohort, where we treat a number of patients to really make sure that the signal that we're seeing in the 1A trial is there and to establish it. From there, that actually allows us to be able to take the information in the clinical trial results to regulatory agencies and talk about how we actually develop a phase 2 trial to be able to approve this therapy and commercialize it so we can get it out to patients.
And Jennifer, could you tell us why you believe that Chimeric is a good investment for people today?
Yeah, that's a great question, Rachel, particularly in this very challenging market. I actually believe that there are 3 reasons why Chimeric is a great investment for people today. The first is that we have an incredibly innovative pipeline and portfolio, and we're actually very undervalued. When you look at it, we have 4 ongoing clinical trials. So we've completed all the early preclinical work that many companies are still doing, and we've moved into that clinical phase. 4 trials ongoing. The second reason is really about how we look at value realization. And we know now that pharmaceutical companies, big pharma, they've raised their bar. So historically, they may have looked at preclinical assets and said, okay, you know, we can help develop this and we'll invest some money or we'll look to out-license it. Now, they are actually looking for clinical data. So knowing that the bar has been raised, we're really entering that point with these phase 1B trials where we can start to really negotiate and discuss value realization for our investors. And then the third point really is about how we are navigating through the challenges of this market. We have been very diligent about cash preservation. We have reduced our staff. We have no office. We're very careful about how we manage our cash. We've been very focused on how we program prioritize, so really looking to make sure we support the things that take us into clinic and are actually supportive of getting to those value realization goals. And then we really looked at, innovative opportunities to business develop. We have been able to start 2 clinical trials with very little funding from Chimeric by working collaboratively with institutions that actually are really interested in further developing our assets. And we've been able, through our team and our expertise and our networks, to be able to bring in non-dilutive sources of funding through business development. So I think those 3 things, when you bring them all together, really make us a great opportunity for investors today.
Such amazing and important work you're doing there, Jennifer. Thanks so much for your time today.
Thank you so much, Rachel. It was great to be here.
And that was Jennifer Chow, CEO and Managing Director of Chimera Therapeutics. And if you missed any part of that chat, you can catch the full interview on our YouTube channel at Kalkine Media, so make sure to subscribe. I'm Rachel Jones, reminding you to stay apprised and invest wise.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. The ACCC has raised concerns that Elders' proposed $475 million acquisition of Delta Agribusiness could reduce competition in rural supply markets. The watchdog's preliminary findings suggest the buyout may lead to higher prices or reduced service quality for farmers, particularly in Victoria, South Australia, and Western Australia, where both companies operate. Elders is Australia's second-largest rural supplier with 245 outlets, while Delta ranks third with 64. The ACCC warned the deal could limit competition nationally, impacting costs for vital farm products. Investigations are ongoing, with ACCC Deputy Chairman Mick Keogh highlighting potential risks if Delta no longer competes independently. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Gold prices fell for a 4th consecutive day after a U.S. trade court blocked President Donald Trump's global tariffs, strengthening the U.S. dollar and reducing demand for the safe haven asset. Bullion dropped as much as 1.1% on Thursday, extending a 2% decline over the prior 3 sessions. A stronger greenback makes gold more expensive for international buyers. Analysts said the court's decision, which undermines a key element of Trump's economic policy, may further weaken gold's appeal. The Trump administration is appealing the ruling, potentially setting the stage for a Supreme Court battle that could reshape global trade policy. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Olivia Harris, and this is Kalkine's Daily Trending News. As Australia awaits this year's minimum wage decision, last year's increase offers useful context. In 2024, the Fair Work Commission lifted the national minimum and award wages by 3.75%, effective July 1. That took the minimum wage to $24.10 per hour, or $915.91 per week for full-time workers, an increase of roughly $33 weekly. The decision impacted around 2.6 million workers, 20.7% of the national workforce, with broader flow-on effects to about a quarter of all employees. The rise was seen as aligned with expected wage growth and contributed only modestly to overall inflation pressures. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris.
Hello, I'm Rachel for Kalkine Media. Welcome to another edition of Executive Corner Expert Talks. Today I'm speaking with Black Canyon Managing Director, Brendan Cummins. Welcome to the show, Brendan. Great to have you with us today.
Yeah, g'day Rachel. Thanks for having me on the show.
Now, to kick things off, could you provide our audience with a brief overview of Black Canyon, please?
Yeah, so Black Canyon, we are an ASX listed company. We listed in May 2021 and we are focused exclusively on manganese. So exploring, discovering, processing manganese, that's really what we're all about. We are a very tightly held capital structure. We've only got 70 million shares on issue and current market cap is quite small, less than $10 million. So there's plenty of opportunity there for investors to get in, I guess, on the ground floor and be involved in an emerging manganese company.
And your company has announced a substantial increase in global mineral resource estimates at the Balfour manganese field. Could you delve into the details of this significant development?
Sure, I'd love to. So when we started the company 2.5 years ago, we listed without any assets. We had some exploration ground and we've gone about exploring and drilling those and have been actually very successful in delineating very large tonnages of manganese enriched shale. So the announcement we put out today is the culmination of some drilling that we completed in July 2023. And very pleased to announce that we've now our total global mineral resources is 314 million tonnes at 10.5% manganese. So to put that into perspective, that is the second largest contained manganese set of deposits in Australia. So we're really proud of that effort. We've done it very efficiently and there's also a high grade proportion of those as well, which is about 99 million tonnes at about 12.9% manganese. So we do have a lot of manganese, no doubt about it, and we're looking to use that manganese to produce manganese concentrate utilised in the steel industry, which is a 1 billion tonne per annum steel industry, and then also looking at high purity manganese sulphate, which goes into batteries. So lithium-ion batteries, depending on the formulation, will have a component of manganese sulphate in there.
Now, there's such pleasing figures there. You mentioned the 314 million tonnes there. That must be very exciting. How does this position the company in the Australian manganese landscape?
So as I mentioned previously, we've been growing this mineral resource and we've done it really quite cost effectively as well because we had our own ground, 100% ground that we acquired through two fairly economic acquisitions. And there was no drilling on those deposits previously. And we've gone out, recognised the opportunity, and with some fairly modest drilling, have come up with 140 million tonnes just from those 100% owned tenements, which is in addition to 170 million tonnes that we had previously defined. So in total, 314 million tonnes. And in terms of the Pilbara, we control the largest manganese deposits across the Pilbara region in terms of manganese. So that's an outstanding achievement for a small company like us to be able to point to 33 million tonnes of contained manganese that we control. And as I mentioned previously, the only other deposit that's out there that's bigger than that is Groote Eylandt, which has been operating for decades. And so we've got that one in our sights, and potentially, we'd like to become the biggest manganese company in Australia.
Excellent. Now, given the recent developments and also your ongoing works, Brendan, can we expect an addition of further tonnes in the immediate future? What can you expect?
So in that last drill program that I completed in July 2023, I only had a limited drill budget to go and assess several targets. So out of the 6 targets that we tested, 5 of those actually came up with significant economic intersections of manganese mineralisation. So 2 of the targets, I didn't have enough drill meters to drill them out comprehensively. So what we've done is actually estimated exploration targets over those. And we're still working through those numbers, but just the scale of those additional targets, several kilometres long, very similar to the other styles of mineralisation. I do believe once we finish the exploration target estimation work, which will probably be early next year, we'll be able to delineate, report back, I guess at that time, about additional tonnages that we have discovered on those targets as well. So the targets are Pickering and Balfour East, which I also mentioned in today's ASX announcement.
Well, we'll definitely be keeping our ears open for that one. Now, Brendan, could you provide an update on the progress of the high purity manganese sulphate test work? And can you shed any light on how this work is contributing to the company's overall objectives?
I think, with manganese, the 2 main usages of manganese are really manganese going into the steel industry, which is, at the end of the day, the bread and butter of any manganese company. It goes into the ferro and silico alloying side of the steel industry, and then it gets fed directly into steel furnaces. But what's really growing, and there's certainly a lot more interest in the midstream processing of manganese concentrate into high purity manganese sulphate. And what we've been able to demonstrate with our material on site, we've got some samples from our KR1 deposit, and we've actually demonstrated that we can produce high purity manganese sulphate, which is then used in lithium-ion batteries, which are ubiquitous across the EV sector, the electric vehicle sector. So we're really quite happy with that. We've shown that we've got really high leachability rates of the manganese coming out of the manganese shales, up to 97% leaching rates. And then we, we're able to demonstrate producing high purity manganese sulphate, which is greater than 99% manganese, which is required for the battery sector. So we'll keep working on that. There's still a bit of work to do. We've done lab scale test work to show that we can produce the high purity manganese sulphate, the battery grade HPMSM as it's called. But now we need to go further, and we've also collected 400 kilos of sample from site, and we'll be running that through additional upscaling test work, which will probably take 3 to 4 months to work through. In addition, we're also talking to potential end users, car manufacturers, etc., who understand that the utilisation of manganese in batteries is probably going to increase, not only in the nickel, manganese, cobalt chemistries, but also in the growing high manganese content batteries, and also the LFMP batteries, which are essentially lithium iron phosphate batteries with manganese also included in that chemistry. So it's an exciting time for battery chemistries, and Black Kenyon's really committed to being able to produce high purity manganese sulphate or other chemical compounds, manganese chemical compounds that are required to go into these batteries. And we're looking at locations within Australia, and then also potentially East Coast Australia, but also mostly in WA.
It's certainly a very interesting space to be working within at the moment. So just finally, Brendan, what can we expect from Black Canyon in the near-term future?
Well, where do I start? 2023 has been another pivotal year for the company. 2024 will probably be more of the same. What we want to do, we do know now we've got scale, considerable scale, and we're going to re-optimise, I guess, some of the parameters we used in the initial scoping study test work across some of the deposits initially in the Balfour manganese field. And we'll probably get a firmer idea on the costs going in there, particularly the mining and transport costs, so we need to understand that better. And then we can start nailing down the environmental approvals, permitting pathway that we also need for these deposits. So quite a bit of work to be done there. We've really tried to minimise the risk associated with these projects, and obviously the first one is the resource risk, and I think we've answered that in spades with a huge resource. Now we're looking at the processing of the manganese concentrate, and we've shown previously that we can produce a 30 to 33% manganese concentrate, which is then used in the steel industry. And transport, also a very large part of the OPEX of these operations. We need to de-risk that further, so we'll be doing that in 2024. And that's just to produce manganese concentrate, and we haven't even touched what we're doing for the high-purity manganese sulfate, which involves much more test work. And we hope to encourage some interest from the end users in relation to that high-purity manganese sulfate as well. So yeah, Black Canyon's got quite a bit to do next year, and we just keep on putting the foundations in place to ensure that we've got a robust series of deposits to evaluate next year.
It definitely seems like a huge growth period for Black Canyon. Brendan Cummins, thank you so much for your time today.
Thanks, Rachel, and I look forward to giving you an update next year.
Absolutely. Thank you very much. And that was Black Canyon Managing Director Brendan Cummins. If you missed any part of that chat, you can catch the full interview on our YouTube channel at Kalkine Media, so make sure to subscribe. I'm Rachel, reminding you to stay apprised and invest wise.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. The Victorian government plans to increase mining fees by up to 234%, drawing strong opposition from the industry, which warns it will deter investment. The fee hike, aimed at covering regulatory costs, would make Victoria's exploration licence fees the highest in Australia. Critics, including the Minerals Council and opposition MPs, argue it will harm critical mineral development and inflate construction costs amid a housing crisis. The government says the increase is needed to recover a $13.7 million shortfall and improve approval timelines. Industry leaders likened the move to anti-business governance, accusing the state of pushing out mining investment. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Oil prices climbed after a U.S. trade court ruled President Donald Trump's global tariffs illegal, easing market fears of a broader economic slowdown. West Texas Intermediate rose above $62 per barrel, while Brent neared $65, extending earlier gains. The court decision, which may still be appealed, lifted investor sentiment that had been dampened by months of trade tensions. Since January, oil has faced pressure from revived OPEC Plus output and tariff-driven uncertainty. Meanwhile, U.S. crude inventories fell by 4.2 million barrels last week, according to the American Petroleum Institute. OPEC Plus is set to meet Saturday to decide on July production levels. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. REA Group, owner of realestate.com.au, faces an ACCC investigation after hiking agent subscription fees by up to 78% and raising listing prices across Australia. Agents accuse REA of misusing market power, driving up vendor costs while tightening agent margins. The probe follows growing industry complaints about REA's dominance and opaque pricing structures. Critics claim REA stifles competition by controlling advertising, finance, and sales platforms. REA has acknowledged the ACCC's request for information and says it is cooperating. Analysts have long warned that REA's steep annual price hikes could trigger regulatory scrutiny, with some questioning the sustainability of its high valuation. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Rachel Jones for Kalkine Media. Welcome to another edition of Executive Corner Expert Talks. Today I'm speaking with Julian Woodcock. Julian is Managing Director of Viking Mines. Welcome to the show, Julian.
Hey Rachel, thanks for letting me be here.
Great to have a chat with you today. Now, firstly, we'd love to get your perspective on the global vanadium supply and demand dynamics and how you believe they might evolve over the coming years.
Yeah, that's a good question. Vanadium is a commodity that a lot of people don't tend to know much about, but it's around us all the time. 90% and more currently goes into the steel sector, and it's used for strengthening the steel and construction. So that really is the base load of where supply goes. But really, from my perspective, the exciting growth range is within the vanadium redox flow battery, or the VRBs as they can be known. This market share has grown significantly over the past few years, and it's now expected to peak at around 10% of global vanadium supply going into the VRBs for 2023. It's this sector which is poised for further significant growth as the vanadium batteries are adopted for energy storage. And there's forecasts out there predicting more than 50% of vanadium production is going to have to go into these batteries. Now, the steel sector is still going to need to maintain its consumption. We're still going to be building buildings and putting up significant structures. So in order to meet that supply that's going to be required for the batteries, we're going to see an increase required for vanadium production globally by more than 50%. So I really think that there's a great opportunity within the vanadium sector to see substantial growth.
Absolutely, it sounds absolutely fascinating. Now, I'd love to ask, how is Viking Mines positioned to capitalise on the growing use of vanadium in the global decarbonisation efforts?
Well, as I mentioned, the battery sector is poised for that growth, which is going to see vanadium required much more extensively. And we're well positioned to capitalise off that with our flagship asset, which is the Canegrass Battery Minerals Project. This is a rather modest 79 million tonnes of 0.64% V2O5, or vanadium pentoxide, which translates to more than £1 billion of contained vanadium. We're rapidly advancing this asset, and that's well timed with the forecast growing demand for vanadium in battery storage. In addition to the vanadium, however, we've got additional strings to our bow. The resource contains a substantial amount of iron. The mineralisation is hosted in magnetite, so we can see and expect future credits for the iron content. We've also got titanium, copper, nickel and cobalt, and hence the reason it's a battery minerals project, because it's got a suite of different elements. So they all have the potential to add significant value for the project. So I think Viking and our shareholders are really well positioned to benefit through capital growth of the company from the growing use of vanadium globally.
Now, if we could just talk a little bit more about Canegrass. You recently completed an extensive 7,500 metre GIL program at Canegrass. Could you explain the focus of this program and the results that you received there?
Yes, definitely. So for context, the resource that I just mentioned is actually split into two deposits that are situated about 5 kilometres apart, and those deposits are called kinks and fold nose. From our geological investigations which we've been completing over the last year, we were confident that there was an extensive amount of additional mineralisation that hadn't been tested, looking to join those two areas together. So we planned a drill program to test that concept, and we looked to drill both within the current resources, looked to extend them to areas where we knew they were extending because we'd seen the mineralisation on surface, but the resource didn't encompass those areas. We also saw opportunity for new targets outside of the resources. So right in between the two existing resource areas, there was an outcropping area we called King South, which had no resource reported. And our goal with that work was looking to define a higher grade component within the overall resource of around 30 million tonnes at about 0.9% vanadium pentoxide. One of the reasons for this is we've seen other companies demonstrate positive economic studies with that kind of scale of resource. So the results we received through the drilling have been excellent. There's a lot of information on our website if any investors would like to have a look. And they confirmed our thoughts. We intercepted some thick zones of mineralisation up to 40 metres in thickness, grading 0.74%. And there were high grade hits as well. And an example of that would be 17 metres at over 1% vanadium. So I believe we achieved all of our objectives. We extended the known limits of mineralisation. We defined a new area which is in the resource model. And all of that bodes really well for future work on the project.
Absolutely, that's fantastic news for cane grass. Now, Viking recently engaged MEC Mining for an updated mineral resource estimate for cane grass. What can you tell me about this and what progress is on track for release in the December quarter?
Yeah, MEC Mining is a consultancy firm, well experienced in putting resource models together. So we've worked closely with their geologists and mineral resource experts in order to work on an updated resource model for the project. We're currently re-estimating the resources at Kinks and Foldnose, which I've mentioned. And in addition, we'll be bringing in the Kinks South area, which is a maiden discovery. So there's no currently published resource for that, and that'll be adding to it. All of this will bring in a substantial additional resource, which is outcropping at surface and should significantly contribute to growth of the project. The work's been progressing well. We're definitely on track to release results within this quarter. And personally, I'm expecting a material improvement in the quality of the resource, and hopefully we'll achieve that target that I've stated, around 30 million tonnes at 0.9%. But that will be within a larger overall resource. As I've said, the current resource sits at 79 million tonnes at 0.64. We expect that to grow substantially.
And what can you tell me about the second stage metallurgical test work?
Yeah, we've talked in some of our releases about undertaking some further metallurgical test work. Metallurgy is a really critical step for these types of deposits. It's one thing to define the resource, but you have to work out a way to extract the valuable commodities. We completed an initial round of test work earlier this year on samples we collected from the drilling that we completed, and we got some excellent results. The test work we undertook was preliminary in producing a magnetic concentrate, which is the first step in extracting the commodities. And that concentrate graded over 1.4% V2O5 and importantly more than 60% iron. That's important because it demonstrates that we could be producing a concentrate that not only has the value of the vanadium within it, but also the value as an iron ore product that we could look to market. The second stage test work is taking this a step further. This test work will take that concentrate and then we will be producing the final vanadium product known as V2O5 flake from that concentrate. The results from the first test work were very encouraging, with more than 90% of the vanadium recovered. We're looking forward to being able to demonstrate we can produce the end product of V2O5 flake.
And if we could just talk about financials for a second, what can you tell me about the funding for your upcoming exploration work?
Yeah, we're in a very enviable position. We've got a very strong cash balance of 5.6 million Australian dollars at the end of the September quarter. So all of our activities funded from that balance. That means there's no need for any additional funding at this stage to bring in, and it benefits our shareholders by mitigating the need for any further dilutive capital raises.
And just finally, what are some of the crucial milestones that Viking Mines plans to achieve in the year ahead?
That's a good question. We are initially focusing on getting that resource updated and completed, and the metallurgical test work that we just talked about. And then once we've got these results, we'll be able to look at making the decision to move forward to the next step, which will be to undertake a scoping study on the project. In order to complete that scoping study, there'll be an element of doing desktop studies, but we may also look to undertake some further drill testing at cane grass and additional met test work. But the main objective will be to assess the potential economics of the project. At this stage, I'm very optimistic that we've got the makings of a very significant vanadium project in play. We also have some other tenure. We have some projects in Western Australia, about 2 hours north of the town of Kalkine, in a prolific gold district, which is also proving up as an emerging lithium province. It's very close to the Delta Lithium, an ASX listed company's Mount Ida lithium project, which has defined over 12 million tonnes of lithium in pegmatites there. We've got a number of pegmatites on our ground, and we're in process of planning some field activities which allow us to assess those and the potential of them for discovery of hopefully some lithium, and in addition to the gold that exists in the area.
It sounds like it's going to be a really busy time next year for Viking Mines. Thank you so much for your time today, Julian.
Thanks very much, Rachel.
Thank you. That was Julian Woodcock, Managing Director of Viking Mines. And if you missed any part of that chat, you can catch the full interview on our YouTube channel, Kalkine Media. So make sure to subscribe. I'm Rachel, reminding you to stay apprised and invest wise.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. 5 years after destroying the 46,000-year-old Juukan Gorge rock shelter, Rio Tinto has signed a landmark agreement with the Putu Kunti Karama and Pinakura, PKKP, people to protect heritage sites on their Pilbara land. The deal grants PKKP traditional owners a stronger role in mine planning and heritage preservation, embedding principles like free, prior and informed consent. Rio Tinto acknowledged its past failures and expressed ongoing regret for the destruction. Both parties hailed the agreement as a model for culturally respectful mining, aiming to avoid future conflict through co-management and early consultation in mining operations across PKKP country. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Olivia Harris and this is Kalkine's Daily Trending News. Telstra has become the first Australian telco to enable satellite-to-mobile text messaging, partnering with Elon Musk's SpaceX using Starlink's direct-to-cell technology. The service allows users to send and receive SMS messages in areas without traditional mobile coverage, initially available on Samsung Galaxy S25 devices. Coverage extends across mainland Australia and Tasmania, excluding the radio quiet zone. While voice calls and internet services are not yet supported, Telstra plans to expand functionality. Messages may take a few minutes to transmit and emergency texts are not supported. The move positions Telstra ahead of rivals Optus and TPG, who are yet to launch similar services. That is the latest from Kalkine's Daily Trending News. I'm Olivia Harris. Hello, I'm Olivia Harris and this is Kalkine's Daily Trending News. China has accused the United States of seriously violating a recently agreed trade truce, warning it will respond with resolute and forceful measures to protect its interests. The strong statement from China's Ministry of Commerce on Monday suggests the fragile agreement reached last month in Geneva is already faltering. Tensions are rising just as high-level talks were set to resume between Beijing and Washington. The warning comes amid broader geopolitical and economic friction, raising concerns of renewed tariffs and further strain on global trade. That is the latest from Kalkine's Daily Trending News. I'm Olivia Harris.
Hello, I'm Rachel Jones for Kalkine Media. Welcome to another edition of Executive Corner Expert Talks. Today, I'm speaking with the Managing Director and CEO of Radiopharm Theranostics, Riccardo Canavari. Now, Radiopharm Theranostics is an ASX-listed healthcare company focused on developing radiopharmaceutical products for therapeutic and diagnostic applications in areas of high unmet needs. Recently, the company received critical approvals to advance its cancer studies. Thank you for joining us today, Mr. Canavari.
Thank you for having me.
Now, just to remind our viewers, could you please give us a brief overview of Radiopharm Theranostics and what you do?
Radiopharm Theranostics core business is radiopharmaceutical therapies and imaging. So it's a new modality to image or treat cancer in patients with different solid tumors.
And let's talk now about the latest advances in the lung cancer trial that you have with Genesis Care. What can you tell me about the importance of this trial?
Well, this is exciting. First of all, because it's in Australia. We got ethics committee approval from Princess Alexandra in Brisbane to start our phase 1 clinical trial. This is going to be a therapeutic trial in patients with non-small cell lung cancer. We will test our molecule from low dose to higher dose to find the right approach, then to go to phase 2. So really exciting news to bring the technologies here for patients suffering from this disease.
And your pancreatic clinical trial has just been given the go-ahead.
Well, very recently, I guess it was 10 days ago, FDA told us you are ready to go. And so we are planning this trial. It's an imaging phase 1 trial. And this time we'll be performing in New York City. We'll be at the Albert Einstein Hospital, and we are going to image 9 patients with pancreatic cancer. The objective is really to detect metastases, big or small, in this patient population, to find the right dose and to be sure that the images are very accurate so that oncologists can detect this cancer earlier and better than today.
And Mr. Canaveri, what else is happening in regards to other trials? What stages are they at?
Yeah, we just share about 2 molecules, but we have additional 2 that now are in development. One molecule, again, for imaging is for patients with brain metastases. In this patient population, again, is very important to detect brain metastases as soon as possible so that the oncologist can treat the patient properly. This trial is advanced because we already have phase 2A data. And now we are in conversation with the FDA to start in US a phase 2B. So that's of course important for the pipeline of the company because this is the most advanced technology. And the other one, at this time we are talking about breast cancer. So we are trying to cover a lot of unmet medical need in the space. And breast cancer as well is an area where patients have good solution, but when they progress, they really need something new. We are testing one of our molecule in patients with HER2 specific breast cancer. The trial will be performed in US, in the Indiana University, and we are submitting IND request by the end of this year. So in total we have 4 programs either started or ready to start, and this for us is a significant transformation from being a preclinical to become a clinical stage company with multiple assets.
And what can you tell me about what other major milestones Radiopharm has achieved this year?
Well, advancing our pipeline to the level that we start human trial was our objectives. We do have additional molecule in our pipeline. We are still in the phase of producing the molecule with the right quality and to complete the preclinical trials. So I'm sure I have more to share next time that I will come to Australia. It was great to be here in Sydney, beautiful day. You know, in US it's getting colder after Halloween, so it's great to be here.
It's such amazing work that you're doing. Thank you so much for joining us today.
Thank you.
And that was Managing Director and CEO of Radiopharm Theranostics, Riccardo Canaveri. And if you missed any part of that chat, you can catch our full interview on the YouTube channel at Kalkine Media, so make sure to subscribe. I'm Rachel, reminding you to stay apprised and invest wise.
Hello, I'm Olivia Harris, and this is Kalkine's Daily Trending News. Treasury Wine Estates has downgraded its earnings outlook following weaker than expected U.S. sales and the impending exit of a key California distributor, which accounted for about a quarter of TWE America's net sales. Economic uncertainty and softer consumer demand for wines under $15 United States have impacted its premium portfolio shipments. Shares initially fell by up to 3% before recovering modestly. The company expressed confidence in its ability to transition to a new distribution arrangement in California, citing its long-standing network across the U.S. market. That's the latest from Kalkine's Daily Trending News. I'm Olivia Harris.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. US President Donald Trump will meet with Chinese President Xi Jinping to resolve rising tensions over critical mineral supply chains, according to Treasury Secretary Scott Bessent. The US accuses China of withholding essential materials used in electronics and electric vehicles, despite previous trade agreements. Bessent warned that China's actions undermine global supply reliability, affecting not only the US but also India and Europe. The issue has become urgent for US carmakers relying on these minerals. While hoping for a resolution in upcoming talks, Besant hinted at uncertainty over whether China's actions were deliberate or a systemic glitch. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Olivia Harris and this is Kalkine's Daily Trending News. Elon Musk has stepped down from his controversial government role and returned to his private ventures, spearheading a $7.7 billion capital raise for his AI company, XAI. The departure follows months of fierce infighting within Donald Trump's administration, where Musk clashed with key figures like Treasury Secretary Scott Bessent and Trade Advisor Peter Navarro. Musk's aggressive cost-cutting at the Department of Government Efficiency reportedly saved over $170 billion, but also earned him powerful enemies. As he exits Washington, Musk refocuses on the AI arms race, seeking major investment to advance case development. That is the latest from Kalkine's Daily Trending News. I'm Olivia Harris.
Hello, I'm Lauren Hayes from Kalkine Media and welcome to another edition of Executive Corner Expert Talks. Today I'm speaking with David Breeze, Managing Director and CEO of BPH Energy. BPH Energy, with ASX code BPH, is a diversified company listed on the ASX with investments in biomedical technologies and resources. The company holds a 35.8% stake in Advent Energy, an unlisted oil and gas exploration company. BPH also has interests in clean hydrogen technologies and medical device neurotechnology company Cortical Dynamics. Thanks for joining us today, David.
Thanks indeed for the opportunity to speak today.
Now, firstly, for those investors not familiar with BPH, could you please start by providing an overview of the company?
So BPH has three key areas of investment. That is in Advent Energy, in which itself has a significant 85% interest in PEP 11 offshore New South Wales. And in addition, it has through both direct and indirect, it has just under a 20% interest in clean hydrogen technologies, which is a technology which is developing a technology to produce turquoise hydrogen, which is converting natural gas into both hydrogen and carbon, and in this instance it's a carbon nanotube product. And we also have an investment in Cortical Dynamics, and Cortical Dynamics, of course, is involved in anesthesia technology to assist the anaesthetist to keep the patient optimally anaesthetized, but also to assist analgesia. And each of those technologies is looking to move into, or investments is looking to move into, a value inflection point in the near term. So I'll go just a moment to the PEP 11 project. If you look over my shoulder, you'll see the map of onshore and offshore gas permit areas in East Coast Australia. And in fact, what you see is very few gas permit areas that are capable of meeting the requirements of the East Coast energy market. And in fact, the energy market in the East Coast is in crisis mode. And if you look at what's occurred over the last couple of days or even the week in New South Wales, South Australia and Victoria, AEMO has had to intervene into the market to ensure price stability or availability of electricity, and gas prices have gone as high as $14 a gigajoule in New South Wales over this last weekend. As the cold weather has come in, we're really seeing the need for new sources of gas, and of course when you look at Pepperleven offshore New South Wales, then that becomes a potential key source of gas for future supply. And the government has just announced the future gas strategy and stressed the need for new sources of gas going forward into 2030 and right throughout into 2050. Likewise, if you look at hydrogen, the need for hydrogen to assist in the clean energy transition becomes a key element of future energy changes as we move into the net zero transition. But the beauty of the hydrocarbon process that we have with clean hydrogen technologies is that it creates, with no CO2 emissions, a product which is the carbon nanotubes, which is a composite of carbon nanotubes or carbon and alumina, which of itself has a very high value and in compounding into all sorts of areas like space, batteries, and paints and other polymers and manufacturing uses. So we actually have a wide range of products there contained within the investment areas of the companies that we're involved in.
Now, BPH operates, like you said, across the resources and medical technology sectors. How do you navigate and balance investments across the different industries?
In fact, it's remarkably easy. It gives us a balance of risk, but also significant potential upside in each of those investment areas. The clean hydrogen, for instance, if you look at what's occurring, it's now moving from scale up of pilot production and into a full-scale production, and that's the next step which we're currently raising capital for. And of course, each of clean hydrogen and cortical dynamics is managed by an independent CEO, and they of course manage all of the elements of the day-to-day management of those businesses and driving those companies forward to commercialisation. Cortical, by the way, by way of expansion, has already got approval for distribution of its product into the American market through its FDA certification that it recently gained. It has CE approval in Europe, and it has TGA approval in Australia. It also has approval for distribution and sales into the Korean marketplace. Now, it's currently moving into the next gen or phase 2 of its product, and it's looking to have that phase 2 of the device, which is the screen, the hardware, software, and the sensors, upgraded into for acceptance of the new generation of product, and that will enable Cortical to move into a sales place within the next year is our objective.
And Advent Energy accepted the renewal of Retention Licence 1. What does this mean for BPH?
Northern Territory is short gas. The area that we are in is also short gas. We're only around 90 kilometres from the Blacktip pipeline, and the Blacktip pipeline through the shortfall in gas out of the Blacktip field gives us an opportunity to supply into the entire Northern Territory gas requirement. In fact, the Northern Gas Pipeline was recently shut down as a result of a shortage of gas coming out of that area. Now, where we are in RL1, we are the only potential producer of gas into the whole of the area around Kununurra, so that we have the capacity to move the RL1 into production. And most importantly, the state and federal governments have most recently extended the highway right past the tenement area where we have RL1, and that really enables us to move into full-scale commercialisation of that retention lease.
And what progress has Clean Hydrogen Technologies made in its plans to commercialise its unique hydrogen production technology?
It is already selling its clean carbon or carbon nanotube alumina product, most importantly into the marketplace for trial samples, and getting very good results. We've most recently put an announcement out in relation to that on the ASX through BPH. And of course, around the world, and that was best illustrated when Bill Gates came here to Australia and he met with both the Prime Minister and the Energy Minister, Mr. Bowen, and he told both of them that in their search for clean hydrogen, that they in fact should look very closely at turquoise hydrogen, because that was an area where Bill Gates through his companies had invested. So that illustrates the potential value in one way, but in reality the size of the market is again illustrated by the budgetary enhancements which the Australian federal government has just put into place, but also the budgetary enhancements that the US government has most recently introduced as well.
And the company recently completed a placement. How will those funds be used?
It will enable us to move through the next phase of the development of PEP 11, subject to the approval process for the extension and variation of the PEP 11 permit. And it's obviously funded us to assist that, but also to work on the RL1 area as we go through the necessary regulatory enhancements there. But it will also assist us to fund Cortical further through that next gen of its technology into those marketplaces that I described earlier.
And lastly, David, what can we expect to see from BPH going forward?
The way in which I've just covered the areas of development across clean hydrogen and across cortical dynamics and the need for gas in the eastern states really show you the potential value uplift objectives that we can have within each of those areas, which can in fact reflect significantly into the BPH share value, and we're certainly working hard across each of those areas.
It does sound very interesting indeed for BPH. Thank you for your time today, David.
Thanks indeed. Thanks for the time.
And that was David Breeze, Managing Director and CEO of BPH Energy. And if you missed any part of that chat, you can catch the full interview on our YouTube channel at Kalkine Media. So make sure to subscribe.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. Australia's mining exploration spending dropped to a 4-year low in the March quarter, falling 19% to $643.5 million, according to BDO. The decline marks a sharp reversal from the recent boom driven by demand for energy transition metals like lithium and nickel, whose prices have since collapsed due to oversupply and geopolitical uncertainty. Capital raising also fell sharply, with only 26 companies securing over $10 million, down from 57. While most sectors suffered, gold exploration surged, buoyed by record prices above $3,000 an ounce. Analysts say investor appetite for lithium and nickel has dried up amid a deep commodities downturn. That's the latest from Kalkine's Daily Trending News. I'm Melissa Malley.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. A major fallout between Elon Musk and Donald Trump has triggered a political and financial storm, with Musk alleging Trump's name appears in the unreleased Jeffrey Epstein files. The feud began after Trump labeled Musk crazy and threatened to cancel government contracts and subsidies for his companies, including Tesla and SpaceX. In retaliation, Musk accused Trump of being ungrateful, claiming his financial support was critical to Trump's re-election. He further escalated the row by calling for Trump's impeachment. The clash sent Tesla shares plunging 14.3%, wiping out roughly $150 billion in market value. With federal contracts worth $34.5 billion since 2000, any move by Trump to sever ties could have major legal and national security implications. The White House declined to comment on the Epstein claim. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. Apple is expected to unveil iOS 26 at WWDC 25, marking the most significant iPhone interface update in over a decade. Inspired by its Vision Pro headset, the redesign will feature translucent, floating panels and more circular app icons, creating a unified aesthetic across all Apple platforms: iPadOS, macOS, watchOS, tvOS, and visionOS. The renaming of Apple's operating systems to reflect the release year aims to keep ahead of rivals like Samsung. Though AI was the focus of last year's WWDC, Apple has struggled to deliver promised features. Analysts now await signs of real progress, with potential Gemini AI integration from Google also on the cards. That's the latest from Kalkine's Daily Trending News. I'm Melissa Malley.
Hello, I'm Lauren Hayes from Kalkine Media and welcome to another edition of Executive Corner Expert Talks. Today I'm speaking with Dusko Levidovic, Managing Director of Radon Resources, ASX code RDN, an exploration and development company dedicated to the discovery and development of lithium and nickel copper projects located in the Pilbara region of Western Australia. Thanks for joining us today, Dusko.
Thank you for having me.
Now, firstly, for those investors not familiar with Radon Resources, can you please provide an overview of the company?
Listed since 2018, we've got a large portfolio of projects spread across the Western Tethyan in Eastern Europe, which are mostly copper, gold, porphyry and epithermal projects, and the Pilbara region of Australia, where we have quite a significant portfolio of projects within, the copper sector, nickel, copper, palladium, and most recently, I think over the last 9 months, we've defined some fantastic lithium potential with our Andover South project. That is the strategic focus for the company in the near term. We're gearing up for a drill program over there. The project has defined wide outcropping, high-grade lithium-bearing and spodumene-bearing pegmatite mineralization, which is immediately adjacent to the Andover discovery, which I'm sure everyone in your audience knows about.
Because I did want to ask you just about the potential that you see for the lithium exploration and development for the Andover project that you mentioned.
In terms of development, so we're still in a, let's say, pre-drilling stage. We're about to drill the project. What we're seeing literally across the road from Azur's deposit is that the pegmatites are very wide. These are some of the biggest intercepts we've seen in the world over the past 18 months. We're seeing similar style mineralization and similar size pegmatites, which we hope will be reflected from the drilling down at depth as well. The project is located near excellent development infrastructure. So if we do have success with our upcoming drill campaign, the potential for development for this project, also taking into account that we're adjacent to one of the biggest lithium discoveries in Australia, I think is very good.
That was what I was about to ask you. With the final heritage report being finalised, the Andover drilling begins soon. So other than what you just touched on, what are the expectations for the drilling program?
The expectations are that we're going to have a discovery. So the question is right now, so we know we have pegmatites, we know we have pretty high grade mineralization, up to 4% Li2O. So the expectations are that we start seeing this mineralization, 50, 100 meters down, and then from there we'll be stepping back and testing at greater depths, because what we're seeing across the road at Azur is, with Azur's drilling, is that they've managed to define very broad pegmatites at significant depths. So we hope that we're part of the same system. We believe we're part of the same geological system, and that drilling will yield similar success.
And how does the Mount Shoal lithium project play into Radian's overall lithium strategy?
So what we did post-discovery of our Andover South projects is we went back and we had a look at our entire portfolio in the Pilbara with the view to evaluate it for lithium. These were all projects which were explored for previous commodities before. So several soil sampling campaigns have defined quite large anomalous areas on the Mount Shoal project, which once again is just down the road from our Andover South project, as well as on the Arrow project, which we initially were exploring for gold. So the significance is that we've managed to define a portfolio of lithium projects without really going out and having to acquire them. So it was somewhat fortunate because, like I said, the projects were acquired for different commodities and the focus was on different commodities. But all of a sudden we have a significant portfolio in the Pilbara, and we defined it pretty quickly.
And do you have an update for the Mount Shoal nickel copper project?
Certainly. So that project is, again, it's just down the road from Karratha. It's supported by excellent infrastructure. And with our focus being on the Andover South lithium project right now and preparing for the drill campaign there, earlier in the year, we entered into a strategic partnership with First Quantum Minerals. They will be sole funding the exploration and development of the project, and Radian has a free carried position all the way through into development. The significance, again, is that it's just so well supported from an infrastructure point of view. It's an advanced project. All the geophysics and the mapping that's been undertaken over the last 6 months supports our hypothesis that the project has the potential to be significantly larger than what was historically believed. And we hope that the upcoming drill campaign will confirm that. If that is confirmed, I think Radian is really set up with potential across multiple projects to generate a very large discovery.
And lastly, can you please provide some more colour on the recent ASX announcement of the partnership with Manila Co. over the Arrow Gold project?
Certainly. So just for reference, the Arrow Gold project was actually one of the reasons why we entered into the Pilbara. We were focused on the gold at that point. And this was after discovery of the Hemi deposit by De Grey. We're in the same geological environment along the same structural trend with a lot of gold anomalism, only about 35 kilometers away from the Hemi discovery. So management decided, as our focus is going to be very clearly on the Andover South project, we want to see our entire portfolio being worked. We want money being spent on it. We entered into a joint venture with Molina, and they will be initiating quite an aggressive drill campaign over the following months, which we hope, may lead to a discovery and ultimately just provide even further upside to our shareholders.
It does sound very interesting indeed. Thank you for your time today, Dusko.
Great, thank you.
And that was Dusko Ljubiovic, Managing Director of Raiden Resources. And if you missed any part of that chat, you can catch the full interview on our YouTube channel at Kalkine Media. So make sure to subscribe. I'm Lauren Hayes. Thanks for tuning in.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. Australia's corporate watchdog, ASX, has launched a 2-year trial to accelerate the IPO process in response to the country's worst listings slump in over a decade. The move aims to shorten the IPO timeline by up to a week by allowing companies to submit offer documents for informal review before formal lodgement. The initiative follows a prolonged period of low IPO activity on the ASX, with companies favouring private capital and takeovers rising. ASIC Chair Joe Longo insists the slowdown isn't structural but is seeking feedback to boost IPO appeal. That's the latest from Kalkine's Daily Trending News. I'm Melissa Malley. Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. Shares in Japanese hotel developer Metaplanet surged after the company announced plans to raise $5.4 billion to expand its Bitcoin holdings to 210,000 by 2027, equivalent to 1% of the total global supply. The move mirrors the strategy of US firm MicroStrategy, whose market value soared by heavily investing in Bitcoin. Metaplanet, which pivoted from hospitality to crypto in 2024, has rebranded itself as a Bitcoin treasury company. CEO Simon Jerovich described the transformation as moving from hotelier to hodler. The company's bet is that Bitcoin's rising value will outweigh share dilution risks. That's the latest from Kalkine's Daily Trending News. I'm Melissa Malley.
Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. BHP is weighing a return to the nickel sector via a $1.5 billion mine project in Tanzania, potentially reviving its nickel ambitions after mothballing its costly West Australian operations in 2024. Partnering with Lifezone Metals, BHP's Kabanga project could produce nickel at just $7,000 per ton, far cheaper than Indonesia's dominant market and well below BHP's previous $22,000 break-even price in WA. Despite current nickel prices hovering at $15,348, the oversupplied market and cheap Indonesian output had forced BHP to write down Nickel West by $5.4 billion and triggered $200 million in losses last year. However, environmental and social concerns tied to Indonesia's nickel production may give Kabanga a competitive edge. A final investment decision is expected as soon as next month. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Welcome back. Australasian Metals Limited is a mineral exploration company focused on precious battery metals. The company's project portfolio comprises 2 gold projects located in Queensland and 2 lithium projects situated in the Northern Territory. The company has an option agreement with Verdant Minerals Limited regarding the Dingo Hole high pure quartz project. Dr. Qingtao Zheng is the Managing Director of Australasian Metals Limited. He earned his PhD in geology from the Centre of Exploration Targeting at the University of Western Australia in 2013. With expertise in geology and commercial aspects, he has consulted for Eldorado Gold Limited, CSA Global Australia. Since 2015, Dr. Zheng has been actively involved in exploration and corporate transactions across Asia. His contributions to academic literature include several papers on orogenic gold and structure control gold geological studies. He holds memberships in the Australasian Institute of Mining and Metallurgy and the Society of Economic Geologists. Presently, Dr. Zheng serves as a non-executive director for ASX-listed Winsome Resources Limited and non-executive chairman of Oceania Lithium Limited. Dr. Zheng, it's a pleasure to see you today. Now, if we can start by having you talk us through why you started with the high pure quartz industry.
Yeah, that's an interesting story. As Australasian Metals are actively exploring lithium in Northern Territory, and we complete a diamond drill program in our Mount Peak lithium project. Unfortunately, we didn't find big lithium deposits, but we intersect a lot of pegmatite. And then I start to look at what the potential economic outcome of pegmatite. And then I read this interesting paper talking about high purity quartz, and that high-end products can reach as high as to 50,000-60,000 US dollars per ton, but you need really pure stuff. So we did some assays on our own drill hole, and I start looking at this region, and then I recognize this project, Dingo Hole, which is not too far away from us to the east, and I checked the historical data, looks amazing. And in the meantime, my experience is in the junior resource industry. You need to get your commodity right, because once you are in the right industry, you will do really well. I personally, and also my company, has done really well in the lithium space because we got into early, we got an exciting exploration program. Our share price, if I can go back to the history, run as high as to 92 cents, right now 7 cents. So I say, what could be the next thing? Could be high purity quartz. And since second half of last year, I got a lot of contact from China, came to Australia all the way looking for high purity quartz because that premium price and big demand. So that's the reason I shift my company's focus from lithium into high purity quartz. But still in the familiar backyard, Northern Territory, everything is in Australia, our portfolio, so we're very comfortable to operate there.
So in some respects you could call it a silver lining.
Yes, I like that
and
word.
I also observed that you've kept an open mind, and that could be attributing to much of the success.
Oh, definitely. As a junior, you have to keep it always like that. I would think before the company reach 100 million market cap, you need to always looking for new opportunities. That's the space we are in.
Well, we understand that Australasian Metals is currently finalising the due diligence on the Dingo Hole highly pure quartz project. Could you elaborate on the scope of this work and when it is expected to be completed?
So we have completed our first fieldwork campaign. We did a drone survey on the outcrop, and there's a lot of historical data already available from the previous owner, and they did close to 40 samples. They found the right consultant did a lot of study on this material, but they shifted the focus into phosphate. So this asset for them is a non-core asset, has been sitting there for 8 years, no more work. So our due diligence, what we want to find out is, for any project to work in Australia, we need a scale and we need a quality. So that's the two major things we want to check it out. So our geologists went there, did mapping and did sampling, cover the area, And along that trip, we already engaged a consultant from SRK Consulting Group, which are a reputable independent mining consulting group. They did the field work with us. So potential outcome of the trip, we would love to have an exploration target range to be defined, which give us a scope of future. If we do drilling, if we do more work, what's the potential resource base will look like? So that's the potential outcome we are going to deliver, I would think, by the end of this month. Maybe while this thing is made, this video is made, we may, I would think, the week after next, we will release to the market.
The clock is ticking.
Yes.
Based on your review of historical data, as you mentioned, what can you tell us about the potential of the Dingo Hole High Pure Quartz project?
You can answer it in a very short way, or it can dig yourself into a big space, because there's a lot of different applications of this high purity quartz, for the high purity quartz. Like for glass, that's a cheap application, and then when you upgrade to like glass for the car, and then like a special optical lens, and then if your purity is there, then you may be able to tap into the solar panel system, the industry, and your purity is further uplifted. You may reach to semiconductors, chips. So that's what I like this space, because we are exploring lithium and now we are exploring silicon. Look at what's booming right now. People talk about AI. People talking about this, all the computer things can do. But fundamentally for the material, they need silica. That's the chips. So I think if we can define the results of the scale, prove up the quality of this high purity quartz, which can be the feed material for the potential high-end semiconductor or chips industry, oh my God, that will be a big success.
Endless potential.
Exactly. Yeah.
And what are the key objectives and milestones that Australasian Metals aims to achieve, especially in relation to the Dingo Hole project?
So as I said, we will define an exploration target range in weeks from now on, and then we already have samples in Alice Spring, and we brought some samples back to Melbourne, which we have labs. We have access to lab. They are going to do some analytical work for us. We want to understand what the raw material, the geochemical profile look like, and then after preliminary processing, which is optical, you pick up the good stuff, and maybe do some light acid leaching, and then we look at our purity, how pure it can achieve with that simple processes. Once we got that, we'll do the downstream testing with end users, with different applications. I think that's where the big value can be unlocked. I personally have done a lot of business between Australia and East Asia, like China, South Korea, Japan. I got a lot of contacts there. Some of them already reach out to me once we released the option agreement we have over Dingo Hole, this silica thing. And I already told them, if you want to test my products, why not become my shareholder? So buy my shares.
That's a good line.
Yeah.
Changing tack a little now, and let's talk gold. There are some high-grade gold intersections in your Queensland projects. Are there any follow-ups on these?
Yeah, if I can remind you, in one of our gold projects called Capella in central Queensland, historical data shows they have 32 meters at 3.8 gram per ton intersection, and we repeated that, achieved 26 meters at 3.2 gram per ton with our own drilling work. So given the market is really bullish about gold, about gold projects, gold price, we have a consultant looking at the potential following up program to say we want to test, is there any further extension of this high-grade shoot within the Jockstown resource we already defined, over 60,000 ounces at around 1.1 gram per ton gold. So yeah, hopefully we can deliver some exciting news in the gold space.
I'm going to say you've got your silver lining and your gold lining. This is looking very promising indeed. Okay. And final question. What significant milestones does Australasian Metals plan to accomplish for the second half of this year?
I mean, for junior, right now, it's a tough market. Interest rate is high, not enough investment into the junior space. We feel the pressure. I think a lot of companies in this space, they have problem to raise money. The market won't respond to their good news. And we have faced the same challenges. But for us, I would think we have a good foundation in terms of that we have a tight capital structure. Top 20 shareholders own over close to 60% of the company. And myself, the largest shareholder, this is my own company. I won't spend any money unless I see the value for my shareholder. And by today, we still have over $3 million in the bank. Our market cap is only 3.5, which is really low EV value for us. I think it's the right timing. If anybody has a long vision about exploration, about like silica, gold, lithium, you should jump into our company as a shareholder. And in terms of plans, the immediate focus for us, still the Dingo Hole high purity quartz project. According to all the information we have reviewed so far, we feel positive. And we talked to several experienced consultants in this space. We understand that the public market may not be very familiar with high purity silica. Everybody talk about gold, nickel, they know that, copper. But for silica, it's actually a very specialized space. But the margin, the market is quite big. Each component, each project for quartz, if you have the scale, if you have a quality, and then you identify the right path to an application, you will do well. I think that's why we focus on Dingo Hole, the high purity quartz thing for now. In the second half of the year, I would think most likely we'll exercise the option to acquire the project, and we'll have an exploration target range defined. We'll do our own drilling, hopefully by the end of this year. And in next year, early next year, we'll have a resource. And in the meantime, our sample will start to rock up in China, in South Korea. People will see, oh, this is good. Where can we buy this thing? So once we generate that kind of interest, I would think they will be reflected into our share price and market cap. And for the gold, depends on the outcome. I think we may be able to drill out some further target. If we intersect something good, exciting, we may have another bounce as well. So that's the plan for the second half of the year.
Dr. Zheng, we look forward to hearing more updates as they come through. Thank you for your time.
Thank you.
And that's the latest from Australasian Metals Limited. I'm Rose Jacobs. We'll see you again soon.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Oil prices held firm following a Thursday rally sparked by renewed US-China trade dialogue. West Texas Intermediate hovered around $63 a barrel, while Brent remained above $65. The gain comes after President Trump and President Xi agreed to resume talks to address tariff tensions and critical mineral supply issues. While the market welcomed signs of easing hostilities, the potential return of more OPEC+ supply continues to cap optimism, with concerns about a future oil glut. Despite this week's rise, oil futures remain down about 12% in 2025 amid fears that global trade conflicts could dampen energy demand. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. Dassault Aviation will begin manufacturing Rafale fighter jet fuselages in India for the first time, via 4 major production transfer agreements with Tata Advanced Systems Limited, TASL. A new state-of-the-art facility in Hyderabad will produce full fuselage sections, front, central, and rear, with deliveries starting by FY 2028 and capacity reaching 2 fuselages per month. The move aligns with India's Make in India and Atmanirbhar Bharat policies and marks a strategic shift in Dassault's global supply chain. TASL CEO Sukaran Singh and Dassault's CEO Eric Trappier hailed the deal as a milestone in India's aerospace ambitions. That's the latest from Kalkine's Daily Trending News. I'm Melissa Malley.
Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Tesla shares plunged over 14% as a public fallout between Donald Trump and Elon Musk intensified, with the former president threatening to revoke government contracts and subsidies tied to Musk's ventures. The feud weighed heavily on broader tech sentiment, dragging the Nasdaq down 0.8%. Other government-linked tech firms, such as Palantir, also suffered losses. Meanwhile, AI chipmaker Broadcom held firm ahead of earnings, and Ciena reported a strong quarter, boosted by rising AI and cloud demand. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, and thanks for tuning in to yet another edition of Executive Corner Expert Talks. My name is Monica, and I welcome you all to this very special episode. Today, we have the pleasure to speak to Dr. Rebecca Metcalder for the first time. She is the Chief Operating Officer of Chimeric Therapeutics. Talking about the company, Chimeric Therapeutics, the ticker code CHM, a 4-year-old company, has some interesting updates. They are advancing 3 platform technologies through multiple Phase 1A and Phase 1B clinical trials. The company is developing first-in-class autologous CAR-T cell therapies and best-in-class allogeneic NK cell therapies. Let's speak to Dr. Rebecca, the Chief Operating Officer of Chimeric Therapeutics, bringing extensive senior-level experience from the world's top pharma companies in the US and Australia. She has a doctorate of philosophy in cell therapy from Monash University. Notably, she was instrumental in establishing strategic partnerships with companies like Telstra and Wesfarmers in one of her previous companies. Now she's leading Chimeric from the front. So let's dig in and find out some interesting insights about the company. Dr. Rebecca, we greatly value your presence here today.
Thank you so much for having me.
Great. So to start with, Dr. Rebecca, could you give us your views about the Chimeric Therapeutics' current portfolio of cell therapy for our viewers?
Yeah, so Chimeric Therapeutics, we're really pioneers in cell therapies. We have the novel cell technology platforms, and we have 4 Phase 1 trials running across the US right now. So we're in a really unique position in Australia as being one of the front runners in cell therapy.
Sure. So to put it forward, Dr. Rebecca, Chimeric has advanced to a Phase 1B trial for acute myeloid leukemia patients, which is also a type of blood cancer, right? So how does this trial aim to innovate or improve upon current treatments for this cancer?
Yeah, so this is a really interesting study. So we were actually called by MD Anderson, the Cancer Centre, which is the #1 cancer hospital in the world. And they rang us and said, hey, we've got a really great idea. We'd love to use your NK cell platform And so we said yes. And this is really exciting because it uses 2 standard of care products that are FDA registered, plus our cell therapy, which is an off-the-shelf cell therapy. And this is called an allogeneic natural killer cell. And basically, we take cells from healthy donors, we can manufacture multiple doses and have them hanging ready in the pharmacy to dose patients. And so we think that this is a really unique opportunity to enhance the use of cell therapy across the world, but also to treat the really nasty blood cancer, AML. So what we've seen so far, we've dosed 6 patients already at MD Anderson, and we're moving really quickly into the second cohort now, which is really exciting. So everything's moving really well. And I think the fact that MD Anderson rang us and said, hey, we want your asset, is really a validating piece for the asset there.
That's really interesting. So to gain insights into future implications, Dr. Rebecca, how do you foresee this combination therapy impacting the treatment landscape for acute myeloid leukemia in the future?
So we have to first establish if it's safe, and then we can move on to see if it's going to be efficacious when we move to the next group of patients. And I'm really excited to see that progression. What we think will happen is with any kind of off-the-shelf product, it'll be there ready to go for the patients who need it the most. And so that's what we're really looking forward to in the future.
Sure. As Chimeric has initiated the first in-human clinical trial for CDH17 CAR-T cell therapy for gastrointestinal cancers, which also makes it the first company in the world to be doing this, could you also outline the specific objectives and endpoints of this trial for us?
Yeah, so this trial is really, really exciting. And this is one of the reasons why I decided to join Chimeric. And this particular asset, a technology out of UPenn, who were the inventors of CAR-T therapy, if you like. So we have a great relationship with them and a lot of trust in the technology. The CDH17 is really interesting. So this is actually a picture of it behind me, and overexpressed on the cancer there. You can see it all over the purple cells, the green there. And CDH17 in a cancer cell of a gastric, pancreatic or colorectal nature, it sits all on the top of the surface of the cancer, and there's so much of it. So what we with Penn have decided to do is target a CAR so the T cells can see that solid tumor and fight it at the site. So we have enrolled our first patient, which we announced on Monday, which was very exciting. And we're really looking forward to treating 15 patients over the next 12 months or so, all things going well. And so initially we'll have to establish safety. So for all cell therapy trials across the world, we have a bit of a go slow for the first 3 patients, because we want to make sure that, because like you said, we're the first company in the world to try this target in a CAR-T, we'll be the first to test it in humans. It's so exciting. We need to make sure that we have 28 days between patients. And so that's an FDA mandate for all cell therapy trials. That's not just unique for this one. When we dose our first patient, we have to wait 28 days until we dose the next one to make sure everything's safe. And then once we establish that everything's safe and we're right to move forward, we can get a little bit faster. And with this particular trial, it's really exciting because the team have done such a great job to get it pre-approved for phase 2 already. So once we deem that it's safe, we can quickly move into phase 2 and then look at partnering or licensing and the great results that we can see when it comes to measuring the efficacy.
That's exciting. And this surely is going to be transformational, provided all the parameters are met. Also, congratulations on securing a US patent for CHM0207. How does this patent issuance impact your company's strategic positioning in the field of cancer therapies?
So this is about the off-the-shelf product, and it's really unique technology that I have a PhD in. So I know a lot about this technology, but it's a really great platform that we can use to expand our NK cells to make multiple doses and have them ready hanging in the pharmacy, like I mentioned. So the patent just means that we can commercialize that technology and have it operating all around the world eventually when we get there.
Sure. And since we were also talking about collaboration, what role do collaborations and partnerships play in advancing Chimeric Therapeutics research and development efforts in cancer cell therapies?
Yeah, so quite a big part. So obviously we have really great partnerships with our technology founders at UPenn, at Case Western and at City of Hope in the US. And I think for me, I've only been in the seat of Chimeric for 12 weeks now. I can't say I'm new anymore, I don't think. But my job is to take a look at what Australian partnerships we can use to make sure that Australians get the benefit of our amazing technology. So I'll be taking a close look at that as well. But I think the biggest partnership that we have right now that I'm fostering a lot of energy into is our partnership with MD Anderson Cancer Centre. They are predominantly paying for that AML trial that we spoke about, which is really great. And they're also coming online as a site for CDH17 for the gastric and bowel cancer target. So we've got a really great relationship there. And I think, if I'm ever in a position to buy technology, we'd go there first. But also not mistaking, I'd love to get some Australian technology under the Chimeric umbrella. That would be fantastic.
People love to talk about future. So lastly, Dr. Rebecca, to help our viewers understand your vision, could you also outline the clinical milestones that Chimeric Therapeutics aim to achieve over the next 12 months?
Yeah, so over the next 12 months, we really want to hone in on this CDH17 trial. We want to get all of the patients in. So we're aiming for 15 patients in phase 1. And then if we deem it safe, we can get up and out into phase 2. So that's really where our focus lies. We're going to make a few tweaks to our chlorotoxin and brain cancer program, and that's really exciting. I think we're going to make it better than ever. So stay tuned for those updates. And then for our NK program, we want to make sure that we have a data readout from the AML trial so we can decide how we progress into phase 2. And we've also got another trial running for that platform at Case Western for solid tumor target, which is colorectal cancer, which is live and recruiting now. So we hope to see some results by probably the first half of next year from that one. So a lot of things happening at Chimeric. We've got 3 novel technologies and 4 phase 1s up and running. There should be a lot of news flow coming ahead.
So that brings us to the conclusion of our interview today. We sincerely thank you for your time and the comprehensive answers you've provided. But just before I let you go, any final thoughts or message for our audience, Dr. Rebecca?
I think when you're thinking about investing in Chimeric, there's a few things that I'd leave you with. We have a quite an interesting valuation anomaly right now. For some reason, no one values us, and maybe I've got to change that, and that's what I'm here to do. But take a closer look, and I'm always here to answer questions. We've got 4 trials running with 3 FDA INDs, which is really powerful. And we'll have lots of news flow coming in the next 12 months. And as I mentioned, our main focus is going to be CDH17, which is right behind me, focus for gastric bowel cancers with CAR-T. But I've been here for a short time, and I'm going to be here for a long time, and I can't wait to take Chimeric to the next level.
Lovely, really good to know that. That's Dr. Rebecca, the COO of Chimeric Therapeutics. In case you have missed any bit of this interview, you can certainly catch the full interview on our YouTube channel at Kalkine Media and hear what she has to say about Chimeric's recent advancements. Do like, share and subscribe. This is Monica signing off now.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Virgin Australia's ASX prospectus reveals its wet lease agreement with Qatar Airways is low risk but brings minimal earnings benefit. Qatar will bear the cost of operating one daily flight to Perth, Sydney, Melbourne, and Brisbane. Virgin noted the deal will have little impact on EBIT. The airline reiterated its focus on short-haul routes and financial discipline, forecasting net debt to EBITDA ratios of 1 to 2 times. In contrast, rival Qantas is preparing to take delivery of $15 billion in new aircraft and is targeting higher leverage ratios. Qantas shares rose 2.3% by early afternoon. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. An Air India Boeing 787-8 Dreamliner crashed shortly after takeoff from Ahmedabad en route to London Gatwick, killing more than 240 people in the worst aviation disaster in a decade. The sole survivor, a British man of Indian origin, described hearing a loud noise before the plane plummeted into a medical college dining hall. The aircraft, carrying 230 passengers and 12 crew, exploded on impact, with most victims being Indian and British nationals. Officials warned the death toll could rise as recovery efforts continue. The survivor is hospitalized and being treated for injuries. Boeing faces renewed scrutiny over its 787 model. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Amazon has launched its Amazon Business platform in Australia, aiming to serve 2.5 million small businesses and expand into government and corporate procurement. The new marketplace targets office supplies, IT equipment, and cleaning products, directly competing with Officeworks, Harvey Norman, and JB Hi-Fi. Analysts estimate Amazon's Australian gross merchandise volume could reach $9.4 billion in 2024. Despite Amazon's growing consumer presence, experts remain cautious about its immediate threat to entrenched retailers. The launch marks Australia as the 11th country to adopt Amazon Business, which already generates $53.7 billion globally. Amazon also expanded its logistics footprint and same-day Prime delivery offerings locally. That's the latest from Kalkine's Daily Trending News.
Hello and thanks for tuning in. I'm Monica from Kalkine Media and I welcome you to another edition of Executive Corner Expert Talks. Today, we have the pleasure of speaking with Mr. Tom Pickett, the Managing Director of Kalkine Resources Limited, ticker code CAE. Kalkine Resources Limited is an emerging exploration and resource development company focused on gold and copper. Based in Australia, the company is actively advancing its projects including the Mount Kalkine project and exploring strategic options for the Piccadilly project. Mr. Tom has been actively involved in managing exploration activities across numerous copper and gold projects in North Queensland. Mr. Tom, welcome to our show. We really appreciate you being here today for a quick discussion.
Thank you for having me.
Sure. So starting off, could you please provide an overview of Kalkine Resources and its current strategy for exploration and resource development?
Sure. Kalkine Resources is a exploration company based in Queensland, Australia. We're focused on our projects in copper and gold. We have two projects, our flagship project at Mount Kalkine, which is 100 kilometres south of the port of Gladstone. And we have the Piccadilly Gold Project, which is about 100 kilometres to the west of the port of Townsville. We have, in more recent times, been exploring the Mount Kalkine project, which we'll call our flagship project for copper and gold. And we've had some very extensive drill intercepts. And the success of that has been as a result of approaching the exploration slightly differently to what had been done in the past over a number of companies. So we've then spent some time developing a resource which we updated recently. And now we're moving into the phase of further expansion of that resource area and also, as you point out, the exploration of the gold projects at Piccadilly in North Queensland.
That's very insightful. Recently, your company reported a significant increase in copper resources at the Mount Kalkine project. What factors contributed to this growth and what does it signify for the project's future?
Yeah, you're right. We did update that resource significantly from the previous one, which was 5.5 million tonnes at just under 1% copper. We've, as I said, since been drilling quite extensively. The factors that contributed to the increase were probably that we approached the exploration somewhat differently, as I mentioned earlier. We drilled from initially entirely opposite direction to what all the other drilling had been done. So it was a little bit different to start, and then we pivoted a few times around to make sure that we were getting everything in the right direction. And the drilling that we completed resulted in a 183% increase in tonnage, 117% increase in copper tonnes, 229% increase in gold ounces, and 148% increase in silver ounces. So it was a very successful update, if you like. But what it also showed is that the work that we did outlined that there were other areas, or are other areas, for us to target to expand that resource area. So our focus is not only just resting on our laurels that we've been very successful in the drilling, but also to expand that current resource area, which we've recently outlined, and also identify new targets and attack those to add tons, significant tons, to future exploration.
Impressive progress indeed. Mr. Tom, what are the upcoming plans for the Mount Caninda project?
We had a pretty good idea of where we should be drilling to expand our current resource area at the Mount Caninda breccia zone. And as a result of identifying the signatures of what we're being successful with at that particular target area, we've set about to replicate that signature elsewhere on the project. And we've identified a fairly significant induced polarization geophysical target, which is about 800 meters away to the southwest of where we'd been drilling successfully. And it's got all the hallmarks of the area that we've had that success in. So interestingly, it appears as though the anomaly is about 2 to 3 times the size of the area that we've been drilling to date. So we'd like to focus our exploration efforts, if you like, to expanding those tons by hitting this new target area, which, as I said, has all the hallmarks of where we've been successful, and it's had no exploration over it other than the work that we've done in more recent times.
Well, it sounds like the engineering reports are laying a robust foundation for the project's success. Coming to the next question, could you elaborate on the strategic importance of the Piccadilly Gold project within Caninda Resources portfolio and also its role in the company's growth strategy?
Yes. Well, both copper and gold have enjoyed a fairly significant uptick in focus and also in price from the market generally. Piccadilly is a purely gold focused project in North Queensland, as I mentioned. We have had some fairly good success with some relatively limited drilling at Piccadilly over a mining lease area, which is surrounded by some EPMs. And we set about to expand upon the knowledge of that region, if you like. So we made an application for some further ground surrounding that area. We know there's gold in the system. We've got some very good hits within our drilling, but also with the geochemical surveys that we've been doing there. And that expansion has been sort of designed to replicate the work that we'd initially done at Piccadilly. And we've got some very interesting historical drill hits to follow up within the new project area that we've been granted, which is adjacent to the Piccadilly mine site. So in terms of its strategic importance, gold is quite important to our company. We've got some, as I said, we've increased gold ounces at the Mount Caninda area by 229%. It'd be nice to get some very interesting hits out of the Piccadilly area, which we'll be doing some ground-based work on to improve the knowledge of that zone very shortly.
That's really smart approach. Moving forward, with evolving market dynamics in gold and copper, how does Caninda Resources adapt its exploration strategies to capitalize on these trends?
Yeah, well, initially, some years ago, the copper price was also going through a period where it was improving, and it got to a point where I think back then it was about $4.50 a pound thereabouts, and it gave me a different focus to a couple of the projects. Mount Caninda was really being looked at by us with a gold lens, and then we shifted focus to a copper one. And it's turned out to be quite a good decision in the sense that we've identified that there's a lot going on at Mount Caninda in terms of its copper tonnage that we could access that we haven't yet identified. So Mount Caninda is quite a large project area for both copper and gold. And both of those two commodities are enjoying a little bit of a time in the sun. There's some significant deals that have been going on or talked about in the background in terms of acquisitions by other companies. And our strategy, if you like, is to take part in what is a shortage of copper tons that are available in competent jurisdictions, for example, like Australia. So the importance of it for us is to build tonnes and to build those tonnes within areas that are easily accessible. Our resource is from surface and constrained to an open pittable area down to 350 metres. So it's a really sort of simple mining method potentially, if you like. And we'd like to replicate that across other areas of the project and add significant tonnes.
Well, it's interesting to hear how these learnings are being applied. We should wrap up with this one, Mr. Tom. Looking forward, what are the upcoming exploration plans and growth initiatives that your company has in stores for the next few years?
Yeah, the focus I think needs to be the expansion of copper tonnes at Mount Kaninda initially. We have spent a fair amount of time at board level talking with our geological team and planning the next steps for drilling, and that will be centred around the expansion of the current resource area, but also hitting the interesting target that I mentioned earlier with a pretty extensive drill program over the next 12 months with a view to adding significant tonnes to the project area. So the strategy will be to implement that new drill program in its second phase, if you like. The first phase was just to delineate an initial update to the resource, which we've achieved. Now we're going to the second phase, which is growing that resource and expanding in new target areas. So there'll be effectively two teams. One will be expanding current resource area as best they can, and the other will be targeting the new zone, which we've identified as quite large with our IP survey and other ground-based exploration work.
That sounds like an exciting roadmap ahead. That's Mr. Tom Pickett, the Managing Director of Kaninda Resources. In case you have missed any part of this chat, you can catch the full interview on our YouTube channel at Kalkine Media. Do not forget to subscribe there. This is Monica signing off.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. President Trump's 25% auto tariffs are set to cost Japan's automotive sector over $19 billion this fiscal year, threatening a key pillar of the country's economy. Major automakers like Toyota, Honda, Mazda, and Subaru face steep losses, while smaller suppliers, such as Shoda Seisakusho in Gunma Prefecture, are under mounting pressure to cut profit margins or jobs. The tariffs jeopardize Japan's broader economic recovery strategy, with manufacturers warning of layoffs if costs remain elevated. The move intensifies trade tensions and exposes the vulnerability of export-dependent industries amid escalating U.S. protectionism. That's the latest from Kalkine's Daily Trending News.
Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Brookfield Infrastructure is selling a $428 million stake in Dalrymple Bay Infrastructure, DBI, Queensland's key coal export terminal, via a block trade handled by Barrenjoey. The sale involves 115 million securities at $3.72 each, a 7.9% discount, reducing Brookfield's holding from 49% to 26%. The deal follows strong recent share performance, with DBI up 13.5% this year. Brookfield has agreed not to sell further shares for 6 months. The move could position DBI for ASX 200 inclusion in September. DBI recently posted $280 million in FY24 earnings, with revenue and net profit both up over the previous year. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. NSW Premier Chris Minns has firmly ruled out any legislative change to allow poker machines at Crown Sydney, quashing Crown Resort's hopes of boosting revenue amid a slump in high roller activity. The decision follows a renewed push by Crown and a Sydney Morning Herald report suggesting support from Gaming Minister David Harris. Minns reiterated the government's position, stating, "I'm not going to do it." An Audit Office report also criticised the state's gaming regulation, noting ineffective harm minimisation and a slow reduction in machine numbers. NSW has nearly 88,000 pokies, triple Victoria's per capita rate, with $8.4 billion in annual profits. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello and welcome to yet another edition of Executive Corner Expert Talk. My name is Monica, and today we spotlight Surefire Resources NL, an ASX listed mineral exploration company making significant progress in Western Australia's resource-rich regions. The company has kicked off drilling at its Yidby Gold project and is gearing up for maiden project at the Fat Boy Copper prospect. Two projects with immense potential. We are joined by Surefire's Managing Director, Mr. Paul Burton, a seasoned mining expert with nearly 3 decades of experience. He's here to share insights about these key developments and the company's ambitious vision for the future. Thank you for being here with us, Mr. Burton. It's a pleasure to have you on the show today.
Thank you very much.
So let us start with an overview. Could you share with our viewers what Surefire's Resources stands for and the strategic focus driving your projects right now?
Yeah, well, we're a West Australian-based explorer. All our projects are in Western Australia, and that's a strategy of ours to focus on the resource-rich areas of WA, as you mentioned. Our key projects are in the Midwest. We have a very exciting gold project, which is a gold-copper project now. Our flagship project is a vanadium titanium iron project, and we also have a very large magnetite project, all very close to infrastructure, all the very, very strong assets for a junior explorer like ourselves.
Surefire has kicked off a drilling program at the Yidby Gold project, which has already generated a lot of interest. Could you tell us more about this project and what makes it so exciting for your company?
Well, the Yidby project is surrounded by some multi-million ounce gold deposits. For example, Mount Gibson's Capricorn owned deposit is only 30 kilometres to the south of us and exactly the same greenstone belt. And Yidby itself was a discovery by Surefire. It's a blind deposit, it's undercover, and it's turning out to be a very, very interesting project. It's now extends for over 3 kilometres. We've had some very exciting high-grade gold intersects, and also we know that there's a strong structural control to the gold mineralisation that we've seen to date. We've also done some metallurgical work which shows that the gold can be recovered extremely well, which opens up the door for a relatively cheap operation for leaching of the gold. So we're very excited about the project, and the current program is actually designed to extend this now so that we can come up with a resource. As gold is very much in favour with the market prices at the moment, so this is one that we're sure will bring some added value to the company.
And speaking of this drilling program, what are your key objectives for this phase of exploration at Yidby? Also, what milestones are you aiming to achieve?
Yes, so we're extending the drilling that's been done to the south of the existing mineralisation. We're hoping that this will give us some very, very strong, it's very open to the south, so there's some very strong gold intersects. And I can tell you that we've intersected some very interesting geology already in that area. So it's a project that's emerging into being a very large project, I would say.
Mr. Burton, you have also recently received approval for maiden drilling at the Fat Boy Copper prospect, which sounds intriguing. Could you tell us more about this project and the opportunities it presents?
Yes, this Fat Boy prospect occurs to the east of our gold mineralisation in a very similar setting to the Golden Grove copper zinc volcanogenic massive hosted sulfide deposit. So we're very, very intrigued by the soil anomalies that we uncovered there. So these copper in soil ranging up to even 600 ppm basis extends over a 5 kilometre by 3 kilometre zone, very large zone, very similar to the Golden Grove setting. adjacent to Banded Iron Formation in a volcanic sequence. We know we're in a greenstone belt. We know we've got volcanic rocks, and we know that they were submarine volcanic. So we have a very perfect setting for further discoveries of volcanogenic massive sulfide deposits in the area. Indeed, the Capricorn's Mount Gibson deposit is thought to be a volcanogenic massive sulfide deposit originally with a gold overprint, and that may be what we're seeing at Yidby as well. But we now have a very strong copper and zinc anomalous zone that we identified 4 targets there, which will be the current focus of the next drilling phase.
So once the maiden drilling at Fat Boy is completed, what are the next steps? Because people like to talk about the future. How do you see this project evolving in the near term?
Well, we have to find a source for the highly anomalous results that we've got on the surface. So we expect to improve our understanding there. So I can think in that area, in that zone, there's potential for more than one style of mineralization. So that's what we'll be looking for, to advance that project into something very similar to Golden Grove. We haven't done geophysics there yet. That may be the next phase, but I'm hoping that we will also intersect some mineralization to give us an understanding of where this highly anomalous copper and zinc is coming from.
In addition to these exciting exploration projects, Surefire is advancing the Victory Bora Vanadium project, which is pivotal in critical minerals development. Could you also share an update on its progress and the role it plays in your portfolio?
Well, this is our major project. It's the one that's most advanced, and we've completed a pre-feasibility study on that, had very, very strong results, financial results, so $1.1 billion US dollars in the NPV, done at 10%, so very conservative, a 42% IRR. So that was completed in December last year, which gave us a very strong impetus to move this project forward. So this year we've been focusing on strategic alliances for the project, and today we announced that we've achieved a expression of interest from a very large group in Germany that ties in very much with our strategy for the area. Now, Europe, and Germany in particular, has announced that vanadium is very much a critical mineral on their list, and the idea is for us to be able to supply this valuable commodity to Germany for the future. So having a process plant in Saudi Arabia is also part of our strategic plan, and our discussions with the relevant agencies and companies involved for that process has also been ongoing this year. So I'm very excited about the prospects for this project, and it's starting to fall together very well. It's taken a bit longer than we anticipated, but these things always do. And having an expression of interest like this is but the first, I think, of many agreements that we'll start to see coming through for the project as we develop.
Sure, Mr. Burton. I was about to ask you about the recent announcement that you just mentioned about the expression of interest. And this really should be a positive news for the investors that will give them an idea about what Surefire is intending to deliver. So, Mr. Burton, with the growing global demand for critical minerals like vanadium and copper, how do you see this trend impacting Surefire's long-term strategy and position in the industry?
Yes, well, look, I think we're lucky because we have both of those commodities in our portfolio, and I think the outlook for vanadium is very positive. It's been very depressed for the last 18 or so months, and that's been really due to an oversupply. But I think we're now in a new cycle. All of these things are cyclical, so we're in a new cycle now for vanadium and the uses for vanadium in that whole sector. So we're seeing a lot more vanadium redox batteries being deployed now. So there's certainly going to be a growing demand for vanadium to source the electrolyte for those. Plus, the manufactured steel is still very much a user of vanadium, and we'll see that being used more and more in the steel. China came out with their enforcing their rebar 3, which means they must have more vanadium actually into the steel to give it strength. So the outlook is good. For the general producers, what's important for those is to have their operating costs as low as possible. So our strategy of having our processing in a very low cost jurisdiction like the Middle East is very positive for this. We need to be energy efficient and we need to have a very green focus on our production. So vanadium is a green critical mineral. It's one of these ones that's going to be very much utilized in all sorts of areas in the future. And I think we're taking the right approach in how we're going to actually develop those. With respect to the copper, look, it's open. I mean, I think it's a very big copper anomaly that we have. And I think the drilling is yet to tell us what actually we're going to be finding there. But copper is also very much in our portfolio, and we are always looking at other prospects as well for copper. But we're very pleased with what we've got, and we'll just continue to try and deliver on those projects.
It's fascinating to hear about the ambitious projects Surefire is undertaking and the role you're playing in the future of minerals exploration. Thank you, Mr. Burton, for joining us today and sharing these valuable insights. But just before I let you go, any final words or message for our audience, Mr. Burton?
Yeah, I think it's fair to say that this year has been a difficult year for all junior explorers, but we're very positive about the future. So we're continuing to do what we're good at, and we hope that there'll be some very strong news flow and reflected in our shareholder value in the future.
Sure, lovely. That's Mr. Burton, the MD of Surefire Resources NL. That's all for today's segment. In case you have missed any bit of this interview, you can certainly catch the full interview on our YouTube channel at Kalkine Media and hear what he has to say about Surefire's recent advancements. Do like, share and subscribe. Thank you.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Crude oil prices declined for a second day as markets reacted to mixed signals on U.S. trade policy. Brent dipped toward $66 a barrel, while WTI hovered near $65. A U.S. appeals court upheld President Trump's authority to maintain global tariffs, adding to trade-related uncertainty. Meanwhile, the U.S. and China agreed on a framework to implement prior agreements, slightly easing tensions. However, concerns persist over weak global growth and excess oil supply. OPEC Plus is restoring output faster than expected, raising fears of a surplus. Westpac's Robert Rennie predicts oil could dip below $60 later this year as supply outpaces demand. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Despite early hype, fully autonomous vehicles remain elusive, with breakthroughs consistently offset by high costs, technical hurdles, and safety concerns. The industry has faced regulatory pushback and public skepticism following crashes involving partially automated systems. Many firms have scaled back efforts, while others like Waymo and Tesla are proceeding cautiously. Waymo expanded its driverless taxi service to a fourth U.S. city, while Tesla plans a modest robotaxi rollout in Austin, far from Elon Musk's 2019 promise of 1 million autonomous cars. 2 decades after the DARPA challenge sparked the race, self-driving technology still faces a long road to mainstream adoption. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Gold prices have surged above $3,430 per ounce as investors seek safe haven assets following Israel's strike on Iran, according to Commonwealth Bank strategist Vivek Thor. Although still below the intraday record of $3,486 set on April 22, rising geopolitical risks have fueled demand. The US evacuated non-essential staff from its Iraq embassy, and the UK issued shipping cautions for the Strait of Hormuz. Brent crude also climbed above $75 a barrel on supply concerns. The surge in commodities comes amid growing fears over a wider regional conflict and economic uncertainty tied to global trade policy shifts. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, and thanks for tuning in to yet another edition of Executive Corner Expert Talks. My name is Monica, and I welcome you all to this very special episode where we explore the interaction of innovation, technology, and finance as we dive into the exciting world of digital assets and cryptocurrency investments with a true pioneer in the field. Joining us is Derek Graham, the founder and CEO of Portal Asset Management. It's a company that redefines how we approach the digital economy. With over 3 decades of experience in building and leading innovative companies, Derek has been at the forefront of technological and financial advancements. From aerospace and pharmaceuticals to blockchain investments, his journey is nothing short of remarkable. In this conversation, Derek will share his insights into Portal Asset Management's innovative strategies and how the company is shaping the future of digital currency investments, and the evolving dynamics between traditional finance and cryptocurrencies. We'll also delve into key topics such as risk management, the influence of global political shifts, and how emerging technologies are reshaping the financial landscape. So whether you are a seasoned investor or just stepping into the digital economy, this interview promises to provide valuable perspectives. Let's get started. Derek, thank you for joining us. It's an honor to have you with us.
Oh, you're most welcome. Very generous introduction. Thank you very much, Monica.
Great. So kick things off, I would like to ask you, can you tell us what brought you to the realm of crypto assets and how long have you been in this space?
So I've always been fascinated by technology, and back in 2017, I was developing a software program to transfer the provenance of assets. So when you see things like classic cars, who owns it, how it's been maintained, is its provenance. Someone during that development program said to me, why don't you stamp it on a blockchain? And in early February 2017, I said the famous words, what is a blockchain? And 6 weeks later, I was in Europe, and I traveled Europe for 5 weeks attending conference after conference, getting excited about the extraordinary things that a blockchain could create. This entire world that is capable of replacing all things that are double entry bookkeeping. And when you think about it, that's everything. And so that was what inspired me. And of course, those were the days when Bitcoin and Ethereum was out, and there was a very small number of tokens out in comparison to what there is now.
So Derek, Portal Asset Management advises 2 dynamic pathways for entering the digital assets market, the Portal Digital Fund and the Portal Radiance Multi-Strategy Fund. So why did you establish these pathways, and what is the logic behind these investment strategies?
Well, the period of 2017 and 2018 was the period of the ICOs, the initial coin offerings, and it was a cowboy world. And extremely crazy, volatile, a lot of scams. And of course, by the way, typically in a development environment, some of the great tokens were created and launched around the worlds of decentralized finance, a name not even used at the time. I looked at it and said, it's important that people can have an opportunity to invest in this space, in a manner which is more as an institution could invest in it. So we developed what we call institutional grade funds. Funds that are based in typical areas for hedge funds, which is the Cayman Islands, run by highly competent, large fund management companies, and run to standards where risk is mitigated. And so it was basically this crazy volatile environment that caused us to create these institutional grade funds.
And given the inherent susceptibility of digital assets we're talking about, how do these funds manage risk while striving to deliver solid returns in such a rapidly changing market?
So the two funds have quite different investment profiles. So the Portal Digital Fund is a fund of funds, and it engages some of the best funds in this space. We reviewed 250 funds, narrowed it down to 25. We track 15 and we've deployed to 11. And what we do with that fund is we have around a third of the fund in what we call high volatility, long commitment funds. These are funds that are committing to early stage but still liquid tokens. And then we have about a third of the funds of what we call market neutral, high frequency trading, arbitrage, that sort of thing, returning a fairly consistent return each year. And then about a third of the funds we call sentiment and momentum. They're just chasing the marketplace. Well, you balance that out, and that gives you the opportunity to reduce your downside risk profile. So we look towards getting about 2/3 of the upside of the market and about 1/3 of the downside over a period of time. Our goal is to achieve an average of about 25 to 30% return per annum, and currently we're sitting at an average of about 27% per annum over our 5-year period. So fund number one. Fund number two, quite different. So Radiance has an edict that says you should own Bitcoin. And frankly, as you and I were talking just before the show, if you want to enter this space, it's Bitcoin, because it's the digital gold that everyone relates to. It's the brand that heralds this area. It's a standalone token, quite different to all others. So our view on this was not just that we acquire Bitcoin and hold it, say like Michael Saylor does at MicroStrategies, but that we acquire Bitcoin and we run consistent derivative algorithms on it so that every month we what we call extract, or we earn Bitcoin. And so our goal is to earn 7% Bitcoin per month. So the goal there is simply build Bitcoin on a monthly basis. Its price goes up and down, but if you own more of it on a monthly basis, then you're going to be in a better position. So Radiance is a lot more volatile because its price will be exaggerated as the market goes up and down, but it gives you pretty solid exposure, or very solid exposure to Bitcoin. Two different personalities.
Sure. And we see, Derek, how President Trump has heralded a plan to make the USA the center for cryptocurrency development and trading. Not just that, but now we also have a meme coin called Trump. So what plans has he outlined, and how do you foresee this impacting the industry and the important number goes up factor? Also, if you can tell us, how do the two funds plan to benefit from these changes in strategy?
So the first thing that the listening audience has to realize is that in the last probably 5 or 6 years, there's been a program in place called Choke Point 2.0, and it was being put into place by the previous administration. It was very active. A lot of people knew about it by virtue of the actions, but they didn't now, as they now know, that it was actually strategically managed. And that was the FIDC, which is the Federal Insurance Deposit Corporation, which is the high point of the banking groups in America, actively debanked crypto. And they pushed crypto out of America, and it started to go into Europe, Dubai, Singapore, etc. And there was a good reason, because crypto is a threat to the banking system, because it provides extraordinarily fast way of being able to transfer and remit value across the world. So by removing Choke Point 2.0, it gives the ability, of course, to see this whole world of crypto assets and cryptocurrencies expand. Trump has said more than that. He said that he's going to create a national Bitcoin reserve and buy up to 5% of Bitcoin and keep it in the reserve like gold. Now, the intriguing thing about this, Monica, is if he does that and he buys Bitcoin like gold, a couple of things are happen. The first time he announces it, the major institutions are likely to front run him. In other words, they'll be buying ahead of the reserve. And then other countries around the world who are already announcing that they will buy Bitcoin as a reserve will start buying too. Monica, there's only 21 million Bitcoin. That's it. So that means number goes up, because the demand will continue to grow as different nations say, we're going to allocate a small amount. And so if they allocate a small amount, That means 5% of Bitcoin will go to the treasury. That is the same amount held by all of the Bitcoin ETFs. There are 34 of them worldwide. That goes there. So that means 10% of the market of Bitcoin is locked up and put away, although the ETFs, of course, are traded, but are locked into those ownerships. I think that's a very big thing. And of course, the other thing is that he's appointed a council to actually promote digital assets. He's put Paul Atkins in charge of the SEC and removed Gary Gensler. And he's put in Caroline Fame, who's the Futures Commission, the Commodity and Futures Trading Commission. This is all of a sudden like saying that this poor cousin that's been performing exceptionally well is now allowed back into the family or into the family. And the financial community is now acknowledging its importance. It's a big step.
Sure. So, as a leader in digital asset management, what is the most important piece of advice you would offer to traditional investors, the ones that like to invest in ETFs, stocks, and maybe real estate, looking to explore the world of cryptocurrencies?
Well, the first thing I'd suggest is buy Bitcoin. And a fairly simple position on that. And that is that it's an easy token to acquire. People understand it. It's digital gold. But importantly, they need to learn. They need to educate themselves. They need to read about it. They need to understand where it is. I mean, by example, we developed a book called The ABC of Blockchain. It can be found on our website. It's a way of understanding how blockchain works, how decentralized finance works, how Web 3.0 works. It's not too daunting. In fact, it's extraordinarily exciting. But sometimes the challenge of very big financiers or people that have been in the finance industry for a very long period of time is the process of unlearning, because this technology works differently to banks, institutions and governments. And so if you go through a little bit of unlearning and you understand it, possibly you might get as excited as I did back in 2017.
Wow, absolutely, Derek. And with all the technological advancements happening, like the blockchain, we are talking about AI, what are some key trends in the digital asset space that investors should be watching closely in 2025 and beyond?
So firstly, one has to understand that the blockchain is a stack of technologies. And the blockchain is mere but the foundation. It's like the plumbings of the building. It is the accounting system that runs what sits above it. Tokens such as Ethereum enable the development of decentralized finance products and trading products, etc. DeFi is the banking system. Web 3.0 is just the next generation of the web. It's what we call read, write, and own. And so what we see coming forward is the combination of these technologies with artificial intelligence and Internet of Things devices. So Internet of Things, on, off, hot, cold, yes, no, etc. out there in the world, and artificial intelligence trading on it. The trend I see coming forward is AI utilizing decentralized finance products and trading. I know that sounds like a bit of a mind blow for many people, but there are already tokens that have been released that have AI technology that trades and generates return. And so I see that as a big trend. Laugh as we may, this trend of meme tokens has brought a great deal of people into this space. And one has to realize it's simply, the price is simply the fact that there is attention given to tokens and you pay for that attention. What Trump has done with releasing the Trump token is that he's generated something worth gross, fully diluted value of about 36 billion. It's current trading at about 7.8 billion. And he released that just before he became president. Just after he became president, the same companies that released that, which he's the prime owner of, bought $47 million worth of Bitcoin, wrapped Bitcoin as they call it. And so what we see there, forget the moral aspect of whether a president should be profiting from a position on that, we live in a different world now, but what we see there is a president turning around and saying, a large proportion of my wealth is now in digital assets. Monica, do you think he's going to be anything but friendly to digital assets?
Oh God, wow. So Derek, this is really fascinating. I really have to then, ask you to highlight where do you see Portal Asset Management in the next 5 years, maybe 10 years? And how do you envision your company and investors benefiting from the future of digital assets we are talking about?
Yes. So firstly, each one of these years are like dog years in this space. They're like 9 years in the normal realm. To suggest that we know what's going to happen in 10 years' time is absurd. No one does. Look how quickly it's grown and how different it is. So Portal Asset Management, its prime role through its 2 different funds that it advises and has founded, firstly, is to generate relatively stable returns around that 25 to 30% mark for the Portal Digital Fund, so that people are able to be exposed to the space like exposure to technology sectors. But in regards to Radiance, that's about accumulating Bitcoin. And our view of Bitcoin is that with the very large sovereign trusts coming into place, the national reserves coming into place, that Bitcoin has a solid chance of being $1 million token by 2030. An absurd thing to say a year or so ago, but now with the sovereign nations looking at investing in this, it just makes logical sense. So if we can build Bitcoin and Bitcoin goes from 100,000 to $1 million, that's our goal. Continue to build Bitcoin. Bitcoin will always be digital gold. I don't think it's going to fall from that throne. Over the next 5 years, we're going to see technology appear and be utilized in blockchain in a manner that we've never seen before, at a rate that is an amazing rate of speed and extraordinary development of technology powered by AI and transacted on blockchains.
Sure. That brings us to the conclusion of our interview today. And Derek, I must say this was quite insightful, right? And we sincerely thank you for your time and the comprehensive answers you have provided. But just before I let you go, any final thoughts, any message for our audience, Derek?
Yes, I think the important message, Monica, is learn, educate, get yourself up to speed. As I said, by all means, you can go to portal.am, download the ABC of Blockchain document, very simple document, great way of understanding this space, or sit down, interrogate ChatGPT, learn there. But if you're entering the space, generally it's buy Bitcoin and then start to understand what altcoins are, which is the alternative to Bitcoin, because they are the corporate tokens of what this industry will generate in the future. It's an amazing space. I said the final thing I'd say is, avoid it at your own risk.
Sure. That's Derek Graham, the CEO of Portal Asset Management. In case you have missed any bit of this interview, you can certainly catch the full interview on our YouTube channel at Kalkine Media and hear what he has to say about digital currencies. Do like, share and subscribe. This is Monica signing off now.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Australian lithium miner Ioneer has launched a $25 million capital raising to fund its Rhyolite Ridge lithium-boron project in Nevada. The company aims to raise $20 million through an institutional placement at 10 cents per share, a 13% discount to its last traded price, and an additional $5 million via a share purchase plan. The funds will support environmental permitting, working capital, and project advancement. Ioneer, with a market cap of $270 million, is targeting growing lithium demand amid the energy transition. Canaccord is leading the capital raise, with support from Stifel Nicholas Europe and Bridge Street Capital Partners. That's the latest from Kalkine's Daily Trending News.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. Oracle expects its cloud infrastructure revenue to soar over 70% in the new fiscal year, sending shares higher in late trading as investor optimism grows. The company is capitalizing on surging demand for AI-related computing power, positioning itself as a serious cloud competitor. Oracle's recent joint venture, Stargate, with OpenAI, and deals with major clients like Meta and Elon Musk's xAI, underscore its growing role in the AI infrastructure market. CEO Safra Catz said Oracle is on track to become one of the world's largest cloud companies, with FY26 revenue growth projected to be dramatically higher than the previous year. That's the latest from Kalkine's daily trending news. Hello, I'm Melissa Malley and this is Kalkine's daily trending news. Platinum has overtaken gold as the year's top-performing precious metal, soaring 32% in 2025 amid a tightening physical market. The World Platinum Investment Council forecasts a third straight annual supply deficit, with demand expected to exceed supply by nearly 1 million ounces. Prices have surged over 15% in just 6 trading sessions, topping $1,200 an ounce for the first time since May 2021. Traders and fund managers are viewing platinum as a cheaper store of value, while exploration remains stagnant. Fund interest is growing, with perennial partners eyeing physical platinum ETFs amid renewed confidence in the long-neglected metal. That's the latest from Kalkine's daily trending news. I'm Melissa Malley.
Hello and thanks for tuning in to yet another edition of Executive Corner Expert Talks. My name is Monica and I welcome you in today's interview with Radiopharm Theranostics. The ticker code is RAT, an ASX listed clinical stage radiotherapeutics company leading innovation in radiopharmaceuticals for both diagnostic and therapeutic applications. In 2024, the company achieved major milestones in cancer research, advancing its diverse pipeline and forging key partnerships. Joining us is Mr. Ricardo Canavari, Managing Director and CEO, a seasoned leader with extensive experience in radiopharmaceuticals and oncology. Previously with Novartis, he played a key role in launching groundbreaking therapies and driving global strategies. Mr. Ricardo, thank you for being with us.
Thank you very much for having me.
To start, could you walk us through the key milestones and achievements Radiopharm reached in 2024?
Yes, of course, my pleasure. So, in particular, the second half of 2024 has been really transformational for Radiopharm Theranostics. We had a major objective that was about raising capital for the company, and we were able to do it successfully in June 2024. Importantly, we had the ability to bring on board a key player that is Lantheus Imaging, a 7 billion company listed on the Nasdaq that decided to invest 7% in Radiopharm. So our objective in the second half of 2024 was really about strengthening the collaboration with Lantheus, and we also committed to list on Nasdaq in addition to the ASX. So when we arrived at the end of the year, we were pleased that both objectives were achieved. So we listed on Nasdaq at the end of November, and Lantheus not only made the first investment, but they decided to do an additional investment of 5%, taking Lantheus to be the largest shareholder in RAD, now with 12.1%. So the two key strategic objectives were achieved. In addition to that, we had the clinical objective that was to transition molecules for preclinical to clinical stage. And now we are pleased to have 4 molecules that are in clinical trial.
That's an impressive list of accomplishments, I must say. Partnerships often play a pivotal role in accelerating innovation. Radiopharm secured several key collaborations in 2024. Can you highlight the most impactful ones and explain how they align with your long-term goals in oncology and radiopharmaceutical development?
Yes, I mean, in this environment, it's very important to leverage
other people, other company, and other institution to support what we are doing. So I mentioned already one, that is the collaboration with Lantheus, a big player in the space, but also we continue our collaboration with the major universities to advance our technology. Above all, I will mention the collaboration with MD Anderson Cancer Center is considered the #1 cancer center in US and probably in the world. Our collaboration is going extremely well, and we are committed together to develop 4 molecules that have the potential to be radiopharmaceutical therapies. So all this was, and it is very important, because it's helping us that we are a small team to leverage this external expertise and value that can support the development of our products.
Collaboration aside, another key highlight was the RAD202 phase 1 trial. What makes this trial so significant, and how does obtaining ethics approval propel its development?
Yeah, so we were able to achieve in 2024, in the first half, the approval for our first therapeutic trial, that is RAD204 for patients with lung cancer. Now, RAD202 is another very important molecule because it is addressing the unmet medical need of patients with breast and gastric cancer. So this is what RAD202 is about. So having the ethics committee approval, it means that now we can start dosing the patient, starting with low dose therapeutics and going up at higher doses. We believe that during the month of February, we can dose our first patient. And this is a very large and important indication. Unfortunately, prevalence in breast cancer is still very high, and there is a need for additional therapies. And so the possibility to contribute with RAD202 or to other drugs that are already available is very important for us.
Speaking of clinical advancements, RAD402 has shown promise for prostate cancer patients. Can you outline the key benefits of this treatment and what steps lie ahead for its clinical development?
Prostate cancer is one of the first areas where it was proven that using a radiopharmaceutical therapy can be very beneficial for patients. There are data showing improvement in overall survival and keeping the tumor under control. Now, still, there is no cure for this disease when it becomes metastatic. So it is important that there are additional therapy available when patients progress on the first line of metastatic treatment. And this is what we are trying to do with RAD402, is a differentiated therapy for patients that have metastatic prostate cancer. We are using a different molecule with a different mechanism of action, and also leveraging the unique characteristic of an isotope called terbium-161 that we saw in preclinical data can be very powerful in killing the cancer cell while leaving the healthy tissues almost untouched. So we are very excited to test these products in patients with prostate cancer, and we think that we can enter the clinics and start treating the first patient in the second half of 2025.
Now, Mr. Ricardo, shifting the focus to the financial milestone, congratulations on Radiopharm's successful Nasdaq listing under the ticker symbol RADX, as you were saying. What strategic objectives do you aim to achieve by leveraging this listing to support the company's growth?
So Australia is our key market, and it will remain so. At the same time, we want to have more exposure to the largest market that is Nasdaq, in particular for biotech. There are some biotech funds, US biotech funds, that invest only in companies if they are listed in US. So it's an opportunity to combine
our loyalty of the investor in Australia, both retail and institution, with additional possibility to have biotech-specific US funds that can invest in radiopharm. That's why we have the dual market presence as RAD in Australia, as RADX on the NASDAQ. This is not a short-term project. It's not something that we believe can help the company or the share price in the next 2-3 months, but we believe it can really be helpful in the mid to long term.
Also, with the Nasdaq listing as a significant step forward, Radiopharm has also been active in capital raising and securing strategic investments in 2024. How have these efforts positioned the company for long-term expansion and success?
Well, this has been a major milestone for us when we were able to raise 70 million Australian dollar in June 2024. At the time, we thought that with this investment, we have a runway until June 2026. And now, after 6 months, we can confirm that our budget and assessment was correct. So we think that we have a good year and a half ahead of us without the need to raise additional capital, because the company is spending the money with a lot of attention. We are a small team. We have limited no infrastructure, and all the investment really go to clinical trials. So with the money that we raise, we can really fund our 4 clinical trials that are ongoing and continue our preclinical work on other molecules. So we are very conscious not to spend money elsewhere and really focus all the money in clinical development.
And looking ahead to 2025, Radiopharm's pipeline and clinical trials hold great potential. What major milestones or breakthroughs can we expect from the company in the coming year?
This is what we call the year of execution of our clinical trials. We think that in 2025 we can conclude our phase 1 imaging in pancreatic cancer. We can share some initial data on our imaging trial in brain metastases, and we can share also some initial data on our therapeutic trial, RAD204 and RAD202. In particular, we are targeting around June and July to be a moment where we are going to release to the market some partial but important data of a number of patients that we are treating right now. So I think it's a very important year, and we don't want to leave the market blind without knowing what is happening for a long time. So we gave ourselves the objective to have some data release around June, July, and then again some important data release at the end of 2025.
Mr. Ricardo, thank you for sharing such valuable insights into Radiopharm Theranostics' remarkable journey and future plans. Before we wrap up, do you have any final thoughts or message that you would like to share with our audience today?
Well, I have to say that what is important is the feedback that we receive from the medical expert, from the oncologists, from the physician, from the nurses that we deal with every day. And we saw a lot of excitement. Everybody knows that biotech and clinical development is difficult and is risky. And of course, I don't want to say anything different than that. But there is a lot of excitement because people recognize the potential of our molecule to make the difference for patients living with cancer. And so there is a lot of support in trying to advance this molecule as fast as possible, with the hope that we can contribute and give some additional tools to the oncology to help patients with those terrible diseases. So it's difficult, but rewarding and exciting at the same time.
It's a year of execution for Radiopharm. That's Mr. Ricardo Canaveri, the Managing Director and Chief Executive Officer of Radiopharm Theranostics. In case you have missed any bit of this interview, you can certainly catch the full interview on our YouTube channel at Kalkine Media and hear what he has to say about Radiopharm Theranostics. Do like, share and subscribe. This is Monica signing off now.
Hello, I'm Madeleine Wright, and this is Kalkine's Daily Trending News. Qantas will shut down Jetstar Asia, its Singapore-based budget airline launched over 20 years ago, due to mounting financial losses and intensifying regional competition. 13 aircraft from Jetstar Asia will be redeployed to Australian and New Zealand routes, while Jetstar's core brand and its Japan operations remain unaffected. 16 routes will be cut as a result. The closure is expected to unlock $500 million in funding toward Qantas' broader fleet renewal plans. Jetstar Asia is projected to post a $25 million loss for the 6 months ending June 30th, as it continues to struggle against rivals like AirAsia and Scoot. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. The US and China have agreed to a preliminary framework aimed at reducing trade tensions, with both sides pledging to ease restrictions on critical goods such as rare earth minerals and magnets. The deal, reached after nearly 20 hours of talks in London, will now be presented to Presidents Trump and Xi for final approval. The agreement could lift US export restrictions in exchange for smoother Chinese rare earth shipments. While markets reacted cautiously, the move is seen as a step toward restoring trust. The trade truce remains fragile, with no further meetings planned and underlying issues still unresolved. That's the latest from Kalkine's Daily Trending News. Hello, I'm Melissa Malley and this is Kalkine's Daily Trending News. Virgin Australia is resuming long-haul services, with its first flight to Doha departing Sydney on Thursday, marking its return to international flying since halting such routes in March 2020. The move follows a strategic wet lease agreement with Qatar Airways, which will operate the flights using its aircraft and crew. This comes after Qatar's failed bid to expand air rights in Australia, a decision that sparked political controversy. Virgin, backed by Bain Capital, argues the partnership could unlock $3 billion in economic value over 5 years. Flights from Brisbane and Perth will follow this month, with Melbourne to launch in December. That's the latest from Kalkine's Daily Trending News.
Hello everyone, and thank you for tuning in to yet another edition of Executive Corner Expert Talks. My name is Monica, and today we are joined by Dr. Rebecca McQualters, the Chief Operating Officer of Chimeric Therapeutics, the ticker code CHM. It's a clinical stage biopharmaceutical company leading advancements in cancer cell therapies. Chimeric is developing cutting-edge autologous CAR-T and allogeneic NK cell therapies, collaborating with renowned universities like the University of Pennsylvania and City of Hope. Dr. Rebecca brings extensive experience from global pharmaceutical leaders and holds a PhD in cell therapy and regenerative medicine. We are excited to learn from her about the company's latest advancements. Welcome, Dr. Rebecca. Thank you for joining us today.
Thank you so much for having me.
Now, to start off, could you give us the overview of Chimeric Therapeutics' current portfolio of cell therapies and the focus areas driving the company forward?
So at Chimeric Therapeutics, we have 3 areas of focus based on our 3 assets. And the first one is our lead program, which is CHM CDH17. That's targeted at gastrointestinal cancers all the way down to colorectal cancer. And we've got 2 sites with a 3rd opening shortly. The second area of focus is a tricky one, and that's glioblastoma, which is a nasty brain cancer. And we've got a beautiful auto CAR-T from the City of Hope, with 1 site open in Austin, Texas currently.
And our final area of focus is our off-the-shelf product, which is our beautiful AlloNK product, which means we can manufacture from a healthy donor about 200 doses of cells. And we're working with MD Anderson Cancer Centre on a very exciting study at the moment.
We are aware that Chimeric has recently advanced to a phase 1b trial for acute myeloid leukemia patients. Could you share how this trial aims to innovate or improve upon current treatments for this type of cancer?
So this is very exciting. So for the AlloNK portfolio, which is our CHM Core NK, we've moved to frontline therapy for AML patients. And so this hasn't been done in blood cancer patients before with cell therapy. So together with our partners at MD Anderson, we're really breaking ground on cutting edge cell therapy treatments by using our cells first. And so we're really keen to see that patients that have a really nasty blood cancer, AML, how they respond to having cell therapy first up, instead of having cell therapy, third or fourth line when their body's tired and full of chemotherapy. We're going to test it right up the front, and it's very exciting.
Looking forward, how do you foresee this combination of therapy shaping the future of acute myeloid leukemia treatment?
We actually think it's going to be groundbreaking, because this is going to really move cell therapy up the treatment paradigm and really change the way that clinicians think about when to use the cell therapy in their toolkit, and let's bring it out first to give these patients the best shot.
We have seen Chimeric is also making strides in gastrointestinal cancers with the first in-human clinical trial of CDH17 CAR T cell therapy. Could you outline the specific objectives and key endpoints of this trial?
Yeah, so this trial is our lead program. It's basically a dose escalation study, and it's a 3+3 design. So that means that in each dose level, we'll have 3 patients, and then we'll move up to the next dose level with 3 patients. And if we're safe to proceed, we'll continue to the final dose level. And my Chief Medical Officer, Dr. Jason Litton, was very, very clever in designing this trial, because we have a lot of flexibility in the design. So if we decide halfway through dose level 2, we found the dose that's the most efficacious, we can move straight into phase 2. So I'm very grateful for his clever design of our clinical trial. And so right now we've dosed 3 patients. We've had 5 successful manufacturing runs. So we're really moving along with this trial. And I really can't wait to share results with you when they come out, hopefully towards the end of Q1.
Also, congratulations on securing the US patent for CHM0201. How does this milestone strengthen Chimeric Therapeutics' strategic positioning in the competitive landscape of cancer therapies?
Well, this was really important in our frontline trial for AML. So this is, again, shifting the paradigm, using our AlloNK cells to hit AML head on and really make sure that we give patients the best chance. So it was very exciting indeed.
Partnerships often play a vital role in innovation. How do collaborations and alliances support Chimeric Therapeutics' research and development in cancer cell therapies?
So one thing I'm very good at is partnerships. And so this is really important to us. And I think we've got a great partnership with MD Anderson Cancer Centre. We've got a great partnership with Case Western. We've got a great partnership with City of Hope. I can keep listing them. And working on our lead program with UPenn, we also have a great partnership there. But now, because we're based in Australia, we're an Australian listed company, my job is to really look at those Australian partnerships to see what we can develop here. So we announced one late last year with Cell Therapies based at Peter MacCallum Cancer Centre. And so as we're able to bring our trials to Australia, they will be manufacturing our cell therapies for us, which is very exciting.
Lastly, could you share some of the clinical milestones Chimeric Therapeutics aims to achieve in the next 12 months?
So we will have a fair amount of data coming out of our CDH17 program. So we'll have the results from the first dose, hopefully soon, I hope so. And then once we move up to the next dose, we'll have another announcement in 3 months. And we're roughly running around 1 patient a month, because we want to make sure that everybody's safe and that the dose levels are well tolerated. So we'll have 3 data updates from that program in the coming months. And we'll also have an update about our progress for our chlorotoxin program, which is the brain cancer program. And then finally, we should have ongoing updates about our really exciting frontline AML trial coming out shortly. But because we're in a partnership with MD Anderson on that one, we'll probably save the data and take it to ASH at the end of the year.
Thank you, Dr. Rebecca, for sharing such valuable insights today. We are excited to see how chimeric therapeutics continues to transform the field of cancer treatment. Before we wrap up, do you have any final thoughts, any message for the audience?
Well, one thing that is important to share is I've recently been promoted to Chief Executive Officer. And so I'm very excited to be leading Chimeric into its next phase of really exciting data and growth, particularly here in Australia.
Congratulations for the position, Dr. Rebecca. That's Dr. Rebecca McAltis, the CEO of Chimeric Therapeutics. In case you have missed any bit of this interview, you can certainly catch the full interview on our YouTube channel, Kalkine Media, and hear what she has to say about Chimeric Therapeutics. Do like, share and subscribe. This is Monica signing off now.
Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Air New Zealand has become the first trans-Tasman airline to commit to operating from Western Sydney International Airport, with plans to begin Auckland-Western Sydney services in mid-2027. CEO Greg Foran described the new airport as a major advancement for Australian aviation, highlighting the route as a move to boost convenience and connectivity between New Zealand and Australia. The agreement signals Air New Zealand's growth strategy and its focus on tapping into the Western Sydney market. Western Sydney International is expected to become a key hub when it opens, supporting both domestic and international travel in the region. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright. Hello, I'm Madeleine Wright and this is Kalkine's Daily Trending News. Wesfarmers will sell its 100% stake in BWP Management Limited, BML, to BWP Trust for $142.6 million, enabling BWP to internalize its management. The deal includes a $100 million cash payment and $42.6 million in BWP units issued at a 9.2% premium. As part of the transaction, Bunnings' lease terms with BWP will be reset and extended. The sale values BML at 10.6 times its forecast FY26 EBIT. Wesfarmers' stake in BWP will rise from 22.3% to 23.5%. BML currently manages BWP's property portfolio, mainly Bunnings warehouses, but Wesfarmers will no longer earn fees from it post-sale. That's the latest from Kalkine's Daily Trending News. I'm Madeleine Wright.
Hello and welcome to yet another edition of Executive Corner Expert Talks presented by Kalkine Media. Today we have an exciting discussion lined up as we explore the latest developments from Viking Mines Limited, the ticker code VKA, an ASX-listed mineral exploration company. Viking is actively advancing its first hit gold project in Western Australia's Eastern Goldfields, with recent drilling revealing promising gold mineralization. Joining us to share more insights is Mr. Julian Woodcock, the Managing Director of Viking Mines. With over 2 decades of experience in exploration and production across leading mining companies, Julian brings a wealth of knowledge in both open pit and underground geology. He has led large-scale exploration projects, making significant contribution to the Western Australia's goldfields. Stay with us as we dive into the latest results, the company's future plans, and what's next for Viking Mines. Thank you, Julian, for being here with us today.
Hey, Monica, it's great to be here. Thank you.
To begin, could you provide an overview of Viking Mines to our viewers and explain why the First Hit Gold project is the key focus of the company right now?
Yeah, so Viking Mines, as you mentioned, ASX listed junior explorer. We have a number of assets, First Hit, which you've mentioned. We've also got a couple of other assets, which maybe we'll touch on shortly. First Hit centres around a historic high-grade gold mine that was operated about 20 years ago, and there was about close to 30,000 ounces mined out of that deposit at a high grade between 7 and 8 grams a tonne. Since we acquired that asset around 2021, we have grown the tenure in that area, and we've now got a substantial land holding in a prolific zone within the eastern goldfields of Western Australia, host to many large gold deposits, and our tenure forms part of that prolific gold area, and we see a huge amount of opportunity with the historic mining on the ground, confirming the presence of gold, a resource which we've defined, as well as the exploration opportunity with the drilling that we're currently undertaking.
Mr. Julian, the First Hit project is located along the Ida and Zuleika shear zones, the well-known geological features in the region. Could you explain the significance and why they are so important to the project's potential?
Yeah, so the Zuleika shear is a very large regional structure through the eastern goldfields that extends for several hundred kilometres. Further south from where we're currently exploring, there's an area known as Kundana. That's currently held and owned and operated by Evolution Mining. I spent a couple of years working down there when I worked for Evolution Mining. That area is host to multi-million ounces of gold endowment. There's the current operating mines, but there's specifically things like the Raleigh deposit, very high grade, narrow vein deposit, only half a metre wide, but running 50 grams a tonne and extending several hundred metres. That deposit alone had 1 million ounces. If we move further north, closer to where our tenure is located, you've also got Orabanda Mining, another $1 billion plus ASX listed company. They've got their Davyhurst operations around the Davyhurst mill itself and the historic mines there. Again, more than 1.2 million ounces of endowment. Move further north still up to immediately adjacent to our tenure. They've got other mines that they're operating called Riverina and Mulline. In that camp, they've more than 1.3 million ounces. So this regional structure is extremely well endowed, and we have a 25-kilometre strike length of it that's actually seen virtually no bedrock exploration.
Speaking of potential, you have recently received assay results from Phase 1 drilling at the Northern Duplex target. Could you walk us through the key findings, and also how do these results shape the future development plans for the project?
Yeah, so this is a really exciting project. As I mentioned, we've got 25 kilometres of strike under our control of this Zuleika shear. For over 23 kilometres of that, there's been no bedrock drilling. There's just been soil sampling, a little bit of RAB and air core drilling, but not much at all. And within the soil sampling that we conducted last year, we identified a series of anomalies with some results essentially warranting follow-up. So on the back of that, at the end of 2024, we planned a drill program, and this was a first stage greenfields program, no prior drilling in the area. We drilled between then and now 4 drill traverses over a large area. These drill traverses just go east to west. The drill holes are located what we call heel to toe, which means where one hole ends, the next hole begins at surface, so we get full coverage. And the results we just recorded were from the first of those 4 traverses. In that first traverse, we intersected 27 meters at 0.4 grams per ton gold, and we confirmed that essentially that we've got gold pathways. Within that 27 meters, there were some individual intercepts up to as high as 2.9 grams per ton. And the significance of this is the next drill line that we've completed that we're waiting on assays for is 800 meters north, and 1.6 kilometers south. So this is a huge area. Typically, these deposits only have a few hundred meters of strike length. So for us to get assay results in the first round of drilling in the Greenfields area with arguably significant anomalism upwards to nearly 3 grams a ton is a major achievement. And it's just confirmed for us that there is gold running through this extensive area that has not been drilled before, which gives us opportunity to follow up. Second part of your question, what does it mean for our strategy? Well, our strategy is to identify, discover and define new gold deposits in this area. We know that the region has the potential to host these deposits from all the other deposits that I mentioned previously. And for that reason, we see the opportunity to rapidly identify and discover circa 200,000 ounces or greater. The current record gold price, that is an extremely large inherent value in excess of $1 billion. And we see that as presenting the company with many opportunities, whether it be development, whether it be sale of an asset, toll treatment, lots of different opportunities. So first and foremost, looking at discovering new gold in this underexplored parcel of land that we have.
That's quite interesting. Now that phase 1 has provided some insights, what's next? What are the immediate steps in terms of drilling and exploration, and are there any specific targets or areas you plan to focus on in phase 2?
Yes, so the target that we've tested so far is one of several along that 25-kilometer strike length that I mentioned. We've tested what we call the Northern Duplex target. Any of your people looking at this interview, go and review our announcements, they'll see the graphics associated with it. But the Northern Duplex target is just the first of several. So further south, we have what we call the Central Duplex target. There's a large soil anomaly, about 6 kilometers long, greater than 10 ppb. With the drilling we've completed in the northern area, we are confident that now we will move to these other areas and we have the potential for identifying more resources, or potential resources. So phase 2, which we're looking to commence with in March, we'll see us doing first pass drill testing at the Central Duplex target, as well as we will have received all the assays for the remaining drilling in that first phase program, and we'll be looking to undertake any necessary follow-up drilling around the results that we received there.
That's huge and creates a lot of opportunities for the company. Looking at the bigger picture, how do you see the new gold discoveries at the first hit project contributing to Viking Mine's growth in the coming years?
I think any discovery of substance, and what I mean by discovery of substance is sort of north of 100, 200,000 ounces, will be transformational for shareholders in Viking Mines. We currently have a market cap of around $10 million. Discovering high-grade gold, which is what we're looking for and we expect to be able to find on our tenure, could see an immediate re-rate. So in terms of value add for investors, value add for our shareholders, it will be very significant. As I mentioned, 200,000 ounces, $4,500 Aussie gold, that's a substantial number. And there's plenty of mills in the nearby vicinity that we could potentially process any discoveries through. The nearest being Ora Banda Mining's Davyhurst mill, only 40 kilometers south. But realistically, there's a lot of opportunities within the region.
Shifting gears a bit, Viking Mines is also advancing the cane grass battery minerals project. Could you share an update on its progress and why it plays a vital role in the company's broader strategy?
Yes, the cane grass battery minerals project is a great asset. It's in the commodity vanadium. Vanadium is used predominantly in steel, 90% of consumption in steel. World supply is dominated by BRICS jurisdictions, so Brazil, China, Russia essentially dominate, and South Africa dominate that global supply, north of 85%. The cane grass battery minerals project, we started working on that a few years ago. Within the first year of activity, we defined a very substantial resource. Unfortunately, over that time frame, we have seen a downturn in the commodity value. So the pricing of vanadium fell from about $10 US a pound down to about $4 or $5 a pound. However, we still have a very substantial resource with the studies that we completed at the time. Showed at a sort of $6, $7 a pound, we generated some large open pits. This asset gives us some strategic diversification across commodities. So we've got gold, which is going very well, but we also have diversification across the vanadium. Included within that resource is also a large amount of iron and titanium and smaller levels amounts of copper, nickel and cobalt. So it brings some diversity into our project portfolio, which essentially gives us some leverage and any shareholders that come in have leverage against a future upswing in the vanadium price. One of the things that could influence that is the adoption of vanadium redox flow batteries, which seem critical to the long duration energy storage transition. So this is storing grid power. These large batteries are starting to penetrate the market and starting to be installed for the purpose of storing energy. And yeah, big uptake in those styles of batteries. We'll see a significant increase in the demand for the commodity, and we're well positioned with a large resource to be able to take advantage of that.
You have covered so much for our viewers, Mr. Julian. Finally, looking ahead, what excites you the most about the future of Viking Mines? And also with ongoing exploration at both First Hit and Cairnglass, how do you see the company evolving in the years to come?
I look at the current record level gold price, it's hard not to be excited about gold, and the tenure that we've got and the genuine discovery opportunity we have. A lot of tenure within the area we explore has been drilled again, and those patches get diminished. We have a genuine large amount of land that has not seen much gold exploration, and with our first drill holes we've encountered say 27 grams at 27 meters at 0.4 grams a ton. That just means that we know there is gold running through the area. So I'm really excited as a geologist and an explorationist first that we've got the opportunity to find a large deposit.
The prime agenda supported by Mr. Trump, drill baby drill. It's rightly the game of drilling now. That's Mr. Julian Woodcock, the MD of Viking Mines Limited. Mr. Julian, before I let you go, any final words for the investors and our viewers today?
Look, I just encourage any investors to take the time, have a read through some of our announcements, go on our website. There's a lot of good information there. So for sophisticated investors who can assimilate the information and have a look, go and have a read and you'll see the opportunities for yourself.
Sure, do check their website. That's all for today's segment. Stay tuned for more industry updates and inspiring conversations. In case you have missed any bit of this interview, you can certainly catch the full interview on our YouTube channel at Kalkine Media and hear what she has to say about the Viking Mines' recent advancements. Do like, share and subscribe. This is Monica signing off now. Hello and welcome to our episode of Executive Corner Expert Talks presented by Kalkine Media. Today we are covering the Far East Gold Limited, the ticker code FEG, an Australian copper and gold explorer making major moves in Indonesia and Australia. The company has recently signed a deal to acquire the Edinburgh Gold Project in Indonesia and secured over 14 million Australian dollars in strategic funding from Zingi Gold Hong Kong Mining. Joining us to discuss these exciting developments is the CEO and the Managing Director Shane Manier, a mining industry leader with over 20 years of experience in resource and infrastructure projects across the Asia Pacific. Mr. Shane, welcome to the show.
Thanks, Monica, and thanks for the warm introduction.
So let's start by understanding Far East Gold's journey so far. Could you provide an overview of Far East Gold and its current portfolio?
Sure, absolutely. We were fortunate enough to be given some opportunity due to some long time spent in the country and a deep respect and passion for Indonesia. Quite a number of years ago, some nice commercial opportunities arose, and we thought that we'd be able to capture those and put them within the stock market and raise some money and do well for the local community in Indonesia fundamentally, and also across the shareholder base in Australia. So Indonesia's portfolio is consisting of 4 copper and gold projects. So we're as far up in the northwest as Banda Aceh, travelling down the island chain into Java in the central area. We've got 2 projects, both porphyry projects in Trenggalek and Wonogiri, and then heading all the way to the east in the Papua province, still in the Indonesian side of the island, we have Edinburgh. Then in Australia, in Queensland, we've got 2 assets. So one gold epithermal project and one copper porphyry project, both in a similar area in the Drummond Basin area in Queensland.
Having the portfolio covered, now that the company's recent acquisition of the Edinburgh Gold Project has generated a lot of interest, Mr. Jain, what excites you the most about the potential of the Edinburgh Gold Project, and what strategies do you have in place to unlock its value?
So this is a great project, and one I've had my eye on for many years, in fact. We were fortunate enough with some of our success in Indonesia, in other projects, getting them drilled for the first time historically and so forth. So that opened the doors for us to participate in the Edinburgh acquisition, which we did toward the Q3, Q4 last year. So we made that acquisition. We've got a pathway through to 80 and ultimately 100% of that project with very favourable commercial terms. Now, Edinburgh, with some historical work, has come with an exploration target that Far East Gold put out toward the end of last year at 7.2 million ounces at 6.4 grams per tonne, which as an upper limit, of course, which is exceptional in anyone's language, and we're quite excited about that. So that's a huge exploration project, and it's up to us to now build the value out and ratify those sorts of targets. Now, what is important to note is that the drilling will be taking place very, very soon up there to start to look at confirming some of those results with the exploration target across 4 of the 14 known prospects.
An upcoming drilling project should be rewarding. And speaking of Edinburgh, Far East Gold recently announced its maiden JORC inferred resource estimate for the project. Could you elaborate on this milestone, and what does it mean for the company's future development plans, Mr. Jain?
Absolutely. So, as I mentioned, the exploration target being 7.2 million ounces and as an upper limit. We've taken some historical data, combined that with a lot of ground proofing and boots on the ground and topographical work along with rock chip sampling and so forth. Now that's led us in with the historical drilling to be able to produce a maiden JORC of 540,000 ounces at 4.1 grams per tonne. Now, the exciting part about all of that is that was generated across the 3 prospect areas of the 14, as I mentioned, that had a specific volume of gold estimated in it, and we've gone and looked at that particular work and been able to ratify and confirm that those numbers are in line with the exploration target. So what that would strongly suggest is that the other prospect areas which haven't been drilled but have been estimated with ground proofing and obviously quite a lot of boots on the ground work. If everything's in line with what we're seeing and what we're proving up for the initial 3 prospect areas, hopefully that stays in line and we do come up with a much bigger resource as we move forward and explore those areas in more detail.
Covering the prospective areas and now beyond Edinburgh, the company has a diverse portfolio spanning Indonesia and Australia. How do you evaluate and prioritize the exploration assets in these regions? And what specific criteria do you use to identify the Tier 1 assets?
It's a tough one for Far East Gold. It's got such a unique portfolio, such a sizable potential Tier 1 portfolio that which one do we choose? With obviously limited financial resources and limited personnel capabilities and resources. So it's about balancing out the best bang for the buck, of course. It's a mistake to do everything all at once. We're narrowing down on where we think the best value drivers are. In a recent conversation speaking with BHP, and they're referring specifically to their Explore program, they identify a Tier 1 as 800 million tonnes at 0.4% copper for a copper project. For a gold project, they estimate about 1.5 million ounces, and that depends on the grade from there and recoveries and so forth. So 1.5 would be considered Tier 1 for them. So we've adopted a similar sort of criteria. We're looking at Woyla to produce upwards of those numbers. Trenggalek certainly producing those numbers from the indications that we're seeing and the excitement around that copper porphyry, and then Trenggalek hopefully we'll be getting well above those sorts of numbers up into the east. Not to be forgotten, the project in Australia looks like, as a copper porphyry, it may certainly be worth investigating a little bit deeply. But to speak to more directly to your question, how do we decide which way to go? It's about the project development, where it's going to be the easiest to get those JORC numbers in line and get us on a pathway into production. Given what's happening out there in the marketplace, I believe that we're well positioned to start looking now at turning the narrative from exploration into project development and ultimately into production.
Sure, Mr. Shane. We'll now talk about the funding. Funding plays a crucial role in driving exploration success. Could you explain the significance of the recent strategic funding from Xingyi Gold Hong Kong Mining Company Limited, and how will this partnership contribute to the company's growth?
Yeah, Xingyi is a fantastic company. In fact, we're off to have some more strategic alignment, detailed discussions in a couple of weeks, actually. They've invited us up there to meet with the principal and run through some future working plans together. Now, Xingyi, took 19.9% investment in Far East Gold, which is the upper limit at this stage. We're working that together very well. They're a company that's very experienced in greenfield production, greenfield through to production. And by that I mean then they're very comfortable in the space of acquiring greenfield projects, such as they've done in China previously, and taking those projects all the way through to project development and through to production. And Far East Gold is the first company that they've seriously looked at investing in and developing projects along those lines as well, outside of China. So very excited about what that all looks like and how we're going to develop these projects together.
Looking ahead, the shareholders would want to know what's next. So, Mr. Shane, what are your key exploration objectives for the next 1 year, 1.5 years?
As somebody in America in a high position once said, "Drill, baby, drill." Okay, I'm referring to the oil and gas industry, but when that statement came out. But look, our plans are to explore, and we've got a very good and comprehensive plan in place to drill across our portfolio of assets. So that will include one of the projects in Australia that I mentioned, Mount Clark West. We'll do some test drilling up there. Mineralization's already been proven with some initial drilling. Historically, we intend to expand upon that and hopefully hit some very good grades through there. Moving up into Trenggalek, we've got an extensive program across 3 areas targeting the old Anglo and ARC joint venture partnership that occurred up there. We're picking their top 3 prospect areas, and we're going to drill and prove those. We're also doing a little bit of more shallow gold epithermal drilling on top of one of those deeper porphyry areas in Trenggalek. Up at Woyla, we're doing some confirmation drilling of yet some more newfound veins. And then in Trenggalek is probably the biggest program all up, and we're looking to drill 4 prospect areas up there, 3 of which have already been drilled, but doing some extensions to the north-south, and then one particularly new and exciting area as well. And we hope with the specific intention of adding a sizable amount of ounces to the JORC that we already hold up there.
That's Mr. Shane Manier, the CEO and Managing Director of Far East Gold Limited. Mr. Shane, just before I let you go, any final word for the investors and our viewers today?
Very exciting times ahead for Far East Gold. We really appreciate the support that the investors are giving us, and the market is just looking sensational for the outlook for copper and gold at the moment. We're certainly not relying on that. We're relying on our drill tip results to do the talking for us, and our capabilities, especially in Indonesia with those potential tier 1s that we hold over there. So exciting times ahead, and thank you for all of our current stakeholders, shareholders and supporters for all the ongoing interest and support.
You have covered a lot for our viewers. That's all for today's segment. Stay tuned for more industry updates and inspiring conversations. In case you have missed any bit of this interview, you can catch the full interview on our YouTube channel at Kalkine Media and hear what Mr. Shane has to say about Far East Gold Limited's recent advancements. Do like, share and subscribe to our channel. This is Monica signing off now. Hello and welcome to yet another episode of the Executive Corner Expert Talks presented by Kalkine Media. Today we are joined by Nicholas Medley, the chairman of Findi Limited. The ticker code is FND, a company driving fintech innovation in India. With a vast network of ATMs and cutting-edge digital payment solutions, Findi is transforming financial access across the country. Nicholas, an expert in investment banking and mergers and acquisitions, bring deep industry insights as we discuss Findi's growth, key milestones, and the future of fintech in India. Nicholas, great to have you here.
Thank you very much.
To start, could you give us a brief overview of Findi's vision and the role it plays in India's financial ecosystem?
Sure. Findi is targeting to really serve the underbanked and unbanked across India, which is approximately more than 800 million of the population. We currently have 200,000 Findi Pay merchant locations with the recent acquisition of Bankit in every state and territory. And we also have in excess of 15,000 ATMs across both white label and brown label, again, in every state and territory. So we're really there to serve the emerging middle class across India over the next decade and beyond.
That's fascinating. And speaking of growth, congratulations on the latest developments with State Bank of India and Union Bank of India. What key factors have helped Findi's Indian subsidiary secure these major opportunities?
It really comes down to our position in the market. We're the lowest cost operator in India for ATM services. We're also the best performer in the market. So as a result of that, State Bank of India chose to upgrade our existing contract with them by more than 54%, which it takes us now to over 6,500 ATMs with them over the next 10 years. And then Union Bank of India just last month announced us as a successful winner of another 900 ATMs out of their 3,000 ATM tender. So fantastic position for us.
With these new partnerships in place, Findi is clearly strengthening its market presence. How will the deployment of these ATMs impact your broader strategy in India?
What it does for us, it just increases margins, especially the SBI contract. It's actually our highest margin contract that we hold. So a 54% increase on that will help drive margins for 26 and beyond. And it gives us further penetration in more rural locations as well, which is very important for our Findi Pay and digital strategy moving forward.
That's a significant move. And from a financial perspective, what impact do you see these developments having on Findi's overall performance?
As of recently of last week, we put updated estimates for 2026, just in terms of percentage terms. As a result of these new contracts, we'll see 2026 drive between 140 and 180% revenue growth compared to FY25. And that will obviously filter down to EBITDA and a very strong NPAT performance for FY26.
Another big milestone for Findi is the regulatory approval for acquiring Tata Communications Payment Solutions Limited. Can you share more about this acquisition and how it fits into the white label ATM strategy?
Yeah, well, it's the last piece of the puzzle that we needed for our white label ATM strategy. With that RBI approval, we now have a white label license and we are settling on that transaction on the 28th of February, so just next week. And that is the last piece for us to be able to roll out our own ATMs as well as have our own switch and enable to drive further margin increase across our digital business as well. So we're very happy that it ticks all of those boxes for us now.
That's exciting. And alongside this, Findi is also set to acquire Bank IT Services Private Limited. How does this acquisition align with your broader growth strategy?
Yeah, so this really drives our digital side of the business. So as I mentioned before, the 200,000 digital merchant locations we'll have on the conclusion of this transaction, 130,000 of those, or more than that, come from this acquisition. So it really accelerates our digital strategy by 2 to 3 years and will mean that our digital revenue as a percentage of total revenue will be almost 30% now across the group, which is fantastic. One of the key KPIs for our upcoming Indian IPO.
Clearly, Findi is making bold moves in the fintech space. Looking ahead, what excites you the most about the future of Findi and India's fintech industry?
Well, for us, it's the appointment of Rothschild's Investment Bank as our corporate advisor for the listing of our business in India on the National Stock Exchange at the second half of 2026. So it's all steam ahead on that process, so where we can drive a significant re-rate on the Australian share price and repatriate a material amount of capital at the same time.
On the topic of future plans, could you provide an update on Findi India's IPO on the Bombay Stock Exchange? What does this mean for the ASX listing and the shareholders?
Well, for us, it basically means we'll be able to drive, hopefully close the arbitrage between the multiple that we're trading at in Australia, which is around 6 to 7 times EBITDA, versus where our listed peers in India are trading, which is in the order of 20 to 25 times EBITDA. So we'll be looking to close that arbitrage and drive significant future value for our Australian shareholders.
And in your latest market update, you mentioned expecting to double revenue by financial year 26. Will this be driven organically, through acquisitions, or a combination of both?
It's a combination of both. About 20 to 30% of the business is organic, of that growth is organic, and the rest of that is from the 2 acquisitions we've spoken about, Bankit as well as the Tata Payments white label business that we settled on the 28th of February.
This has been an insightful conversation, Nicholas, with Findi securing major deals with major public sector banks like State Bank of India and Union Bank of India, expanding its white label ATM network through the Tata Communications Payment Solutions acquisition, and preparing for the IPO of Findi India. It's clear the company is making bold strides in the fintech space. Before we wrap up, is there any final message you would like to share, perhaps on what investors, customers, or stakeholders can look forward from Findi in the near future?
For us, it's really just continuing to deliver on our strategy for serving the underbanked in India. And from an Australian shareholder or Australian investor perspective, Findi Limited is the only way on the ASX to get direct exposure to the great opportunity that India holds for the world economy.
Thank you, Nicholas, for sharing your time and insights today. That's Mr. Nicholas Smedley, the chairman of Findi Limited. In case you have missed any bit of this interview, you can certainly catch the full interview on our YouTube channel at Kalkine Media and hear what he has to say about Findi Limited recent advancements. Do like, share and subscribe the channel for regular market updates, recent announcements and exclusive interviews. This is Monica signing off now. Hello and welcome to yet another episode of the Executive Corner Expert Talks presented by Kalkine Media. Today we are joined by Nicholas Medley, the chairman of Findi Limited. The ticker code is FND, a company driving fintech innovation in India. With a vast network of ATMs and cutting-edge digital payment solutions, Findi is transforming financial access across the country. Nicholas, an expert in investment banking and mergers and acquisitions, bring deep industry insights as we discuss Findi's growth, key milestones, and the future of fintech in India. Nicholas, great to have you here.
Thank you very much.
To start, could you give us a brief overview of Findi's vision and the role it plays in India's financial ecosystem?
Sure. Findi is targeting to really serve the underbanked and unbanked across India, which is approximately more than 800 million of the population. We currently have 200,000 FindiPay merchant locations with the recent acquisition of Bankit in every state and territory. And we also have in excess of 15,000 ATMs across both white label and brown label, again, in every state and territory. So we're really there to serve the emerging middle class across India over the next decade and beyond.
That's fascinating. And speaking of growth, congratulations on the latest developments with State Bank of India and Union Bank of India. What key factors have helped Findi's Indian subsidiary secure these major opportunities?
It really comes down to our position in the market. We're the lowest cost operator in India for ATM services. We're also the best performer in the market. So as a result of that, State Bank of India chose to upgrade our existing contract with them by more than 54%, which it takes us now to over 6,500 ATMs with them over the next 10 years. And then Union Bank of India just last month announced us as a successful winner of another 900 ATMs out of their 3,000 ATM tender. So fantastic position for us.
With these new partnerships in place, Findi is clearly strengthening its market presence. How will the deployment of these ATMs impact your broader strategy in India?
What it does for us, it just increases margins, especially the SBI contract. It's actually our highest margin contract that we hold, so a 54% increase on that will help drive margins for 26 and beyond. And it gives us further penetration in more rural locations as well, which is very important for our FindiPay and digital strategy moving forward.
That's a significant move. And from a financial perspective, what impact do you see these developments having on Findi's overall performance?
As of recently, last week, we put updated estimates for 2026, just in terms of percentage terms. As a result of these new contracts, we'll see 2026 drive between 140 and 180% revenue growth compared to FY25. And that will obviously filter down to EBITDA and a very strong NPAT performance for FY26.
Another big milestone for Findi is the regulatory approval for acquiring Tata Communications Payment Solutions Limited. Can you share more about this acquisition and how it fits into the white label ATM strategy?
Yeah, well, it's the last piece of the puzzle that we needed for our white label ATM strategy. With that RBI approval, we now have a white label license, and we are settling on that transaction on the 28th of February, so just next week. And that is the last piece for us to be able to roll out our own ATMs, as well as have our own switch and enable to drive further margin increase across our digital business as well. So we're very happy that it ticks all of those boxes for us now.
That's exciting. And alongside this, Findi is also set to acquire Bank IT Services Private Limited. How does this acquisition align with your broader growth strategy?
Yeah, so this really drives our digital side of the business. So as I mentioned before, the 200,000 digital merchant locations we'll have on the conclusion of this transaction, 130,000 of those, or more than that, come from this acquisition. So it really accelerates our digital strategy by 2 to 3 years, and will mean that our digital revenue as a percentage of total revenue will be almost 30% now across the group, which is fantastic. One of the key KPIs for our upcoming Indian IPO.
Clearly, Findi is making bold moves in the fintech space. Looking ahead, what excites you the most about the future of Findi and India's fintech industry?
Well, for us, it's the appointment of Rothschild's Investment Bank as our corporate advisor for the listing of our business in India on the National Stock Exchange at the second half of 2026. So it's all steam ahead on that process. It's where we can drive a significant re-rate on the Australian share price and repatriate a material amount of capital at the same time.
On the topic of future plans, could you provide an update on Findi India's IPO on the Bombay Stock Exchange? What does this mean for the ASX listing and the shareholders?
Well, for us, it basically means we'll be able to drive, hopefully close the arbitrage between the multiple that we're trading at in Australia, which is around 6 to 7 times EBITDA, versus where our listed peers in India are trading, which is in the order of 20 to 25 times EBITDA. So we'll be looking to close that arbitrage and drive significant future value for our Australian shareholders.
And in your latest market update, you mentioned expecting to double revenue by financial year 26. Will this be driven organically, through acquisitions, or a combination of both?
It's a combination of both. About 20 to 30% of the business is organic, of that growth is organic, and the rest of that is from the 2 acquisitions we've spoken about, Bankit as well as the Tata Payments white label business that we settle on the 28th of February.
This has been an insightful conversation, Nicholas, with Findi securing major deals with major public sector banks like State Bank of India and Union Bank of India, expanding its white label ATM network through the Tata Communications Payment Solutions acquisition, and preparing for the IPO of Findi India. It's clear the company is making bold strides in the fintech space. Before we wrap up, is there any final message you would like to share, perhaps on what investors, customers, or stakeholders can look forward from Findi in the near future?
For us, it's really just continuing to deliver on our strategy for serving the underbanked in India. And from an Australian shareholder or Australian investor perspective, Findi Limited is the only way on the ASX to get direct exposure to the great opportunity that India holds for the world economy.
Thank you, Nicholas, for sharing your time and insights today. That's Mr. Nicholas Smedley, the chairman of Findi Limited. In case you have missed any bit of this interview, you can certainly catch the full interview on our YouTube channel at Kalkine Media and hear what he has to say about Findi Limited recent advancements. Do like, share and subscribe the channel for regular market updates, recent announcements and exclusive interviews. This is Monica signing off now.